or not, we've all been expecting a recession. It hasn't come yet. There are a lot of reasons why it may be pushed off until the back half of this year or maybe into next year. And you do have new tools out there. I think one of the problems is that while we have QE, we're also running QT now. And that's an experiment that we haven't lived through before. I mean, let's face it, we are living through history. And we don't know how it will be written, but we shut down the world for some period over the last 3 years, and now the last of it is just starting to emerge and return to normal, and we've got to adjust for all of that. It just seems very aspirational to me that it's all going to end in a soft landing, we'll reset and move on.
Nothing about this is normal, that's for sure. But Michael at JP Morgan Asset Management is going to be sticking with us, I'm pleased to say. Going through to retail sales in about 20 minutes' time. I think we can squeeze in some sport. Now, Bob, what's going on? Your beloved Liverpool. We can talk about the Eagles in a moment, because that's a better story. But your beloved Liverpool.
I can take it this year. Last year, with the bond bear market, if Liverpool had gone off the rails, that would have been a disaster. Right now, there is a bond bull market. There has been some reset. Money's coming into the market. I can live with some restructuring of Liverpool. I like what Klopp did in the FA Cup. He played the younger players. They're hungrier. They were livelier.
Can I ask you, I'm the amateur here. Does the World Cup screw this up? I mean, the Tots are playing in a cloud. Liverpool's subpar, to say the least. I mean, I get Arsenal there in the World Cup too. But the World Cup, as you say, in the middle of the season, has that...
It's disrupted. It's disrupted me. I mean, I was just overwhelmed by the amount of football.
Salah?
So I thought it might disrupt the teams with momentum. In the Premier League, that was Arsenal. In Italy, that was Napoli. We've restarted the season.
Italy
They've
was
got
in
momentum.
the World Cup?
No, I just thought...
Adopt it. I have launched an appeal to member states to adopt it, or at least to put it into practice, even before the legal transposition, because we are in a period of inflation, and it is clear that those on the lower end of the wage scala, they need this support from fair wages, because what we have to prevent is that this inflation provokes further working or in-work poverty. And therefore it's important now to adapt minimum wages to the evolution of prices.
So you've been very clear to the member states. You've told them what you're expecting them to do. But I also circle back to what we've discussed before. Is the European Union essentially, in terms of policy making, just frozen at this stage, given the upcoming elections? What's the mood in Brussels?
No, I don't think that the European Union is frozen. We still have more than a year to go for this mandate in the Commission, and we cannot just say, well, we cannot say, well, there is an upcoming election, we just stop working, because the world continues to turn around, and things are, as I said, going very fast. We are in a crisis. We have done a lot of things, that has been said by the President, on energy. We have to go on. We have to accelerate the transition, which is our plan on Repower EU. And we have also to take care of the workers, the companies, protect the companies which have suffered a lot from this rocketing energy prices. So I'm absolutely confident that the Union as such and the Commission is still in a very active mood.
Speaking of workers and protecting their rights, obviously being in Davos is also a moment for having essentially catch-ups with different people. And I understand that you also met the CEO of Uber. Could you tell us what happened there? What concerns do you have right now in Europe when it comes to Uber?
Well, it's true that the CEO of Uber asked me to have a meeting, and we had this meeting because I always listen and do not shy away from exchange of views. We had a very positive meeting in the sense that we had this exchange of views. We obviously do not agree on everything. I informed him about the process also in the Parliament and about the Commission proposal, and that I stick absolutely to the adoption of a proposal which is as close as possible to the Commission proposal. So that's what is my view. And I took also note of some improvements which seem to have been achieved by Uber in some member states. Well, my conclusion is if this is done, fine. Probably it has been done because there is, through this proposal, also some pressure to review some working conditions on the platforms.
Let's see how that will evolve. Thank you so much for your time today, Commissioner. It was a pleasure speaking with you.
Thank you very much.
That's it from us here for now, but we'll be back shortly. For the time being, though, I'll hand it to our colleagues stateside.
Lots of Bloomberg, lots of Bloomberg, lots of Bloomberg, lots of Bloomberg, lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
You will shed light on
Market data connection lost. Market data connection re-established.
I moved the yen market in real time.
That was your fault.
No, it was Lord O'Neill. Trust me, doing it. But that was a long time ago. and 260% debt. They have 8% of France's debt. 8%. The
Wow.
Japanese own 8% of France's debt.
And the BOJ owns a significant amount of the JGB market now. They've thrown everything
we
at
got
this
the
in
right
the last
guest to
10
talk
years.
about this as well. Bob Michael with just a massive history.
Waiting for us to shut up.
Here with you. No, but I think this sets it up nicely. The dysfunction here of the flows in the capital ownership of debt is tangible, and you see it with the Japanese and other percentage of debt. Do you have an inherent fear within your strategy when you see ratios like 260% or where another nation owns 8% of France's debt?
I've got so many thoughts on the Bank of Japan. One, I think they missed an opportunity. I would have done something today and keep the process going of get to something that looks normal while the rest of the world is doing it. We talk about the top end of the band is 0.5%. The target's actually 0, and official rates are actually minus 10 basis points. So there's a lot of room to get things looking somewhat normal while you're printing 4% inflation, and then start the process of transitioning the bond market out of the BOJ hands into public hands, into private investor hands. Get that process going. Now, as I'm saying that, I also get concerned about what that means for assets in the rest of the world, because many of us in the markets for a long time have known that Japan is the mother of the carry trade, that Japan finances carry trades in the U.S. market,
Explain what
in
a
the
carry
European
trade
market.
is. That's where Liverpool takes someone from the tots and borrows them. I get that. That's jargon. What is a carry trade?
A carry trade is to use the very low cost of funding in Japan and then take your capital at your cost of funding and then send it to somebody like me to invest in the U.S. bond market, in the corporate bond market, at yields of 4 or 5% or higher. So you're enjoying a much higher yield than you would have by staying in the domestic market.
So how do you think these changes that we're seeing in the last month and potentially again in March will change how you do business and ultimately on the behalf of other people who want to invest abroad from Japan?
Well, I think we're already starting to see some signs of repatriation. We're starting to see some clients that have had money in the U.S. market start to take it back and put it back into the Japan bond market. And when you look at U.S. assets hedged back to yen, you're actually coming out at a yield that's significantly lower than where the JGB market is. So a lot of it is the dynamic of the inverted yield curve in the U.S. So that's pretty punitive. I think the Bank of Japan has to be careful how they unwind all these things so they don't create this frenzy of repatriation. But as I said, I think they can be consistent without creating this sort of frenzy.
There is a part of me that thinks, great, price discovery returns. We can start calling these places markets again. Then I look at the size of the balance sheets and I just think, well, there's a real stock effect here that's going to exist for a long, long time. But there's two ways of looking at it, isn't there? This is the final anchor around the neck of global bond yields, about to be released by Japan, and that should have some real consequences. The other way of looking at it is still we have these massive balance sheets of the ECB, the Federal Reserve, the BOJ. They're going to be around for a long time. Which one is it?
I think it's both of those. This is the conversation I'm having a lot with our clients because we think we have put in a secular low in bond yields and the end of the secular free-for-all in costless capital. And we're in a trend that will return the cost of funding to something that looks historically more normal, central bank rates, bond market rates to something that looks more normal. But it doesn't happen all at once. You don't go from 0 to a
Okay, but over that time continuum, what do you do with duration? Are you in 2 months? Are you on 3-month LIBOR?
We'll get to that.
Tell him, Dimon, we got to be in 3-month LIBOR?
Tom, it took 27 years to get the Fed funds rate from 20% to 0%.
So how long is that
and you
time
had
back?
a series of lower lows and lower highs. I think we're seeing the mirror image of that. We're going to have a series of higher highs and higher lows, but every 300 to 500 basis point shift in the cost of funding through central bank rates will have an impact. And then they'll have to come back and take some of that back and then they'll start up again.
I've got 2 minutes on the clock. I've got to fit this in. You and I have talked about this before. This is a huge thing that I think you're really at the forefront of. You're basically saying that it's going to take several cycles to basically unwind what we've seen over the last several decades. Can you tell me what's changed in the secular story of the last 30 years and why you're projecting that out the next several cycles? What's changed? What's that powerful story that's going to unwind all of this?
Well, there's one certainly in the developed markets. I remember after the financial crisis, we were all sitting there going, oh my God, what do we do with all this housing stock? The baby boomers are rolling over into retirement, and the millennials are too young. The 91 births at the time were what? They were 17 years old. Well, guess what? 13, 14 years has just passed. The 91 births are now 32 years old.
Yeah, still living with me.
But well, they're hitting their peak of earning, spending, and saving, much like the baby boomers did in the 1980s. And suddenly, all the housing we didn't invest in after the financial crisis, we need it back again. So there are some real capital expenditure plans out there, sustainable investment, defense, infrastructure, healthcare, education. Those are things that a new emerging population of millennials, the XYZ, whatever you want to call it, they're going to be willing to spend and invest in.
But Michael, this is awesome. From JP
I was
Morgan.
trying to get into
Fantastic.
football. It was too smart. I couldn't get
And
into
you've got
the
seconds
football
left.
question.
Maybe next.
Okay.
Around retail sales, just to really disrupt the conversation. Veronica Clark on the other side of
He's gonna
City
get in the way with us.
is going to be joining us. Retail sales data moments away.
Important.
Reaction from Bob Michael at JP Morgan. Up next.
for the holidays in the bank, to not to have to pay for the rates for some time, and also to and that in this they can pay in advance their credits on using this money, or to use them for other reasons. And
this is elongate the pain. I mean, you've got consumers that can't meet their loan commitments at this point, and we've spoken about zombie companies for a long time. Are we creating zombie consumers by extending out some of those maturities or giving them holidays?
It's not like that. It is just because it's not on their situation as the consumers and as the people who can borrow the money. It is just to help to survive these difficult times. And of course, the situation on the rate interest and also the cost of the borrowing and the money is more stable now. Because in autumn, yes, we have faced a difficult situation when the cost of the capital and the rates increased quite high to 9% on the secondary market.
people pulled back in December all across the board in terms of spending.
Mike McKee, thank you, sir. Just to round things up for you, I'll say it again. Downside surprise on retail sales, the wrong kind, the right kind of downside surprise on PPI. For a moment, equity futures pop. They fade now, up just 0.2%, basically where they were going into the print. Yields still lower, Tom, on a 10-year by 11 basis points. 343.54. And just to give you a feel of things at the front end of the curve, a rally at the front end again on a 2-year. We're down 7 or 8 basis points to about 413 on a 2-year. So yield, just the whole curve, Tom. Just pulling back, pulling lower.
We're advantaged to have Bob Michael with us with JP Morgan Asset Management before we move on to economics. Bob, help us with what the bond dynamics right now signal about the parlor game of 25 beeps or 50 beeps, and even more foolish, something you and I never saw, where the street's gaming out rate cuts out X amount of months. What part of your bond world do you look at to gauge 25 or 50 beeps?
So as Mike was going through the data, in my mind, I was also replaying a lot of the inflation data, which has stopped printing at 0.5, 0.6, 0.7 per month, and is now in the 0.2, 0.3, 0.4. And the words that come to mind are long and variable, cumulative, and lagged. The impact of a year of very aggressive central bank tightening and quantitative tightening are starting to bite the economy, and they're biting hard. So things are slowing down. I think the Fed has good reason to raise rates 25 basis points at the start of February and pause. If, for whatever reason, they want to do another 25 in March as insurance, but it feels like we're a meeting or two away for a pause, then let's wait a quarter or two and see what the impact of all this tightening has done. I think it's a signal to bond investors who have been trying to buy backups. You're not going to get them, certainly not over the next couple months.
Does that apply to credit too, and not just sovereigns? Is that the whole of fixed income?
So where we're seeing money come into the bond market, it's going into aggregate bond funds. Investors are making the decision, get me into bonds, I want a general bond fund, or they're going into a general municipal bond fund. So the investment grade space is going to appreciate. The securitized market, the mortgage market, the investment grade corporate market. The one thing I did get wrong, which you've been very polite about, is the high yield market. It's been rallying like crazy, because recession still looks in the distance, although this data says it's not quite as far out as maybe.
Let's finish on that. With that in mind, how much weight would you put on the recent survey data, which is indicating that things are slowing down pretty quickly? How much weight would you put on that?
Well, businesses will respond to that, and they'll start to invest less in their business and start to save. So it becomes self-fulfilling. All of these things, to me, suggest that recession is actually on the horizon.
Bob, this has been great. Equity futures right now up 0.2%. If recession is on the horizon, this credit market is not selling off into it. It's rallying into it over the last couple of weeks. Your 10-year yield this morning down 11 or 12 basis points, Tom, to 343. On a 2-year, down 7 basis points to 413.
These are movements. And again, as you say, it's about the hard data, and I believe this is hard data. I know it gets revised, and I don't have the data up here. Again, there it is. There's the revisions. For example, the control group, I don't have a revision on it yet, but Mike McKee was telling us the revisions were a less of a retail sales than the cautious numbers that we saw in the previous month, and that follows on forward today. Let's get the economic look, and John, I want you to help me out here. Veronica Clark can frame for us the Citigroup conundrum, which, John, I believe, as Mr. Hollenhorst discusses, 50 or 25 basis points. Do you want to bring Ms. Clark in here right now so we can decide and make some news here?
They had a wonderful
Citigroup call.
A wonderful 2022. Let's talk about 23. Veronica, thank you for being with us. You've been leaning towards this idea that we get another 50 basis point move from this Federal Reserve. How challenged do you think that view is now with the incoming information?
Yeah, I mean, it was already a close call, I think, even going back a week ago when we got CPI, and certainly what we've heard from Fed ever since. I do still think, though, that the market could be underappreciating, the chance that the Fed would opt to go 50. I think the market is misinterpreting, the Fed's commitment to getting rates above 5%, certainly.
Veronica, we're all slaves to the data. Every Fed and every textbook and every history book is data dependent. You guys got out front of this, and the data has has backed up the Citigroup call. What is the data that matters to you, less to February 1 and much more to look on to what we see May 3rd or June 14?
Yeah, I mean, I think the most important data is still inflation data, and I would lump along with that, wage data. Maybe we've seen some signs of wage growth slowing, but you still have such a tight labor market that I wouldn't necessarily expect wages slowing back to something consistent with 2% inflation. And the most important inflation data, I think, should be the Fed's preferred core PCE measure. And some of the details of PPI that we got this morning will matter for that. We are still expecting, stronger core PCE than what the Fed even has, certainly than what the market's expecting.
Are you going to reaffirm right now 50 basis points? Is that what I'm hearing?
Yeah, I think that chance is still underappreciated. We do have some important Fed speakers still to hear from, and the chance is lower, certainly. But we also wouldn't necessarily adjust how high we think rates will end up going, even if it's not a 50 in February. Would just expect that the Fed's hiking for longer.
Did she make news there?
No, stuck to the script.
I'm trying.
We're not going to cause any trouble over at Citi,
I'm
are we?
trying.
Veronica, that was great. Thank you. Veronica Clark there of Citi Global Markets, alongside Andrew Hollenhorst making the calls there over at Citi on the Federal Reserve. Final word with Bob. Bob, what do you make of that? We go another 50? Terminal rate's going to be higher than people think it is?
I don't think there's anything in the data that we've seen over the last month to get the Fed to go 50. And I think they've opened the door to continuing to dial down the pace and rate of hikes. So I think 25 is pretty much in the books for
This
Fed.
is really important, and this goes back to Bowder and the work at Citigroup, the fabulous work at Citigroup versus what we see from Kasman and Feroli. Michael Feroli's call on U.S. potential GDP X number of years ago is how you get to 25 beeps. Is there's just a dampening there that I hear out of JP Morgan that I don't hear from other shop.
You're going to cause trouble between the investment bank and the asset management division over at JP Morgan. Is that the goal this morning?
I know I'm crossing the Chinese wall or it's the Japanese wall. I don't know.
I think Feroli is a brilliant researcher and economist. He is my go-to read.
There we go. That's nice.
His potential GDP call, which was sub 2% of the time, is how you get to this, to your point of the great moderation ending.
Yeah. Exactly.
Did I do okay there?
You did great.
Which wall did I climb over,
Mike? You tried to cause trouble at Citi.
I am.
You think Citi's going to come on and change the call before they've published?
JP Morgan, who's next?
And then get Bob to fall out with the investment bank.
Davos? They thought I'd cause trouble.
We had Tom locked down behind the Chinese wall.
Which wall did I just climb over, Mike?
In the next
You're
hour.
in lockdown again.
In the next hour, Jay Poloski of TPW Advisory. You've been waiting to catch up with Jay. He's going to join us in the next 60 minutes, yeah. Priya Misra of TV.
I have him or you have him?
I've got him.
Oh,
Aaron
you've
Brown
got
of
him.
PIMCO,
Okay.
and I'm going to drag Bob Michael with me as well, just to round things out for the next hour on Bloomberg TV. What a morning already, if you're just tuning in. We're going to talk football.
Can you explain to me
We're going to talk
how
retail
Liverpool
sales,
plays in
inflation,
the Premier
job
League,
cuts
and then
at
8 days
Microsoft.
later they play the FA Cup? Do they play differently in the FA Cup than Premier League?
If you've got a deep squad and they've got tons of depth, less depth than, say, Manchester City, but they've got enough, then you play different players. You play the younger players, to Bob's point.
Yeah.
You play the hungrier, younger
Who's
players.
Who's the guy that defense that's so good from Belgium?
Virgil van Dijk.
Virgil van Dijk.
You try and rest players like that. Although he's not had a great season. He's not had a great season at all.
World Cup disease.
You reckon it's that? World Cup disease?
Injuries.
World Cup disease. Is that what you're going to get?
Yeah, they fought. They were in the World Cup and they're all exhausted. Mike and I saw this in hockey.
I love the way Tom sounds like he knows what he's talking about.
Mike, that's the whole show, isn't it?
Mike, don't give it away.
I'm working overtime. I've got to go. From New York, this is Bloomberg. Thank you, Bob. Appreciate it, sir.
Thank you, Bob. Did you go?
Keeping you up to date with news from around the world with the first word. I'm Lisa Mateo. House Speaker Kevin McCarthy is calling on Democrats to
for all of us. And we
Scott Minor passing away.
Our regards to the family and his husband and everyone else. But great to have you on.
Thank you.
I don't know whether the latest inflation number informs the same opinion with you, but when we talked to you previously, that number was not out. So a bigger than expected drop in PPI.
Indeed, yes. It actually adds to our narrative, I think. So, we, as you mentioned, are predicting the recession to start mid-year. And it's because we think the Fed is continuing to push on the QT accelerator and continuing to drive down inflation, as well as labor costs and all the other elements that lead into that story. We're a little ahead of our market peers in terms of our viewpoint. Our market peers are sort of anticipating a recession maybe at the end of 2023, maybe into 2024. But we think that this quantitative tightening, which is both a combination of rate hikes, which we anticipate the Fed will continue. Certainly the market's priced in 25 basis point rate hikes this year still. And of course, the addition of the quantitative tightening coming from the reduction of the balance sheet will also help to drive down prices further. So all this is sort of feeding into our narrative for this year.
And the depth of the recession, how's it going to feel? Is it going to feel soft? Is it going to feel hard? Is it going to be short-lived? Is the market already discounted a mild recession?
So the market's pricing in a mild recession, and some market participants are still anticipating that we actually avoid recession entirely, sort of the Goldilocks experience. But that's not our narrative. We don't think that that's the place that we end up. And the more quantitative tightening that we see, the more we see the risk of a more prolonged and deeper recession. Historically, recessions last about a year. If you exclude the pandemic recession and you exclude the global financial crisis, and that's a normal business cycle. And so we could see that. In addition, we think that the recession, normally, right where we are right now, we would see the recession being fairly mild. But there's the risk that, particularly with the reduction of the balance sheet and the lack of liquidity that the Fed is introducing, that recession story is going to get worse.
Justify what the Fed is doing, or do you think they could overshoot?
Oh, I think they definitely could overshoot, and I'm, expecting them to. That seems to be their history, and
that's part of the calculus that they overshoot.
Indeed, it is. Yes. And I'm really looking at the quantitative tightening, the balance sheet reduction, which a lot of investors aren't really paying much attention to. And
they're just a quarter point, half point. They're not talking about the effects of the QT, which is sort of in the background, but going on every day. Yeah.
So what do you do as a result? Do you wait? Like, this is not a time to buy, even though prices have come down so much, because you think there's more pain to come?
So I think this is a time to reposition portfolios. As a longtime fixed income manager, there's one thing that Fed has done for us, and they put the income back in fixed income. Yeah. So right now, there's a very good time to be in investment grade fixed income relative to equities. Equities haven't repriced yet, and as we go through a recessionary timeline, we will see that. But certainly right now, the fixed income story is a good one. I would be avoiding the lowest credit quality, high yield, and or bank loans at this point in time, because we haven't seen the default series start. We haven't seen that cycle begin. And as we go through a recession, even a shallow one, defaults will rise, and the risks will get much worse in the lower rated credits.
Where was I going to go next? In terms of the notion that this is some type of systemic wage price inflation, that's why the Fed is, and we talked about it yesterday, that's why
about
they're so committed.
overinvestment in private equity, and there's some real debate about this. Lisa Abramowitz at the meetings in Davos drove this conversation forward this morning on private equity away from the markets, the shadows, Lisa, not the shadows descending across Davos now as the sun. I think the sun falls. I think it falls down to France or Italy. I can't remember which. But the answer is the shadows of shadow banking are front and center.
Yeah, the shadows, if you look at some places, they're not so shadowy, although I was just on a panel with the head of the French Central Bank, and he said that he is very concerned about the shadow banking, the non-banking financial markets. So basically to that point. However, I did speak with the former co-chair of Bain Capital, Steve Pagliuca. He just actually retired yesterday, although he hates the R word, stepping down, but he's still going to be an advisor. And I asked him whether he thinks that we've already seen peak private equity, whether we're in for some sort of significant downturn. Take a listen to what he had to say.
If you look at private equity returns, most firms are shooting for 18-20%. The private equity model works. It puts capital to work with experts that really help drive these companies, and certainly Bain Capital. I think we're only still in the early innings, and it has another 20 to 50 years to run because it's a great business model.
And you can see it being 18 to 20% in that period of time as well.
Absolutely. It's consistently done that for 40 years now.
What about in China? What about some of these other areas that a lot of people are pushing into and seeing a lot of value? Is Bain as well?
Well, we've had a fantastic Asian presence for a long time now. We were one of the first people into Japan, for example. Japan's a fantastic market because they are now embracing capitalism. I met with the Prime Minister about a month ago. He's pushing that. They've got to rejuvenate the economy. They believe they got to have more free markets and more capitalism. And we've been fortunate because the Japanese really respect a company that's trying to build value and sticks with Japan. So we never went in and out. We went to Asia. We stayed there. We built a large presence. They love the value-added approach.
You do own the Boston Celtics. You are interested in the Chelsea football team. Didn't win that bid. Are you looking to push further into the football arena?
Our group is looking at many teams. The prices have gone up very high, and we want to buy a great club, but we want to stay disciplined so we can invest in the club over the future. And so my fear is some of these prices are now getting so high that there might be disinvestment, and I want to have a great club, and I want the club to be able to win, and you got to be competitive. So you have to budget putting money in to make it competitive.
That was Steve Pagliuca of Bain Capital. And Tom, I'm sure that you're interested in the football discussion, but honestly, to answer your question, there is a lot of optimism, not so shadowy necessarily, among a lot of private equity executives who are here.
You know, what's really interesting, and this goes to your panel, Lisa, you had Michael Maybach on it, the president, the chief executive officer of MasterCard International. They have the thermostat. They have the thermometer of every... Folks, the name of the panel, by the way, was Bramo Does Davos. And the answer is there's a thermometer to it. There's a pulse to it. What's the Davos thermometer this year?
Well, I would say that soft and shallow. Shallow and short would be basically the concept, the consensus right now around what people are thinking about the recession or the lack thereof. My first question on the panel was, are we going to get into a recession? And the head of the French Central Bank said no, even though they're going to raise rates further and go above the neutral rate. And other people saying the same thing. Michael Maybach of MasterCard saying that the actual empirical data doesn't seem to show any sort of downturn from spending. On the flip side, there's this real tension here between this belief that you can raise rates substantially more and continue with the dynamism. And I know that the retail sales that we just got suggests that there is a bit of softening that hasn't been reflected in at least the tone that we're hearing from certainly central bankers here at this particular event.
Happy Valley is removed from reality. Mrs. Zelensky appeared to bring back reality. How is the leadership of Ukraine and Mrs. Zelensky greeted today?
A lot of people are trying to figure out how long it's going to take. I mean, very much there is a real question mark here of how long this is going to drag on and what the implications will be. That is definitely on the forefront. At the same time, very much the focus is on China and the reopening and the question mark around what that's going to do to inflation, what that's going to do to growth at a time of increasing tension. And so I think that underpinning every conversation is less sort of the tail risk that people see as possibly an escalation in the war that Russia has waged on Ukraine. That's less the conversation right now than China, the reopening, and what that means for inflation.
Yeah, I would say the headlines, Lisa, that we saw back in the West was very much the China reopening, the comments of the Chinese leadership meeting with Secretary Yellen here in the coming hours and days. What's amazing to me is how it endures across the Pacific Rim. I mean, you have the Filipino president, Mr. Marcos, attending as well. You've got others from the Pacific Rim. What is the feeling of Asia opening up? I think it's underplayed.
I would agree, and I think there's an incredible amount of optimism. And frankly, underplayed is the reliance of the West, in particular Germany, on China to reopen in order to get that economy going. And a lot of the optimism that we're hearing about the European economy, how much of that is hinged on China reopening? So, on one hand, we're talking about deglobalization,
Right.
we're talking about unhinging the West from the East, and in reality, it's not that at all when it comes to conversations or what people are depending on. And so that, I think, is a big theme.
And full disclosure, folks, I got an email in, and no, that was not Lisa's Gulfstream. A photograph at Zurich of all the fancy people's planes lined up at ZRH. Lisa, with that said, what does ESG look like at this year's Davos?
A lot of people are saying that they're going to recommit to it and that they're going to continue to finance it. I mean, it still is a big piece of it. I guess the question that I have is, what's the role of investing in fossil fuel companies at a time when you're trying to prioritize ESG? And I was speaking with the Norwegian Sovereign Wealth Fund manager, the CEO of the biggest sovereign wealth fund in the world today about that. And they have this mandate to diversify away from fossil fuels, but they're still investing in diversified oil companies, energy companies, and trying to affect change from the board level. So still there is this feeling that there is a place for an investment in the energy, in the oil complex, while also pushing for ESG types of mandates.
Did you get briefed on that by Mike Wirth of Chevron? Did he step in there to talk about future investment of hydrocarbons?
Yeah, I mean, they're big on this, right? Because this is ultimately their future. Again, I hear your skepticism. There is this feeling of how quick is it going to be, and what do you invest in the meantime at a time when you still need the fossil fuels to get going?
Lisa Ramrich, thank you so much. At the meetings of the World Economic Forum in Davos, her coverage will continue along with our team in the coming days as well. Our coverage is about retail sales that came in soft, with a soft revision as well. PPI a little bit quiescent, and I guess you're going to see in the coming 6 hours a nudge here towards a disinflation, maybe a nudge towards a adjustment by the Fed from 50 basis points down to 25. Thank you to Andrew Hollenhorst and Veronica Clark over at Citigroup. They, I'm sure, will have statements out overnight on their call of 50 basis points. Really appreciate her attendance today as well. I do want to point out, and this is important,
be more lenient, and it just leads to more serious crimes. You don't adhere to that.
It's the serious criminals that are committing the violent crimes.
Shoplifting?
So those are the ones. It's not people who are committing shoplifting that are going out.
But if 100 people go in and steal from stores,
I understand. They should be held accountable. That's not the suggestion that we're not holding them accountable. The issue is that it's violent criminals that need to be kept in without bail. Because right now, if you're wealthy enough, you can simply buy your way out. You're a wealthy drug dealer. You can buy your way out with bail.
Let me ask you this: you look at typically blue states. I'm thinking of California and cities like San Francisco, which are losing right now. You look at New York, which is having a tough time. I'm a New Yorker. I love New York. Chicago. All of these are also high tax states. And the question is, you layer on high taxes plus some of these genuine safety issues and the like, and all of the additional costs, by the way, that you need to spend to get all of these issues fixed. And you say to yourself, how's it going to get there?
Well, actually, we're running surpluses in the state of Illinois right now, and indeed,
how much of that is a function, though, of federal money that came to the state?
That's not the case. We actually made significant changes in our tax code, but what we didn't do is raise the individual income tax rate or the corporate income tax rate in the state. And so we're actually in decent position. We paid off a whole bunch of debt over the last 4 years since I took office. My predecessor, of course, ran up enormous amounts, $17 billion of a bill backlog in the state. We've paid it all off. And the reality is that we're in a much better fiscal situation in the state and at much better position to help businesses. It has not been a high-tax state. 4.95% individual income tax is not a high rate. We're not raising that rate. The rate has remained steady, and we're attracting jobs and business to the state.
Why did Kellogg come?
Well, as you know,
Hello, we're taking you away from U.S. programming for a special interview from the World Economic Forum here in Davos with the Prime Minister of Belgium, Alexander De Croo. Alexander De Croo, Prime Minister of Belgium, I have to say, is right here with me, so I'm going to get straight into this conversation. Prime Minister, it's great to see you outside of Brussels, I have to say. And of course, one of the main topics throughout this week so far has been on the US Inflation Reduction Act.
Yeah.
And you've said recently that the United States has been quite aggressive with its campaign to try and attract businesses stateside. Has the EU been too naive in dealing with the United States?
No, I think that in global, we as Europeans should be happy that the United States are moving to, I would say, our side of the table in the sense of incentivizing, investing in green energy, sustainable industry, and so on. So in total, we're happy with it. But if you look at it, there are a few elements on which we are concerned. The fact that it is very broad as a scope, and the question on what's the time frame. I mean, the last thing we want to end up with is with some kind of subsidy wars between the United States and Europe. But the real answer we should have as Europeans is have our own IRA. We will not call it that way. We will also make something which is not a copy. I mean, it should be built on the strengths that we have. But yeah, we should come up with our own scheme to incentivize greening of energy, greening of industry, and making sure that the industrial base in Europe can remain and can be competitive.
But the US already approved this legislation. They're just working out the details. And the EU is just starting this debate about what they should do.
Yeah,
is
but we
the
can
EU
be
playing
fast.
catch up here, Prime Minister?
No, we can be fast. And of course, if you look at certain technologies, I mean, the European Union has been leading in these technologies. If you look at offshore wind, I mean, we're leader in offshore wind, and especially Belgium has a lot of expertise in this. And if you look in hydrogen, we have a lot of the elements for that. So I don't have the feeling that Europe is having to catch up. I think that scheme is something that came quicker than we expected, but in global, we're happy with the fact that the United States is together with us pulling the world into the direction of cleaner energy and sustainable industry. That's a good thing. There are a few things, as I said, on the fact that it is being used in a very aggressive way in targeting our own industries, where, well, maybe we need to talk with each other a bit. But the main thing is, we need to come up with our own answer. And the good thing is that President of the European Commission, Ursula von der Leyen, yesterday here explained what she thinks that needs to look like.
She explained a little bit what she wants to do, but she has not been clear about where additional funding is going to come from. And I understand, Prime Minister, that you're not in favor of using state aid to support industries across Europe. So what is the answer? Is this the moment where the EU needs to tap the markets again?
Well, first of all, on state aid, why I believe state aid is not a good answer is that, you know, the common market, this is the most important thing in Europe. This is what has been driving this incredible growth that we've seen on the European continent. And that's the fact that, you know, there's a level playing field. Belgium is a small market, very open economy. Germany is a big market. If this becomes a race of who has the deepest pockets, we're all going to lose. And it would lead to a subsidy war with the United States. Not a good thing. So I think that the funding needs to be something which is centralized. And indeed, tapping again into the capital markets might be a good idea. And then we could give a role to, for example, the European Investment Bank in managing those financings.
The German finance minister was here earlier this week, and he said no, definitely no to raising new money. Do you think Germany understands that there's a question here of solidarity across the EU?
Well, I've heard a lot of no's on common funding in the past, and in the end we did it. So very often it's impossible until the moment you do it. Let's see how we can make something balanced. Because, I mean, on state aid, it's not that we are completely closed on that. I can understand that in certain moments it is necessary, but that also means that common funding is maybe something that countries need to be convinced of. You know, it reflects the reality. The reality, especially of energy-intensive industry, is one where the European borders actually are not that important. If you look at the chemical cluster in Antwerp, it's the second biggest after Houston. It's directly connected with the Netherlands, with the Ruhrgebiet in Germany. I mean, all those industries, the national borders, they don't exist anymore. So having common funded European projects for industries which in essence are European industries and not national industries, I think it makes a lot of sense.
So do you think you can convince your colleagues in Germany to say it, and the Netherlands to say yes to this? How are you going to do that?
We'll talk, and we've done it in the past. You know, with COVID, the response of common funding for the Recovery and Resilience Plan, it was also an impossibility, and then at some point we talked about it and we put the necessary safeguards. I understand that certain countries say, well, let's be prudent, let's have safeguards, but the answer should not be an answer where there is a destabilization within the European continent based on the level of debt that certain countries have. Because if you do it in that way, you will create instabilities in the European market. And in industries such as these ones, steel, chemistry and so on, these are European industries. I mean, if the German chemical plants don't function, it's a gigantic problem in Belgium, and equally so for the Netherlands, and equally so for France. So taking that European lens, it's something that maybe not all national ministers have from the start, but everyone can be convinced by good ideas.
Is that the topic then for the next European Council in early February? Are you going to try to convince your German and Dutch colleagues at that council meeting?
Well, first of all, it will be the European Commission which will have to expand on what Ursula von der Leyen has explained here. I think the first indications are good, but that summit of beginning of February will be an important moment. That topic, industrial policy, is one. Managing migration flows is a second topic, and is urgent as well, because some European countries, and Belgium is one of them, is under a tremendous pressure of migration and migration flows.
And another point of pressure is, of course, supporting Ukraine. Huge question mark right now about whether Germany is actually going to send tanks to Ukraine. The President of the European Council was saying this morning that he's supportive of that. Where do you stand on that argument?
Look, I'm not going to tell what other countries should do with their military equipment. What is important is that we continue to support Ukraine with everything which is available and which makes sense. From the Belgian side, we have done it with very specialized equipment, which we are good at, and Ukraine should win this war, and they can. Based on two things. First of all, of course, the support we provide them, the military equipment and the intelligence we provide them, but also what they stand for. I mean, we can be lucky with the fact that at this moment you have a president like Zelensky and a president of the United States like Joe Biden, who both understand how important it is to reach out.
Action are turning into the tailwinds of 23. Inflation rolling over, rates coming down, Fed going on hold, volatility declines, the dollar weakens, the rest of the world starts to pick up. Europe led the way with the halving of natural gas prices last fall. I wrote a piece that I titled "Things I Don't Understand," and one of them was that European natural gas prices had halved, but European assets didn't react at all. We've obviously seen, as you pointed out, that's changed. And more recently, and I think more importantly for the global economy and global markets, is the about-face that China has done on zero COVID. This is the single biggest, most important positive thing for the global economy one could ask for. It puts paid to the idea of a global recession. And I think it suggests that emerging markets are the place to be. We were very keen on Europe last year. We're now very keen on emerging markets, and in particular, very keen on Asia as a geographical region.
And for a lot of people who had recession baked in for this year, they're now pushing that back. They're pushing back on it big time in some places. Mike Gapon of B of A in the last 24 hours pushing back as well. He said the following: our outlook still includes a mild recession, but we now expect it to start later and come with lower peak unemployment too. The cause of the delayed downturn is consumer spending, which has been stronger than anticipated. Now, there might be a question mark on that with this retail sales data this morning. Priya, would you push back the recession call as well? When you and I last spoke, you were talking 550 on Fed funds, curve inversion all year, and recession in the second half of 23. Can you talk to me about the third point? Is it still recession in the second half of 23?
It's still recession. I look at real rates. So if you look at real rates across the curve, they're very high. I mean, we look at the 10-year that's gone from, above 4% to now below 350. It's all been a break-even led move. Those real rates are still very tight. To me, that
positive. I don't want to confuse viewer at home. I think the takeaway is, holy cow, people are all over the place. Some wild recession, some are very optimistic, and then you look at what United Airlines is saying and Kirby, and it's like it's going to be the best. The ramp is big, and then you look at JB Hunt today, the fourth largest trucker, and they're like, "Oh my God, we're missing on every line." And so this is this crazy world, which I come back and say, this is the inflection point where you have a lot of companies beginning to miss, but we don't mind, because that miss is going to translate into something good at the end of this year, because Jay Powell's listening to all this and saying, you know what, it's starting to work for me. I look at my retail sales, and they're a little bit weaker, and final demand a little bit weaker, and PPI a little bit weaker. So this is what I expected. I've always put more faith in Jay Powell than everyone else, to the point where my wife is listening to me and says, hey, listen, like the man love thing, like cut it out. I said, no, I think Jay's doing a great job. These numbers today and the outlook from Davos confirm so far that the plane is the runway's looking good and you don't have to foam it. You ever been on a foam runway?
Thankfully, no.
Holy cow. I mean, you start thinking, that's not like bathwater with the bubbles.
You've told us before when you were on that plane and the wheels didn't come down.
The wheels wouldn't open.
Yeah.
You bounce 4 times and then it ends and nobody talks about it because you're not supposed to. But I think that this is not feeling like a foam drum.
You think this one actually has wheels?
Yes. I mean, look, we always think it's either crash or easy. No, there's crash, there's foam runway and bounce, and there's like, okay, nice trip. Well, and we're getting closer to okay, nice trip.
If he can engineer a soft landing, then your faith in him will have been rewarded.
Well, I'm out there with him. I don't mind.
A big piece of that could be China. I don't know if you saw Katie Huberty's chart work today, but they still are arguing that the market is not appreciating the reopening. They say it could be on par with 08 or 09. Investors still inefficiently exposed. They see China GDP at 5.7. 3 to 4.7.
I am so glad you mentioned that, because she made 3 points that were interesting. Did China raise GDP?
What's going on here? Hold on, this is not good.
That's a bit of a bummer. But people
Okay,
don't
let's
like
see.
Luxury goods very strong. There's China again.
Okay, seems to be good now. Sorry, guys.
Now, I don't want to.
Alright, let me know if there's audio issues. I can balance it out with the different things that I play in the background. But I've been talking about AMC. I got exercise AMC shares, and I've been struggling to come up with a plan. I might have to just close it all. I got exercised. So now I'm left with a few disjointed AMC positions.
Their estimates for demand, and that's China.
Yeah, so these 4 are disjointed now because I got exercise on my Iron Condor. Inverse Kramer time. What's up, guys? Yeah, I messed up with the microphone. But this AMC position is so bad right now.
This is what it is. No, it's this curious amalgam of good and bad and more demand, less demand. I mean, you listen to the oil demand for next year, it's going to be better than this year. But what does that say about Chevron? We live in dual worlds. Our hedge fund people.
But if oil demand is 101, 102 million barrels a day, that's,
Well, then you go buy.
Yeah, that's it, exactly. Yeah, I fear that they would exercise, and they did, because the short calls were in the money. So now I'm left in a tricky position. And then I have 5 more that can get exercised. 5 more of these. And technically I should only incur a small loss, but it shows a bigger loss, so I don't know what's wrong. But my net value here doesn't show a big loss. So it should be like max like $100 loss if I close it all. But the problem is if I hold it, I have a fee rate. I was talking about this earlier of 100% on this. So So if I hold the negative 500 shares, that could be bad.
Tell me what you think of this move this morning.
Sure. So I think the move today was partly retail sales, partly also BOJ. I mean, last night the BOJ did not move yield curve control. I actually think it's inevitable. They're going to have to give up on yield curve control. You know, it didn't happen last night. It's likely to happen by April. They're going to get a new BOJ government
So yeah,
as well.
so it's going to be tricky. My account is taking a tiny hit on the day, not a big one.
You know, higher inflation, higher wages.
I just want to get rid of the dollar.
They're going to have to give up on it, and so
focus on other stuff.
Or you know, this demand for treasuries that's come
hard,
from
I swear.
the Japanese
This month has been
investors,
hard to
that's
trade.
going be so I think that's putting some upward pressure on rates. But then we've got
Keep
this
running
issue
into
in the US
troubles.
where the market's pricing in a recession.
And even Tesla
I think
now
bonds
might be
are a
troublesome.
very
That's why I'm
good
watching it.
diversifier here. If the
Because
economy
if it gets near, if Tesla gets near 160, 170, I could be in trouble here.
I think the market's taken the inflation decline, the fact that the consumer is slowing.
Although this balances out, I can roll this
I don't think
up.
it's going to be a straight line down to 285. I actually think in the near term we
So
can
we'll see.
rise a bit in yield as the Fed says, hold on, we are trying to slow things down, and you know this is intended, and we're not going to stop
Microsoft plans to announce
because
layoffs
inflation
today.
for services
Microsoft is
ex-chapter
up.
is still high. It's still accelerating as we saw last
All right,
week in
we
the
have
CPI
15
report.
minutes till
I think
markets
not
open.
a straight line down, but I do think the longer term trend for long term treasuries is lower, and particularly real rates. Look at those 10-year real rates, well north of 1%. The economy can't handle north of 1%, long-term real rates. So I think the long-term trade is lower 10-year rates in the two handle by the end of the year.
You had some puts too over the weekend. Tesla had to cut the losses. Damn, Jack.
I think we're going to hear from
Bad timing on those.
they're going to say, no,
A lot of people were short Tesla, and I think a lot of this is a short squeeze.
We have to go above 5%.
I think
That's not priced. And so
too many people entered short around here, and they've been getting squeezed out.
But I think the trend is
And
still
around here, a lot of people were
buying
bearish Tesla.
bonds here for that recession because
This was the best time to be bullish, but a lot of people were bearish.
Well, there's certainly pan against bonds right now. Priya, Jay,
I
you're
know,
gonna be
it's been
sticking
rough.
with us. We're going to talk about the BOJ
A lot of
just in
people were
moment. Just
short.
getting news from Microsoft.
And
Microsoft to slash.
the thing with companies like Tesla is that it's all about timing. If you're short for most of the year, you lose money. But if you time the short right, then you make a lot of money. It's all about timing with these. And I'm scared to short Tesla because you never know. It could just run up like crazy like it did. Dollar's getting destroyed here. That's really bad for me. Dollar's getting slaughtered. Am I missing something?
About Morgan Stanley, for instance, sees in a piece where they recommended Seagate, but downgrade IBM. They talked about early signs that the
Limited United States industrial production. Okay, we got some data. 1.6% versus 1.8. Month over month, negative 0.7%. That's really bad. That shows a recession. Where's my ZQ? ZQ's probably getting destroyed here. Yeah, ZQ's getting slaughtered. Now I'm negative $200 on ZQ. That's really bad. I wasn't expecting this. And so markets are pricing in a big rate cut now. Manufacturing, production, negative 1.3. Bullard is usually very bearish, but I don't know where I can find his speech. Crypto flying, oh yeah? Yeah, crypto's been going crazy, and yeah, we have it at 21,690. Damn. And MicroStrategy's running too. I'm gonna get squeezed on so many positions here. So many positions that I'm short on. I'm gonna get squeezed. MicroStrategy might squeeze me here if crypto keeps running. Crypto is bouncing here, yeah. 200 points. 1.6% here. So it's gonna be tricky for me this month. I might even just almost break even with my expenses, but I hope not. Dollar's not helping. Getting exercise on AMC is not helping. The ZQ position is not helping. It's coming back down though. Data is a little bit bullish for rate cuts. That's the thing. But at the same time, it shows like a recession. So recessions are bad, right? So I don't know how bullish a recession is.
That's the way the mice are playing. We're in a mice play moment.
Everything is green.
And I fear that these layoffs are coming because when you see the numbers, they're going to be disappointed. And so today,
I'll have to maybe pick up some more bullish positions. Some like short puts or something.
One day we're going to wake up and
on the
say,
SPY.
You're telling me all these
How's the
companies
SPY
are laying off
doing?
people and we should
SPY
still
is
like
up.
the stocks going into earnings? That
Off its
historically has
highs,
not been
but
the
it's
right
up.
thing to do.
Right.
Meanwhile, the technicians watching percentage of S&P names above the 20-day, the VIX below 19. You think we peter out here, it sounds like.
I just
Dollar's coming back up. That's good.
For companies after a while because they're laying off people.
ZQ's coming back down.
Instead, I start thinking about I want more United Airlines kinds of numbers.
There's no way I'll pick up two of these. These are way too big. That's $400,000. One at a time.
Retail sales with soft landing numbers. It's just that do I want to be in the stock that's part of the soft landing discussion, or do I want to be in the stock that's part of the Inflation Reduction Act where they're getting a big handout from the government? And I think for the moment, I'd rather be in, after a nice run off the bottom, I would prefer to be in the stocks that are going to have upside surprises. Now, you're reading this document. Does this document tell you I want to buy Microsoft?
Well, Mr. Nadella does say this
Dollar's
is the
coming back
context,
up.
that is
That's
these
good.
layoffs in which a company must strive to deliver results on an ongoing basis while investing in the long-term opportunity.
Japan keeps rates. Yeah, that was a big story last night. Unchanged policy.
And so again, those 10,000
The yen was moving like crazy, but now it's back down to where it was. It's even higher than where it was. But it dumped last night.
Key strategic areas. We know this is a challenging time for everyone impacted.
My account's taking a huge hit here from everything. I'm getting hit by all sides. I haven't managed well. The AMC position was more experimental than anything, but I knew I would get a sign, and I got a sign. Exercised.
Demand destruction, as Priya was talking about a few minutes
ago. Now I'm short 500 shares. And these counteracted, but not fully, because the deltas, right? This is a 417 delta, and that's negative 500 delta. Over time, it balances out because they cancel each other out. But in the short term, they don't cancel each other out.
I mean, I think it's going to slow a lot more as the consumer, deals with a lower.
I might just sell
accumulated
puts
savings. But the manufacturing sector
and collect cash that way,
services spending,
and just sell puts every day.
The US is 75% services, so I think that's what
super annoying to get exercise.
It's clearly slowing.
Now the other one's going to get exercise too. This one's going to get exercise too.
This was Satya Nadella of Microsoft a little bit earlier today in Davos, Switzerland. During the pandemic, there was rapid acceleration. I think we're going to go through a phase today where there is some amount of normalization.
I'm going to BRB. 9 minutes till market opens.
We will have to show our own productivity gains with our own technology. Those comments just ahead of that announcement that 10,000 jobs will go. That stock is up by 0.8%. Guggenheim actually downgraded the stock just yesterday. That was the first bearish call we've seen on this name in 3 years. And here was the quote from the analyst. While most investors see Microsoft as a large, stable business that can weather any storm, it does have vulnerabilities, some of which could be exacerbated by this macro slowdown. The analyst went on to say, we're in a prolonged macro slowdown and no one is immune. Jay, can I finish with you just on that? The cyclical challenge these big tech names are going to face in America and beyond.
Yeah, John, we've not been positive on big tech for, I don't know, a year and a half. High rates are kryptonite for growth stocks. So that's not an area where we've been focused. We're in value, we're in small caps, we're in cyclicals, we like financials, we like industrials globally. And I think Japan is actually showing that the world is moving to a higher nominal growth plane. You may recall that high nominal growth thesis because we talked about it a bunch over the course of 2022. I think Japan is just confirming that. And we look for a global CapEx boom over the next couple of years to deal with the 3 C's of COVID, climate, and conflict with both public and private spending to support that. So we're pretty optimistic. And with the U.S. data being negative, that just feeds our case, right? We're overweight non-U.S. equity. U.S. news that's not great is okay for us because it reaffirms the weak dollar. And the weak dollar is really the thing that we're focused on here. A weak dollar drives money and flows into non-U.S. assets, and that's what we're seeing. And John, as you know, it's been about a 12-year run since the bottom in 2009 for U.S. assets, led by big tech. That whole trade is unwinding. It's going to take years for that to happen. We're in the very first inning of as I said earlier, a multi-year period of non-U.S. equity outperformance led by both developed markets like Europe and Japan. We're double weighted in Japan equity, and emerging markets led by places like China, Brazil, etc.
Well, Jay, it took a while, but the world is coming towards you.
Since the year began, certainly since the November rally, because it's almost been viewed as a kind of a cyclical name. Well, here we go. Morgan Stanley pulls the plug. They go buy to hold. They say it's too late. That you just don't want to be in it anymore. That they say it says that it's run its course. It re-rated to peak levels, so buy to hold. Their top pick is Apple. So here's this is about as contrary as Morgan Stanley as anything I've seen, as IBM has been the place to hide. But what they're saying is stop hiding, start buying, be more aggressive, early cycle coming. This is another theme that we're seeing, David, which is that you can see through the valley of the shadow of bad earnings and start buying. And I like it.
But
I'm not in love with
not for IBM, they're saying that. Morgan Stanley downgrades today.
I'm saying that this is defense. They don't want you to play defense anymore. And then my problem with that is like suddenly, I think we're all in the midst of the transition.
Tesla's pumping here, 137. Nasdaq's pretty high. I knew this was a buy here.
This stock says they're winning.
We might have a small bull market now. Scary. Scary for anyone short.
But I find these kinds of calls interesting because you're downgrading winners. I think Apple, its own don't trade. But this was the horse that was working, as is Oracle, by the way. I mean, these are the ones that are defensive and very inexpensive. And Apple's not expensive, but boy, if they want us to go to these enterprise software stocks, they're selling.
Apple is pumping 137. Crazy.
Yeah. Well, meanwhile, we'll see. It doesn't look like too much damage from that downgrade from Morgan Stanley. All right, we got an opening bell just a few minutes away. And don't forget, of course, you can catch us anytime, anywhere. Listen to and follow the Squawk on.
All right, so we got 4 minutes till markets open. And let me see. So yeah, markets open soon. We have some economic data this morning that's shaking things up. Let me see if there's any other data coming up soon. We had the Bostic speech, which I haven't heard any of. I don't know why it's so hard to find these speeches. Why do they even announce them if they're like impossible to find? So annoying. It should definitely not be this hard to find something scheduled. So we have the Bullard speech at 6:30. Business inventories at 7. And then retail inventories at 7. And then we have more Fed speeches later today. And yeah, so a few things happening today. But overall, my account is taking a massive hit from all sides. From the short side, from the AMC side, from the ZQ side. I'm getting slaughtered here by the market makers. I'll have to be nimble here and try to find a way to come out ahead of this. ZQ, I'll just have to wait because they're pricing in such a big rate hike that I don't think it's possible, hopefully not, for the Fed to rate cut for the Fed to cut rates this much by next year, but they could. Tesla's coming back down. So yeah, it's going to be hard to manage this and come out ahead. AMC keeps going up. The fee on AMC is so bad. It's 100% fee to hold it. I can sell puts on it. The premium will be high on puts. I can sell puts weekly on it. But if it goes down too fast, then I'll lose in that manner. Because I have long call and short put as well in this range. So maybe sell 5 contracts weekly, 1 strike below, and then see what happens. And then if I get a sign, then maybe sell 5 calls, and then just do that over and over again. And hopefully between now and March, which is when this expires, I can come out with quite a bit of profit. 58 days, yeah, March. So that might be the plan with AMC, and then hope that when the smoke settles, that all my positions combined would be profitable. But I feel like I'm playing with fire here, holding these shorts. They are covered shorts, but still, the fee is bad. And selling the 5 puts weekly does help with the fee, but it creates another layer of complication to the position, which I might not want. Tesla's coming down, especially if we sell off sharply. Okay, let's go. 6:30. Markets are open. And Q's going up. Tesla's coming down. Tesla's coming down hard. Dollar is stable. What else is moving? AMC is stable. Tesla's coming down really bad. Okay. So, might be an option to just fade this and go long. Yeah, maybe. But I don't want to risk going long or short Tesla. It's such a volatile stock. Accounts back up a little bit. ZQ is stabilized here. You know what? I like it that Tesla's going down. I might just take profits off of this. This is $240. Then maybe roll it up to a different strike. Or just keep it. Keep it. It's really selling off. Wow. But the NASDAQ keeps going up. So it looks like something bearish is happening with Tesla. Maybe the short squeeze is over and now it can sell off again. Wow, NASDAQ is pumping like crazy. Let's see about this plan that I had. What if I sell 5 of these? That's quite a bit of cash actually. And if I get a sign, then I'll manage in some other manner. And if I don't get a sign, I pay the fee to hold it. But at least I get quite a bit of credit if I sell this. This expires in a couple of days, so the premium is good. This might be my best bet. Let's go. Give me some credits here. I don't know what I'm doing with this stupid AMC play. Let's go. Okay, so we got short puts. Okay, so at the very least, I am picking up more premium on this. $200 of premium. So it makes up for any fee that I'm paying to hold the stock. But the issue is if we sell off sharply, what am I going to do? I have these positions here that will lose if we sell off too sharply. So I put myself in a really difficult position. Tesla keeps dumping. Wow. I almost feel like joining this dump party on Tesla. The trend is strong on this one. Let's look at NQ. Should I switch to SPX now? Take a look at NQ. I was looking at it this morning. Tesla dump is real. AMC is also dumping, so maybe that wasn't the smartest play to open right away. I'm back to 406 though, so I can't complain too much. I think it's fine. AMC is fine. I'll just play it slow with AMC, and as long as I collect weekly premium, it makes up for the fee rate, and then just see what happens over time. Tesla wants to dump. I can feel it. Or it might just pop here. I almost feel like doing a day trade here. Maybe if it goes higher, I'll do a sell order on it. Tesla's probably going back to the 120 range here. Maybe. It looks like it wants to go down today. Where's the ZQ? Has ZQ come back to being profitable? What the hell's going on? I don't even see it. See, this is where artificial intelligence is smarter than humans. You can find things right away. Yeah, ZQ's still here. Okay, so what if I short this? I don't think so. I think Tesla can easily just go back up to 140. But somebody was selling. That's 3 million shares. You know what? It could be Elon. Elon might need some cash for the lawsuit. And also, I think his Twitter interest payment's coming up soon. He might need some cash, seriously. He has a serious lawsuit starting, and Twitter's coupon payment is coming up end of January. So he might need some cash for that. You never know when he's going to sell. And when he sells, it's heavy. It would have been heavier than this if he sold. But he did say he ain't selling. Yeah, he said that a few times. I think by now we can all agree his word doesn't mean anything. He's said that a few times. He's not known to be the most honest person, so you don't take him at face value. You gotta be skeptical what he says. And plus, if he announces that he's gonna sell, then everyone's just gonna front run him. It's like against his interest to announce it. Yeah, I think there's too much pressure. There's a lawsuit, there's a coupon payment, and the downtrend is now confirmed. But the NASDAQ isn't in a downtrend. Maybe I'll do a quick flip here and just see what happens. I'm gonna get destroyed. Watch. I swear I do these flips for like $10, $20 and then I get destroyed for like $400. Because I refuse to close a loser. Okay, I need to make some flips here because other positions are squeezing me. Although I'm at 406, so that's not bad. Where's AMC? AMC's at 626. And yeah, I'm gonna get squeezed here. Or am I? I feel like I could have gotten a better entry. This is not the best entry for this position. I'm gonna get squeezed now. Story of my trading life. I should start inversing myself. That's what would probably work better for my day trades. At least my account is at 406. Way better than what it was looking like earlier. But I'm still struggling here because of where's the Qs? The Qs is 283. Not bad, honestly not bad. I can roll the puts up here and then just make this more delta neutral. That's an option. But let me look at my Tesla. Okay, maybe just take the profit here. It's barely any profit, but I don't like staring at this. Okay, I should have probably kept that. It's like 10 bucks. Whatever. It's something. Okay, there we go. NASDAQ's coming down. AMC's down. I should have held off on selling those AMC puts. That's probably something I did too quickly. Okay, it's only down 50 bucks. It's dumping though. It's dumping fast, AMC. If it keeps dumping, I might close the long call too. At least it will balance out there. And I'll keep the premium. The position is too complicated. Okay, Tesla's dumping. We have my Tesla position here. Okay. We have the Tesla position here. Account's looking good. Let me close this one here. So 406, 200. I need the ZQ to cooperate. If ZQ can sell off, that'd be nice. All right, Tesla's back up to 135. Dollar is hovering around 81 here. And I might switch to SPX now. But NASDAQ is switching to a downtrend. This might be a sell the news. Maybe everybody is bullish because of the PPI coming in so negative, but it might be a sell the news event where market makers are like, nah, this means recession. We are bearish now. Because everyone expects this kind of news to lead to lower interest rates, therefore bullishness. But market makers at any time can just pull the rug and be like, nah, this means recession. Okay, this is coming back down. That's good. And then just pull the rug on everyone. Create the biggest bull trap in history. Yo, last night I was trying to make myself a breakfast sandwich. It's kind of gross, but I'll share the story. And then what happened was I got everything ready and all I was missing was the lettuce. I was so hungry too. I didn't eat anything all day. I ate like a small breakfast. And then everything's ready. I go to put the lettuce on it. It was in a bag lettuce. I put the lettuce on the sandwich. And then I look at my cutting board and I see this little green thing. And I'm like, is this a piece of avocado that just left there? And then I see tiny legs. And then the tiny legs start moving. I'm like, what the fuck? Is this a live bug? And then there was a live bug inside my lettuce. So I totally just like cleaned everything, threw everything in the garbage, threw all the lettuce out. And I'm never buying bag lettuce again. I'm just saying this so that you guys can avoid bag lettuce. Because that shit was disgusting. It was a live bug. And then, long story short, I didn't have any dinner last night because that breakfast sandwich was going to be my dinner. And then I was just grossed out. Yeah, I do wash, but then there was still a bug in there. It's like, it's crazy. It's like, I don't want to, even if I wash my lettuce, I don't want bugs inside. That's why I would only buy fresh lettuce now, because before I bag it, I'll like, shake it off and shake off any bugs on it or whatever. I think they're more likely to put live bugs inside your vegetables if it's pre-bagged as opposed to like unbagged. But that was gross. Lettuce is too expensive anyways, so I'm gonna avoid it from now on. Alright, so ZQ's looking okay. Tesla's coming back up. We might have a reversal here, a V-shaped reversal on Tesla. But as long as Tesla stays below 140, I'm okay. Because I don't want to get squeezed on this position. It does feel like a bull trap, I know. Okay, let's see. Kenyan Central Bank. Twitter's daily revenue has fallen 40%. So this is the negative news with Twitter. See, Twitter's daily revenue has fallen 40%. So that means that they might need to raise funds to pay for that, right?
So yields have been coming down recently. They're down again this morning. I've got the 10-year down 16.
Yo, who, what, when? I was eating the bugs dinner. I know, right? That's basically it. Freaked me out though. It was like some kind of tiny green beetle or something. It was so gross. And now I'm starving,
Well, I don't think
but I
we
just
need
had
to
some
be
cookies,
necessarily
so I'm good.
bullish on the U.S. outlook for the economy
There
for
we go.
2023.
So
I do
NQ's
think
going
that
up,
the
dollars
US is
coming
heading into a
down.
mild
Yeah, look at this
recession or
reversal.
moderate recession throughout the course of this year. We've seen it in the numbers this
NQ,
morning.
my account is
That
looking,
should give
just took another
pause
hit
to
though.
the Fed interest rate hiking
I feel like I
cycle,
need to close things and just
after, the next couple of
reposition
meetings.
myself
And so I do think that,
better than
we'll
how I'm
likely
positioned
see
now.
50 basis
Although I have a lot
more
of
rate
winners.
hikes, and that should be the end.
Oh yeah,
Absent,
organic
a
lettuce.
significant spike in inflation.
They must love
I
lettuce,
think the
eh?
market's largely discounted that
I think from now on I'm getting
and
coleslaw.
as we start to see
Because
inflation
I don't think
lower,
bugs like coleslaw as
we
much.
saw again this morning with the PPI
You
print,
put it on a
I
house
do
plan?
think that
Nice,
you'll
that's
likely
nice
see
of you.
rates
I
move
would have killed
lower,
that shit.
and the expectation that the Fed is done, and that
You
I
must be a
think is what's
Buddhist or
sort of
something.
underpinning some of the optimism, at least that I have, for the tech sector and for any interest rate sensitive sectors.
Okay, what's
Sure,
going
just to
on?
be
So the
super specific on
Qs.
what I meant by what this could mean for the bond market. We're pricing it
I'm
in
not
for
getting
a
squeezed too
recovery
badly
off
on the
back of this China
upside.
reopening. That's reflected in what we're seeing in the luxury names.
Eventually
reflected
it
in the
turned
yen,
into a
reflected in
moth.
European
Wow, that's
equities.
pretty cool.
And I'm trying to wonder how much of a factor that will
Mr.
be
Nature
in the
Man
US
here.
bond
There we go.
market.
It's selling
So the
off.
Treasury market this
I
morning,
think
we're
Tesla is
responding to
bearish
softer
here.
data.
Honestly,
Treasury's up, yields
because
lower.
of
But
the
if we're also pricing
Twitter
in a better
revenue down by
recovery
40%.
abroad, driven by China, what do you
That's
think that
bearish. Although the
ultimately
NQ
means
is
for the
coming down
trajectory
too.
of bond yields?
Tesla is
So I actually
probably
don't think
bearish
it means
here.
that much. I don't think that you're going to see large economic spillover effects from
It might be
China
him
to
selling
the
off
rest
here.
of the world. You'll see it in certain equity sectors.
There we go. Tesla's
but it's gonna be
dumping.
very specific.
NQ's
And
coming
what-
down.
I think
Dollar
it's
is
different this time
popping. This is
around
good
than
for
what we've
me.
seen in
Here's
past,
AMC. AMC's okay.
significant sort of rebounds in China is that historically the rebounds in China have
So
largely
$200
been driven
or so a
by big
week.
industrial
Selling
production,
5 contracts.
which
I
we
put
felt
myself at risk
from a
though.
ripple
I
effect
put myself at
perspective,
some risk.
across emerging markets,
So I'll see what
across
happens.
commodity sectors, across,
It's a
more
very
cyclically
complex
oriented
position, this
sectors.
AMC position.
This time around, I think the reopening is going to be very specifically
Yields continue to plunge on US data. Where's ZQ? ZQ is looking better. Should have waited for a bigger pop to short
and
this.
so, as opposed to when you've seen it in the past, which were more industrial.
Okay, dollars pop in. That's good for me. Tesla's dumping. I feel like taking profit off of this because Tesla might get destroyed in the coming few days. And I am up $200 on this. Might be an idea to just close the downside risk and then wait for a sell-off and then reopen it later.
Growth impulse stimulus that we've seen in the past in the U.S.
And then reopen it later once it's sold off. So wait till it sells off and then open it again. So I took some profits here off of Tesla.
The stock is just about unchanged on the session.
And then I do have the upside risk though, but I think the upside risk is pretty safe here because bearish sentiment on Tesla. The coupon payment coming up and the revenues down by 40% is huge because they can't just make cash appear out of nowhere. Interest rates are high, so borrowing more cash is hard. So he might just sell his shares to fund Twitter. You never know though. Never know what happens, but I have a feeling the sentiment is going to switch back to bearish, maybe for a few weeks. Maybe we'll revisit like 122, 121, or something like that. We'll see. See what happens, but it is coming down.
State for Foreign Affairs.
Dollars going
Will
up.
be joining us. That interview was a first.
And what else? Dollars coming up. And yeah, Tesla keeps coming down. So I got rid of the downside risk on Tesla. And then maybe if this is profitable, I will take the profit on this and close the upside risk. I don't want to be caught offside with Tesla. If Tesla rips to the upside and you're short puts, you're going to get destroyed. Like there's no mercy when Tesla wants to go up. That's why it's scary on both ends. If you're going to be short calls or short puts, it's scary. But being long puts is also scary because of how much it can rip. It's hard to play. Honestly, Tesla's hard to play, and usually I have a hard time playing Tesla. But this year so far, Tesla's definitely been one of my better plays. Although this is inaccurate, but it's still close to like 2K, 2,300 profit on my Tesla positions. So definitely been good playing Tesla. So I'm going to keep playing Tesla. I do have some Netflix positions, so let me just look at Netflix a little bit. See what Netflix is down barely. It's flat. AMC back to 624. What if I sell a single call in AMC just to balance it out, maybe, in case it keeps going down? Maybe we go way out and we just sell one call. The premium is so shit though. The risk you take for this premium is pretty bad. Maybe just sell one of a couple of these for 30 bucks. I don't see the reward. Risk reward isn't great. But I can consider closing it all. My account is near all-time highs, so I don't need to hold on to risk if I don't want to. See what they're up to.
He told Hadley that he was unsure of uncertainties that could arise in the wake of the ongoing Russia-Ukraine war.
Well, with regard to gas, because gas is more of an issue than oil, because oil is a commodity. You can take it from Europe and place it in Asia, and Russian crude will always find markets.
Place it in Asia.
Price. However, gas is more of an issue because gas, there is not enough spare capacity available. Second, you need LNG terminals, and you need to establish markets, and there's not enough supply to meet the demand. So it's much bigger issue.
All right, let's switch back to NQ.
We are in a situation where there is a spare capacity.
11.7 is resistance on NQ. We've been here all morning. Tesla's definitely bearish.
Spare capacity erodes, you would not be having the capability.
Might be an idea to open a risk reversal on Tesla.
Or long-term interruptions. That what happens.
Maybe wait for a good time to open it and then flip it.
How much flexibility do you as a Ramco have? Because you're 10% of the world.
And go 9 days out.
Well, our maximum system
Can
capacity
do.
is 12 million. We're building additional.
I can sell a call to finance a put.
We are at the same time.
It's a risk reversal trade.
Increasing our gas to replace our liquid burning.
So it's only 4 cents to open, but nah, I'm not gonna do it. I don't think it's gonna work out.
2030 in terms by eliminating the liquid burning in the kingdom. So we will have ample capacity. The issue is the demand
capacity.
and the decline that we're seeing in the market. We are looking at a decline of 4 to 6%. In a 100 million barrel system.
Yeah, I'll just watch it. I'm not going to take on extra risk here.
6 million additional barrels that needs to come to the market every year. So yes, we are.
Yeah, NQ's pumping though.
But I don't think there is.
Maybe a small Tesla call. You want to buy a call? It's possible, yeah. It could easily bounce back up.
Huge topic here in Davos, and Hadley joins us with more. She's on the platform.
The short-term trend is bullish. So buying a call is definitely an option. It's as good as buying a put. It's hard to tell. Dollar is starting to sell off here. Account is back down a little bit. ZQ, I'm still down, although it ain't too bad. I got a good price on ZQ. The question is whether it's gonna stay elevated. Like if you look at the ZQ, wrong one. Jan, yeah, if you look at the ZQ and you go to the hourly chart, like I got it here. So it's definitely higher than it's been in a while. So there's a good chance that it comes back down. See, this is like resistance here for the ZQ contract. So if I can sell it around here, it'd be nicely profitable. But there is a good chance that it doesn't come back down if they price in rate cuts. If they price in a lot of rate cuts, then there might be a chance that it doesn't come back down. Can't get this low enough. Right there, that's better. So yeah, there is a chance that I'm not going to be able to get out profitably if there is going to be rate cuts. But I think the Fed is going to push back on the idea of a rate cut unless there is like real pain. And currently we don't see pain. Everything is pumping. All the meme stocks are pumping. Crypto's pumping. I think he's going to be reluctant to announce any kind of rate cuts unless there's real pain. But you never know, right? Things can get bullish really fast. That's why I need to consider opening more bullish positions. Maybe taking some off and rolling them up. Let me look at Apple. I might want to roll up my Apple puts here. Yeah, it's become imbalanced again. So let's roll this up. Maybe to like 128. See what we get. Let's go to Feb 17. I only have 130 available. That's going to be way too close to at the money though. We're getting closer. BBBY is still going, really? This one might be a little bit too close to at the money. But I might have to do this just to be less bearish. I might have to do this. I mean, overall, I am up on Apple on the year, so I can afford taking a hit to close the position early. So I might do this just as an added gamble, increase the premium of my strangle, and then I will be able to close if I need to, if I'm in a bad position. There we go. All right, so that is closed. Let's look at BBBY, 12%. Where's AMC? AMC's good. Back to 405.8, taking a hit. I think the dollar is what's affecting me the most. Maybe ZQ also. ZQ's better though. The US dollar is pretty stable. So what's causing me this pain? I'm fluctuating by like $400 today. What's causing the pain today? Maybe take some winners out. Netflix. This one's looking really good actually. This one. Earnings is tomorrow after close. I can always keep it till right before earnings. This one's looking good at 170 profit. I also have the 250 put that's looking good. So I might just take the profit on Netflix right before earnings and then reposition in new positions after earnings. Okay, this one's looking good. I looked at Silvergate and I didn't see any puts worth selling for next month. I listened to their conference call actually, and things, although not great, I do think their business model will survive, and I don't think they're going to go bankrupt. So like on Silvergate, the risk reward of selling far out of the money puts might pay off if you go into March, I think. Although we don't have March 17, we do have March 3rd. And yeah, I can't really get much. I don't want to get $6, although $6 might be okay. It might be easy to defend this, but I would only get like 10 or 20. I wouldn't get 100. But May 19th, actually, you can sell the 2.5 put. And if I really wanted to go aggressive, I can sell 1,000 of these for $18,000 of cash. But it's 100 days. It's like half a year. Is it really worth it to put that much money in buying power aside for 18,000? Maybe. Maybe if you just want super passive income and you don't want to micromanage your account daily, you can do that, because I don't think Silvergate is going bankrupt in 120 days, and this premium is juicy. But 120 days is a long time, so you're skipping March and April. You're skipping 2 expiries. But the thing is that as we get closer to May, the value is going to plummet on these. Like if you look at March, you're basically getting nothing here, right? The bid-ask spread. Whereas here, you're getting 15-20. But it's a lot of weight to get the money out, to extract that money out. I'd probably prefer, if I want to make a bet on Silvergate, to go March 3rd and sell some $6 puts and then just wait it out and then just earn a little bit of theta and not set aside too much buying power there. Or wait for a sell-off. Wait for a big sell-off and then sell those 2.5 puts. Maybe. Tesla's coming back up. Might want to close my upside risk on Tesla. Or maybe just buy a few shares in case it runs. How's the NQ doing? NQ's pumping, eh? 720. Okay, let's switch back to the SPX. Daytime. Daytime, this is the best one to look at. What is this line? Is that VWAP? No, what is that line? Some kind of average? I don't even know what that line is. Oh, it's a trend line. That's the mother of all trend lines. So we're right near that trend line, eh? Look at that. Let me check Twitter, see what's going on there. Okay. Helicopter crash in Ukraine. Crazy. UK home prices are down. China's having their lunar New Year. And oh shit, is it poppin'? What's going on? What's going on with SPX? It's popping above this trend line. Maybe this is a good place to pick up SPX put 0 DTE because we might just come back below this trend line end of day. Where's AMC? AMC's is stable. I don't even think $200 a week makes up for the amount of losses for holding that short. So let's say 220 times 52. Whoops. Yeah, that's $1,000. Oh, actually, hold on. That's really bad. Let's not forget a zero here. Yeah, that's 11,000. That does make up for the fee that I'm paying. So if I can make that $200 a week on AMC and not get assigned and hold the position, it's gonna make up for the fee. I just gotta sell it far enough out of the money so that I don't get assigned, because if I get assigned it throws the other positions out of whack, and I do have more downside risk on AMC because I opened 10 contracts short on AMC here. I can always close this for a profit or keep it. It does expire in 30 days, so over time this will be profitable. But yeah, my account's taking more of a hit here. Where's ZQ? ZQ's looking a lot better. I need it down further. What are my biggest losers? Lulu isn't so good. Maybe I need to sell more puts in Lulu. Apple Strangle. I did roll it up, so this should be okay. As long as we don't go too crazy to the upside. My deltas are pretty good there. Quain, upside risk on Quain is losing today. I'll have to be patient on that. MicroStrategy is another loser. So MicroStrategy keeps getting worse. But I do have some upside here that I can probably cash out on. How come I'm not getting anything for the other leg here? Yeah, I'm getting nothing for this leg, but I'm losing on this leg. Super annoying. It makes no sense sometimes. Like, what kind of game is this where The stock goes up. I don't profit here, but I lose here. One of the hardest stocks to trade options on. But I'm not going to close early. I've been squeezed out of MicroStrategy before. And I think just waiting for the theta to do its work will pay off. Hopefully. And then what else do I have? I have Boeing here. SPY 370 put. SPY's at 399. SPX is at the trend line, exactly at the trend line. Dollar is going up. I have a feeling we're going to reject the trend line again. Tornado watch. Home builders sentiment rises. That's not good. That should keep going down. Housing market, 35 actual, 31 expected. All right, let's go back. And dollars pop in, that's good. I really want to get rid of this dollar position. Okay. Maybe calls queue is making, yeah, it would be the calls queue. I would think so, who, what, when. That's probably why. Let me look at the graph on MicroStrategy. It's a really difficult stock to play. Yeah, you can see the skew. Actually, you know what? The skew shows that there's more put skew. But let me go to Jan. Yeah, Jan has a bit of a skew on both sides. So this shouldn't be call skew. It's more of a put skew. Yeah. So that wouldn't be the reason. But it's strange that maybe there just needs to be more time decay for the put side to lose value. So just gotta be patient. And yeah, it keeps going up here. I'm down another 100 here on MicroStrategy. I think it's all about Bitcoin with that play. And if Bitcoin keeps popping, then MicroStrategy is going to keep popping. I might just want to watch MicroStrategy here. Maybe scalp some shares. If it goes down, I'll buy some shares and scalp it. But the thing with MicroStrategy is whenever the price gets too high, they issue shares. They dilute to raise funds so that they can buy more Bitcoin, which I think is a good strategy to keep doing that. But it makes for a very risky options play, because if the price of Bitcoin doubles, then MicroStrategy will double and I'm going to lose $10,000 on it, right? Or more. If it actually doubles from here, I lose 20,000. That's a lot of money. But that's why the options are expensive. So Lulu, I was gonna maybe roll something in Lulu. Lulu, I have some winners here that I can roll. I can close this. I can close this and close this and then open another one. Have some kind of diagonal. As long as I consistently collect profit on Lulu, then the long leg will pay off in the long term, because the long leg that I have expires in 120 days. So there's a lot of time for reversal. So I just got to try and collect as much as I can in the meantime. See, this is a ratio. The ratio will be safe. Let's close the naked one. Maybe we keep this. There's still $60 left in this. No, we're gonna roll it up. We're gonna roll them up. And then let's open another one. Yeah, that's their main business. They do enterprise software. I listened to a few of their conference calls. Their main business is solid, although it doesn't earn that much cash. But they had huge cash reserves from like years and years of being profitable that they decided to invest it all in Bitcoin. And I follow Michael Saylor on Twitter. He's a bit of an eccentric guy. Everything he posts is like Bitcoin propaganda. As soon as Bitcoin pumps, he has his memes ready. Maybe sell a 310 put, make it like kind of a diagonal, so that if it keeps popping, at least I can collect premium. Collect an extra $100 of premium here by next week if it keeps popping. And if it goes back down, then the long leg is going to look better. The long leg is looking really, really bad right now. So that's good. And I do have upside risk in Lulu also. Yeah. I never closed this. But it should be safe. 375, 380. My positions are getting more and more complex. It's hard to manage it all. Kind of like when you hear about a farmer who becomes a full-time futures trader. I know, right? And then they don't care about farming anymore. I'm sure that happens often. People get rich just trading futures. All right. Dollars pop in. That's good for me. Let's see the dollar pop. SPX is back down to the trend line. I think it's rejecting the trend line. What if I take a small risk for the day? This is my daily risk. I don't usually do this because I always end up messing it up when I do 0 DTEs. But what if we reject this trend line and I pay 200 for this, and if we reject it, then I can make 300. 200 is a lot though. But that is a big trend line, right? And it looks like we want to reject it. It's already too late. I'll just be happy if it goes down because the dollar will go up. I'm not going to risk more capital here. If anything, I should be taking upside. AMC pop up. That's good. Okay, I needed that. Yeah. I needed that because I am collecting premium on this put. This 5 contracts. So that's good. I'm going to keep this AMC position until expiry. So expiry is 58 days. And then I'm going to document how much I make out of AMC between now and then, just to see if it worked out. Yeah. UNG's a loser for me this year so far. I got to maybe open new positions. SPXW also. How did I make money off NQ? Oh yeah, it was a long put spread. I remember that. That was good. Netflix is a winner. Yeah. That's good. I like that I'm keeping track of this now because IBKR doesn't do it for me. So I have to do it myself. I know Tasty Trade does, I think. Because whenever I watch them, Tom always knows what he's winning on and what he's losing on for the year. All right. So account's looking better. I need to hit 407. It's annoying that it's like a super hard resistance line for me to cross. But I should be able to manage. Is Lulu coming back down? Yeah, Lulu's coming back down a bit, which is okay. I do have the put ratio spread that I can maybe close and open another one. I can like roll it up. Maybe, or just leave it. This one is safe. Netflix is up. Okay. So Netflix being up means that I may want to close this. So I open this for 285 credit, and I have an option to close it for 47 credit. But I am earning 150 of premium a day of theta. So if I wait one more day and close it right before earnings, might be best. But this elevated level might be a good time to close this put, or maybe just wait till tomorrow. I think Netflix will wait till tomorrow until there's earnings. Meta, put ratio spread is looking good. Maybe close this and then open other meta positions. My SPX delta shows as negative 19, but that's because of the US dollar. Like I did the calculation yesterday on the spreadsheet, and if it's not for the US dollar, my SPX delta is actually positive 1.7. So I need to be careful how much downside risk I'm getting, because if I get rid of the US dollar, I'll end up being too bullish. I opened a lot of downside risk positions yesterday, so that's going to position me for more of a bullish play. MicroStrategy is coming down, which is good. Dollar's going up. SPX has rejected the line. I should have gotten those puts. And hopefully we keep rejecting, come back to this Fibonacci line, and then keep dropping. MicroStrategy is coming down. That's good. I'm gonna be safe on the call side, and then I'm gonna start getting squeezed on the put side. That's what I feel like is gonna happen. I have nightmares about MicroStrategy. All right, so this is good. All right. Dollar's coming back down. Is Bitcoin dropping? Is that why MicroStrategy is coming down? Barely. Okay, I gotta check the ZQ, see how ZQ is doing. The market is so fucking bipolar, it doesn't know what to do now. It's up and down and up and down, and ZQ still a bit of a loser. Look at the sectors here. Sectors are all up except for staples and utilities. Consumer discretionary is up by a lot. It's definitely outperforming Tesla. Tesla is not doing, actually no, they're about the same. But yeah, Tesla is down from its highs though. It was at 138 this morning. TLT is up 2.5%. Crazy. Didn't I have a TLT position? I think I closed it. Might be a good time to sell another call ratio spread on TLT. It's hitting the higher end of its range, and this is where it starts to meet some resistance, but the premium isn't great. But I can do a small position here. This is not going to be a lot of premium. Yeah, $30. Could always do a small position, shorting TLT. 60 bucks. I'm not even gonna get mid price, so yeah, it's not worth it. Maybe if it pumps more, if it goes to like 112, I'll open one. But it could still go higher from here. If I look at the weekly, last time we hit this area, we hit 110. There's always TBT, so you can sell puts on TBT, right? TBT is the bearish one. So there's the option of selling puts here. Hey, Letty. Yeah, I might sell some puts there. Let's see here. But its leverage will decay on you. Yeah, that's fine. Usually I can manage, and that's usually priced into the options, so it doesn't matter as much when you're selling premium. It matters when you're buying premium because it makes the premium more expensive. But when you're selling it, it's usually priced in. Premium isn't great though. For 58 days out to get paid this much, I can just do a tiny position and keep it safe. Like maybe just sell 3 of these, 2 of these for 80 bucks, 70 bucks. Pretty close to at the money. But I'll wait. I'll keep that in the back of my mind for later. Accounts going up, that's good. Something is working. SPX is selling off, that's probably what's working. So let's take a look here. That's a dip, yeah, I see it. So something is working. Where's ZQ? ZQ is still losing. Yeah, there we go. I should have gotten the put. I should have gotten that put. NASDAQ, SPY, yeah. XLV's down. Let me go back to the dollar. See how the dollar is doing. Dollar should be popping here. Nope. Let's check out Tesla. Tesla's down a bit too. 1 minute. Tesla's down, low of the day. Okay, I think I'm positioned nicely for this kind of play. I gotta consider closing my downside risks because if the sell-off gets worse, analyst ratings. So CRM hold, Disney outperform, First Solar underperform, and Microsoft is sell. Somebody is actually selling Microsoft here. I do have 2 Microsoft puts that I might consider closing. But no, they're pretty far out of the money. This is upside. No, this is downside risk. I have a lot of downside risk on Microsoft. And I thought I had upside risk on it. I might want to open maybe 1 short call naked just to counteract all the downside risk on Microsoft. If things get bearish, I might want to have 1 position where I can profit off of the bearishness. Like a 270 call. Although it seems a little risky, maybe just turn it into a spread. Just a tiny position here, a ratio spread. 270, 275. It's only 43 bucks, and I'm not even gonna get mid price. So maybe just 1 naked call here. 1 275 naked call. And then see what happens. It's only 88 bucks. The amount of risk is there. The risk is there, but it's not that big of a risk because it's such a big market cap company. And I do have the other positions that are going to profit. So I think it's worth it. If we can get mid-price. How much buying power was it? I want to take a look. I think the buying power requirement is low. Yeah, because I have those downside risk. Because you hedge your downside risk, so the broker doesn't charge you a lot of buying power for it. Come on, give me this position. Okay, 85 cents. Okay, so this is looking better. I need to maybe analyze here and maybe start closing some positions. No, I think it's fine. I want the dollar to pop so that I can sell it. But I think if the dollar pops above resistance, then everything else sells off like crazy. I might want to open CarMax positions. Lulu's selling off a bit. This position here that I rolled up isn't looking as great, but it's fine. It expires in 9 days, so there's going to be theta decay. Elon announced trading on Twitter. Did he? Really? I didn't read that. That would make no sense though. Why would you turn Twitter into a brokerage? That's just seems like way too much work for the benefit. There's no way I'm switching from IBKR to Twitter. Maybe Robinhood people will switch to Twitter. Breaking. Apple postponed the glasses. Yeah, I saw that. Oil futures up. Crazy. Oh yeah, you got that headline from somewhere? I did not see that. We'll see. But that's probably bearish, because that's going to be a lot of cost to turn Twitter into a brokerage. Seems like a ridiculous investment to take. You know what? With the way things are bearish, I might want to close my Microsoft 225 short puts. If I can close it at a scratch. No, maybe not. We'll just keep it. Because these could end up being big losers depending on how much we drop. Maybe just close one of them. Just to reduce downside risk on Microsoft. Because if we get a big reversal, I don't know. We'll see. We'll just wait it out. Because I do benefit in other ways if we have a big reversal. And it looks like we're going to be range bound again. There's a feature coming out from Amazon called Buy with Prime. Yeah, that's going to be for like other retailers. I remember reading that, and that was a week ago, so it should be priced in already. But they might make a lot of money off of that. Yeah, they might make a lot of money off of that. You never know. I do have some Amazon positions. This one's underwater. This is a call ratio spread. I do have a put position too, I think. And if not, I should open one. Yeah, it looks like I don't have any put positions on Amazon. I considered opening one, but I didn't. But maybe I should, because the buying power requirement will be low. And I just go pretty far out of the money to keep it safe. And I think the buying power requirement will be pretty low for this. No, actually it's $1,000. So maybe I do have more Amazon positions that I can't see. Yeah, I do. I already have a put position. I have 3 puts. So that's why the buying power was high. Caterpillar keeps going up though. Apple stabilized. MicroStrategy's back down. That's good. Okay. Things seem to be looking up a little bit here. Where's ZQ? ZQ is a big one. I opened it too early. I should have been patient. I would have had such a much better price if I waited. Trade with Robinhood. They already have some kind of Robinhood button or graph, but I didn't see the trade with Robinhood. That makes sense. Maybe they'll earn like commissions. Yeah, that makes sense. Dollar's back down. Amazon is up. AstraZeneca. Is this feed frozen? Yeah, let me reopen my Bloomberg feed. Dollar's coming back down. Let me look at SPX here. So I think part of the problem with MicroStrategy is there's so much IV that time decay happens very slowly. There's so much implied volatility. that you need a lot of time to see decay in it. And we might have earnings soon that I'm not aware of. Yeah, end of Jan. So there's time till earnings for some decay to happen. But the closer we get to 300 before earnings, the more this one is going to be juiced up. But I think I'm managing well. I should be making more progress on my total account size since we're approaching the end of the month. But we still have time for some decay here to happen. This is going to add, this is going to add. These two are definitely going to add to my account. And then AMC is going to be interesting to see what happens with it. I hope this doesn't get breached this week, and then next week I sell like a 550 put, and then we slowly get closer and closer to $3. The closer we get to $3, the less likely I am to get exercised here, and the more I will benefit from the price movement down. Nike. All right, I'm going to consider new positions. A lot of professionals have lumpy returns. Yeah, that's true. That happens to me too. Like some months I'm relatively flat, and then another month I'm really up. But like in my opinion, just staying alive and staying in the game is so valuable, because I'm basically waiting for like a good opportunity to take a risky bet. And the longer I stay solvent and the longer I can keep doing this, the more likely I am to run into that situation where there is just a really good risk reward play and I take a big gamble on it, and then I can do really well for a part of the year if I can manage to wait and be patient for an opportunity like that. Like if SPY hits like 330 and I'm positioned for it, that would be such a great opportunity to take a short-term long position or something like that. Basically, I check every day and see, you know, what's selling off a lot, what's not, and then just wait for some good opportunities. So let's see here. I hate how the sorting works here. You gotta do it multiple times. One more time. Okay. HKD's up 20%. You're very smart about it. Thanks. Try to be. You gotta be, man. You can't just, you know, expect to make money right away, because you're gonna lose. You gotta be patient. You're gonna wait for that opportunity, and then try to take advantage of it while it's available. UNG's down another 6%. I might want to start opening UNG positions to make some money back that I've lost. Roblox, Mara was up a lot yesterday. Same with BBig, it was up a lot yesterday. What's the fee rate on BBig? I think shorting it makes sense. It was up a lot yesterday, but 70 cents stock you don't want to short. Risk reward isn't great. Silvergate's down a bit. VIX is down. UVXY is down. I was reading the Wall Street's Bet post about the guy who sold 58 puts and then he was assigned. And I hope he sold, because he was assigned on Monday. And if he kept it, he's probably underwater now. Or maybe. Yeah, that's today. Yeah, if he didn't sell for profit yesterday, around here, he's underwater. And I don't know what you're going to do with 5,800 shares of UVXY underwater. Such a horrible position. Because the VIX can stay down longer than you can wait on UVXY. UVXY is probably one of the worst ways to try and make money. Merck is down. Yeah, I don't see anything that stands out as an opportunity. Let me do IVR. and just see what has good IVR. Yeah, pretty much same as yesterday. Amazon, AMC, Tulio. I've never played Tulio. EWZ, 42 IVR. All right, go back. Let's go back to the 1 minute chart here. And yeah, so we rejected the trend line. We are coming back down towards this Fibonacci level. US dollar is popping, that's good. Tesla is really struggling to get above 132. Really bearish on Tesla here, the market. I do have 3 of these SPY puts I can always take profit on and then reposition. All right, I'm gonna BRB. All right, so what's going on? So we're down to 4,000, back to this level. Looks bearish, honestly. It looks pretty bearish.
For the goods is now down within.
Credit Suisse. Accounts up a little bit for 6.3. Take a closer look. What's winning and what's losing? This one's good. This bearish play I opened just yesterday is doing pretty good. J Powell has COVID? Why do you think so, Jack Spice? I didn't hear that anywhere. Maybe he gets sick, someone else takes over, and then markets change. All right, let's look at AMC here. $17. I wonder how much is 3160 divided by 365. So all I need to do is make $8 a day and it pays for the fee of holding it, right? So I can always close this and it pays for like 1.5 days of holding this short position. Such a weird way to go about it. Here, let me focus here. See what I can close, what I have. That's good to go. This Netflix position, I might want to close. Bears incoming, oh yeah. Take a look at this tweet. Whoops, what did I just do? Damn it. Okay, I think that's fine. Let me reopen that. Chair Jerome H. Powell tested positive for COVID-19 and is experiencing mild symptoms. Chair Powell is up to date with COVID-19 vaccines and boosters. This is probably bearish, guys. I think this is pretty bearish. Short everything. Just kidding. But imagine that the market takes this as a signal to just sell off like crazy. Good thing AMC doesn't have dividends. Looking at my winners, my losers. Biggest loser of the day is actually Apple. Well, if you count AMC, but we're not going to count this. It's part of a package. Apple, but I did roll up one of the puts, so it's fine. I'm up to a 130 put, so that's kind of risky. I'm actually negative delta now in Apple. So that's going to help in case we rally, but if we sell off, that could be risky. I am up quite a bit on Apple year to date, so I can take a loss, but I don't want to take a big loss on it. So we'll see what happens. I can always just close that entire position, and then what's going to happen is I take a 190 loss, but I have a 560 profit already. So maybe it's worth it.
Be more later on. Thanks for joining us.
Inflation hits corporate earnings.
And what does that mean for you in terms of pricing?
So I love that chart, and we track that because it tells you whether people are oversupplying or undersupplying the market. And right now they're undersupplying the market. And so you want to be an investor or provider of liquidity when that's happening. The good news, I would say...
Wait, this is a good one.
We think we are in a more of a stock picking environment, and we do think there's going to be some real winners at the stock level, okay? But the macro market is suggesting that the index level is...
Short it all.
Yeah, finally, Mike, on that sort of subject.
Oh, 406.6. What's going on? Are we selling off? My account's going up. Dollar's not even going up. Oh, we went below 4,000. This is good. I can always just reset. Just close everything and reset. Because I am near my all-time highs. Where's ZQ? ZQ still a loser. Tesla's coming down. Tesla is visiting its lows. Where's Apple? Apple is still elevated. Tesla is more bearish than anything.
Mike, always good to have you join us. Thank you.
Thanks, guys.
Meantime, looking at Bitcoin and feeling some deja vu, back above 21K, and hereby recouping all...
Where's MSTR? MSTR's down. That's why I am doing better now. Holy shit. But now my other leg here is losing, but that's fine. This leg is so far out of the money that this is good. All right, MicroStrategy selling off was good for me. Whoops, my bad. I'm going to consider opening just a really small long position on MicroStrategy. Bitcoin is down now. Yeah, Bitcoin lost $200 from the highs. Maybe it's time for the continued bear market on Bitcoin. Look at this sell-off on MicroStrategy. Wow, 6%. Crazy. Okay, let me just see here. Maybe I just buy just 10 shares. Let's upside hedge this. Okay, so we got 10 shares on MicroStrategy. So if we go back up, at least I'll take maybe $80 out of it if we do pop again. It's a bit of a hedge. But now I have a feeling the downside is going to get challenged. The downside's only down by 16, or no. Downside is down by $50. That's fine. Tesla is selling off 129. Maybe I shouldn't have gotten these. It's only 10 shares though. It's gonna happen. What's the worst? I do have the opportunity to make another 400 bucks here. So we'll see. Hedging the upside here with MicroStrategy. Coinbase might be selling off too. Yeah, Coinbase is selling off. So my upside risk on Coinbase is looking better. I'm at 406.7. This is good. I'm $200 from my all-time high, which I hit 2 weeks ago. But I want to consider here, I do have downside risk on Coinbase. It's really far out of the money and it's hedged with a ratio spread. But I think I had another Coinbase put that I sold. Yeah, this single 35, actually 2 lot 35 put. So I have to keep this in mind as a potential loser if things sell off. But time decay will help. If we stay range bound or we go down slowly, time decay is always to your advantage here. I have a lot of negative Vega. Negative 880 Vega. I have positive 850 Theta. So Netflix looks like it's selling off. Maybe I'll just get rid of this because earnings is coming up. I'll take the profit here on that naked put. SPY, NASDAQ negative, nice. And maybe even just close all my Netflix positions. This one is giving me 77 extra dollars to close. Maybe just close it all. If I can get a good fill, I'll close it all. But I might not get mid-price. We'll see. If I can get mid-price, I'll close it all. Take profit. I've realized 650 today. That's good. I'm realizing good amount of profit daily. If I look here on my charts, let me go and do date graph. This is the one I want to look at. So yeah, that was yesterday. Yesterday I realized 806. On the 12th I realized 4600, although this is not a full 4600. It's more like 2000 because I closed a single leg of a complicated position. But yeah, in this unrealized, I took off RSX because RSX is making it lopsided. There's a lot of unrealized gain that I can't close. So without RSX, this is my unrealized gain. So just keeping track of this is nice. There we go. I've always liked statistics. I used to be good at it in uni. 406.8 is looking good. I am $100 off of my all-time high. And then I'm going to consider here balancing things out. If we're going to go bearish, I might want to remove some of my downside risk just so I benefit more from a sell-off. Okay, let's go back to SPX here. 3989, we're negative on the day. Should have gotten that put here. I could feel it. Like once we hit up and then we came back on the trend line, I'm like, this is good risk reward to buy a put. And I didn't because I always get burnt on SPX 0 DTEs. But the one time I should have done it, my intuition held me back. Whatever. There's plenty of opportunities to make money. 10 shares of MSTR. MSTR got crushed. It was at 240 actually, and it just got crushed $15 in an instant. Something must have happened. Let's look at the calendars here. Was it the Bullard speech? Bullard was at 6:30. 7 was retail sales. Yeah, there's nothing recently. Crypto recovers FTX losses. Let me look at ZQ. ZQ is still losing on it. Tesla's pop in. Let me look at my Tesla position. This position isn't really nice. I would close it if it was green. These ones are not selling off. Let's try to lower the price here. Okay. Alright, close these. So I've realized 1,300 of the day. And yeah, Netflix was a good one. That's an extra $400 plus on Netflix. $500 of Netflix. Boy, you won't play anything Tesla? It happens, man. You get squeezed out, and then you want to go back in. It's the worst feeling, I swear. That happens to me all the time. You gotta always position yourself so that you can't get squeezed out. Like my MicroStrategy position, I sold a 300 call, but if I sold a 250 call, I would have been squeezed out early. So I was able to hold it just to avoid that squeeze. The squeeze is the worst when you know that it's gonna go back down, but you keep getting squeezed till you have to like capitulate and close it. It's the worst feeling. But like you can avoid getting squeezed by buying really far out of the money, waiting for good entry prices. Like 138 was a good entry price here, but it's really hard to, it's easy with hindsight to tell what's a good entry price. But when you're in the middle of it and there's like fog of war and you don't know which way things are going, it's like extremely difficult to get a good entry price on anything. And just being able to wait and be patient is the hardest part. It keeps selling off. Look, we're back at this level here. We're reaching the next Fibonacci here. And I think yesterday we weren't able to go much below this Fibonacci line. Yeah, this is the lowest we got yesterday. So this is like support from yesterday. And we're going to go back to CPI levels. CPI lows were here. This was the CPI lows. This area here. Actually, no. Let me see. No. CPI lows were here. Or was it? I'm so confused. No, it was here. 39.40. That was CPI here. Yeah, 12th. CPI lows. Or was it? No, it was this. This was CPI lows. Okay. So 39.38 CPI lows. Then we rallied back up, back down, back up. That's what it looks like. JPOW getting COVID might be the dip catalyst. It could be. It definitely could be some kind of weird indicator for market makers to sell off. The dollar isn't pumping as much as I want it to. If the dollar could pump and I can get out of that position, it'd be nice. I'm approaching 407k, which is nice. And I need to keep track of what positions I should close. MicroStrategy keeps selling off. I might consider closing everything MicroStrategy related, because I have a feeling now I'm going to get squeezed on the short side, on the put side. That's only $80, and this I'm up 200. Maybe just get rid of this long position, but I'm down 40 on it already. This could easily end up in like a $300 loss. Oh, it's only 10 shares, but this thing moves like crazy. I learned my lesson early to only buy small amounts of this, or short small amounts of this. $50 on this already. I might just close this and then try to profit off of the short premium. We'll see. I'll just keep it for now. It's only $50 and it's acting as a hedge. Take a look. What else is there? AMC is down 617. Damn it. I have the 6 put, AMC 6 puts. Where is it? I might consider closing this in case we sell off. Small profit. This pays like 1 day's worth of interest. We'll see, because if it gets called out and then we keep selling off, then I'm gonna lose on this one here and this one, and I'm not gonna have the short shares to benefit off the sell-off. So it creates kind of a tricky position here where maybe I just close all my AMC positions. Yeah, it keeps selling off. We're at 613, 612, 611. What if I close it and I just roll it to 550 next week? We'll see. It's not the end of the world. Whatever happens, I can always close my AMCs. Dollars pop in. That's actually good. I'm at 406.9. Gonna approach. This is my all-time high. We're gonna approach 407K now. I just need the dollar to pop more. I think things are switching in the market and we might end up being in a bear phase. So I gotta keep track of my deltas. I want to keep a negative delta. This 370 put is starting to look negative here. So I gotta watch out for that. This one's looking good. AMC, Lulu's selling off. This 310 put is actually down a lot now. Maybe I rolled that up too quickly. Yeah, this is probably not a good position right now. I don't want to close it at a loss though. You're getting IV crush, really? The VIX is moving up? VIX is moving up, yeah. You went long options, is that why? That's why long options is hard, because you can get IV crush real quick. I think I'm good. I think I'm fairly balanced. I just feel like I played this morning wrong with like knee-jerk reactions, especially on Lulu. But I think I'm good. This one will benefit if we sell off, but I need some time decay on this one. We're selling off too fast, so I'm not getting any time decay here. I think it's fine. I think I'm balanced nicely so that if we bounce, I benefit. If we sell off, I benefit. I just got to keep adjusting and staying on top of it. Trying not to lose much. ZQ is coming back down. That's good. Bido. This is a triangle I sold yesterday, and I was hoping for it to be more profitable, but we need the Bitcoin to sell off a little bit, and this one will be profitable. I sold all my Netflix, so that's good. I might want to sell this downside on Meta just to reduce my downside risk and take profit. See if I can get mid-price. I feel like downside risk, if I can take profit, I take it. Silvergate is selling off. That's good. These puts are safe. I want to maybe wait till Silvergate goes back to like $10 or below 10 and then sell puts on it. AMC's back up. I can consider closing this AMC $6 put and then collect a bit of premium. It's going to help me pay for the interest of holding the short shares. Let's look at markets. Markets bounce off this Fibonacci here. So dollar also reverted here, back down. But I have a feeling it's going to be time for the dollar to shine a little bit. The dollar's been a little bit depressed here. A little bit too depressed. So maybe it's time for the dollar to go back to this range, 135, 136. And for the markets to go back down also. This would be a nice $1,000 if we make it to 136. It's going to make up for any losses on my short positions. But I want to start considering scaling down on my downside risk. Especially if there is profitable plays. Yeah, you see this Microsoft, I should have closed. I knew I should have closed this and I didn't. So that's a 225 put. That's kind of risky to hold with the way we're selling off. Pretty close to being at the money. The extrinsic value is going to keep going up as we sell off. Maybe with Microsoft what I do is I just short 25 shares. That might be the play with Microsoft here. Maybe just short a few shares of Microsoft. Maybe what I'll do is I'll watch Microsoft instead of Tesla and maybe consider shorting in case we sell off. Stated nearly 9 out of 10 COVID deaths are people over 65 and JPM is 69. Yeah, that is a factor, definitely a factor. I mean, the odds are really, really low for someone as connected as him to die of COVID, because they have access to all the latest medications, right? Like, that's why President Trump, who was old and eats KFC every day, didn't die of COVID. It's because he had access to the best medical care, right? So usually these people are almost immortal. It takes a lot to kill. To kill a billionaire, it takes a lot. Or someone connected in politics. You really need like a new strain or something to take them down. Dollar's coming back down though. Caterpillar is coming back down. That's good. It's kind of a new strain, you think? Oh yeah. But even if he does like pass away, the market will be, there's gonna be volatility, but there's no way to tell whether it's gonna be upside or downside volatility. I can close this Q put in case we sell off on the Qs. That's gonna reduce my downside exposure. That might be good to do. Just close that one since the Q sells off fast. This one I'll hold. There's 3 contracts here. He's got loads of money. Yeah, it's hard. They have the best medical care, right? Okay, let's see what's going on here. Sell US, buy row. I lost my CNBC feed.
The trade right now, Alex. How long it continues, I don't know. But you've got 2 really strong.
I'm gonna open my CNBC feed.
China and the weather.
Yeah, but you mentioned ASMI, and I get that point, but then you get Citi saying that they see the U.S. semiconductor estimates are going to come down further because they're driven by weakness in personal computer, wireless, and consumer end markets. And I appreciate that might be a U.S. semi story, but that's where I feel like I wonder how much we're diverging. Let's stay on tech for a second, Guy. So Chuck Robbins, Cisco's CEO in Davos, talked about layoffs earlier today on ProBreak.
That notion, though, that Adina Friedman
Dollar's coming back down. Microsoft is going up. I'm going to close this. Alright. So 1.5k of realized gain. Really good day for realized gains. Just got to make sure I don't get any big losers. MicroStrategy still down.
I think for them it's not so much about the cost of capital, it's about the opportunity cost of capital, right? Every dollar you spend on something good is a dollar you don't have to spend.
The way we rejected that 200-day moving average trend line is extremely bearish. Like, we rejected that violently. Very bearish. Might be a sign of things to come, right? Maybe we short 25 shares of Microsoft just to be safe and just see what happens. If it goes up, I might just close everything, all Microsoft positions. That might just help reduce how much risk I have to the downside on Microsoft. Just make it a bit safer of a position. It's only 25 shares. Maybe sell a call ratio spread on it too. Like a far out of the money, 58 days out, call ratio spread. Although the prices don't look good. Yeah, I don't see any good ratios here. Maybe something like this. 18 cents, so that is 140. Okay. An extra $140 in case we sell off. See if we can get mid price on it. 406.9 again. AMC selling off. I feel like this position should be closed. When you do ratio spreads, you sell far out of the money. Yo, Billy D. Yeah, I do. I try to. Not always, because oftentimes the premium is shit if you go far out of the money. But the amount of premium I get is important. Center rally confirmed. See Finviz. Festive colors. Oh yeah. Let's check it out. I try to. It depends how defensive I want to be, Billy. If I want to be super defensive, then yeah. If I want to be aggressive, you get a lot of control, right? Let's take a look here. Whoops, where's the main screener? Hold on. It was here, yeah. Festive colors. Yeah, it looks nice. Red and green. Mixed bag. So let's go back here. Alright, Microsoft is selling off. Maybe we close this if we can. Just to have more upside risk on Microsoft. Always take a big hit on the bid-ask spread though. Okay. On these ratio spreads. But at least now my 407k, nice. I just hit a new all-time high. But it's hard to hold it. We're gonna fluctuate here. But I need to make it, whoops. I need to make it to 412,000. That's my monthly goal. Okay, dollar is pumping, that's good. Microsoft is selling off.
Microsoft doesn't play in mobile. When you look at this letter from Nadella, that line about platform shifts that Dee brought up is really important.
Candy Crush makes a lot of money. Don't underestimate the power of the older people on iPads.
This is the second time. These are the second biggest layoffs.
Boomers on iPads.
And he's saying there's a platform shift coming. Now, is he going to fight the next war, AI, whatever it might be, or is he going to?
Okay, Microsoft is hovering here. I do have the 25 shares short, which I'm gonna hold because I do have a downside risk on Microsoft. This is upside risk. This one's already profitable, 20 bucks profitable. I opened this a few minutes ago. Alright, my delta is negative 13. I have a lot of red positions, but most of them are fine. This Microsoft position, at least it's a ratio spread, but it's not looking great. Caterpillar is looking good. MicroStrategy is still selling off. Oh my goodness. You know what? I'm closing this short 10 shares, and I'm just going to try to make up for this loss by making money off premium. This was a huge change here. That was bad though. I took a hedge at the worst time and I lost $84 on it. But now I might need to end up hedging the downside risk. It's crazy. It's fine though. Downside risk isn't as scary with MicroStrategy. Coinbase is down to just gotta manage the losers and I should be good with this sell-off. Dollar's coming back down. Microsoft keeps going down.
And meanwhile, they've got to worry about the Azure business, which analysts are increasingly getting a little worried about. Neil and Steve, we spoke to the only sell rating, the analyst behind the only sell rating for Microsoft yesterday, and he said that most people do see Microsoft as a company that can weather the storm, but it does have vulnerabilities, some of which could be exacerbated by this.
It's crazy how quickly things go bearish, eh? All of a sudden. Everyone was bullish yesterday, and now people are giving sell ratings on Microsoft out of all companies. It's wild. Kramer was telling everyone to buy the markets yesterday. There's a huge rainstorm here too. Looks crazy outside.
He's excellent at working in the government. It's a huge government contractor. It's good in this country. I think
Inverse Kramer, I know. KEGW. I gotta add those BTTV and those emotes.
A little bit, but there's a reason they gave themselves 18 months to close this deal. I think they saw all this coming. The big question for me, even with the cloud stuff,
Microsoft is coming down. As long as dollar goes up, it counteracts any downside risk that I have. It was a bull trap yesterday, Microsoft, because of the whole like laying off employees. Big bull trap. I think a lot of people bought calls yesterday because of that.
It is. And then there's a profit question. Even if you can't grow the top line, if you can get better margins, that's always
Yeah. Maybe I'll just take the L on this. Maybe just take the $60 L and then forget about this Microsoft put. Because if I put it all together, all the Microsofts, so I got 4 Microsoft positions. There's winners, there's losers. I got 6 Microsoft positions. 5. So there's 2 winners, 3 losers. And then year to date, my Microsoft has been a winner. So it balances out to being a winner year to date. But maybe just have to be a little bit patient and it should be fine. I think the layoff news will bump the stock up. And days to expiry. This one only has 9 days to expiry. So theta decay will be pretty heavy on this one. So I might be fine actually. I might be fine to just hold. Keep the short shares and just hold. AMC, what's going on? Is it selling off? Damn. Okay, so I gotta consider what to do with AMC. Selling off after I got the short puts. Maybe just take the L. It's only a $31 L on the short puts. And just roll it down to next week and do a $5 put for next week. But that's gonna be a debit. I'm paying a debit for that. That's not even a credit. So maybe I just close everything AMC. Just close it all and then just, I don't know, avoid similar positions. I don't have to keep it. I do have profits, I think, off of, yeah, that's a 10 lot, yeah. 3, 4, 5 positions. What if we close here? Close at midpoint. And just close it all. Just reposition here. I don't need this extra AMC stress because it's hard to manage, and I have the fee. I'm paying this fee to hold it. And I'll take a small hit because of slippage. I'll probably take a small hit on my account size, but I think it's worth it so that I don't have to stress and worry about such a inconsequential position. Let's see what happens. It didn't fill. I gotta transmit it. None of it is filling. I wonder what's happening. Super complex. I'm taking a hit, am I? I took a big hit. I don't know how I took such a big hit. I took a $300 hit here. I'm gonna check later to see what happened with this AMC business because it ain't looking good, honestly. It's not looking good. I think opening that position and exposing myself to the exercise risk was a huge mistake in hindsight. And I still have some risk here for getting exercised. Actually, I didn't. I closed the wrong ones, I think. Because this is the one I was supposed to close. I was just not careful, I think. This is the one I was supposed to close. Alright. So I went from realizing 1.5K to realizing $200. No idea what happened here. So now I still have this. I don't know how I still have this. This makes no sense, honestly. AMC just totally ruined everything I was doing, and now I'm realized negative 500. No idea how this happened, but I got rid of all my AMC positions, but somehow I lost a lot of money doing so. All right. So I'll just mark this off as lesson learned and avoid getting exercise risk. But green trades this week, nice, man. I've mixed bag for me, but at least I got rid of AMC. AMC was causing some issues, I think, long term, so I got rid of that. Now I gotta focus on winning trades. I gotta recalibrate here. This whole AMC thing just threw me off. We're selling off though. I can take tiny, super tiny profit here. Dollar keeps going up, that's good. Where is ZQ? I'm gonna have to analyze everything I did with AMC and see if it makes sense. Because it doesn't look like it makes sense. I shouldn't have closed the Iron Condor. I closed it at a loss. Yeah. I think I got exercised again. I think that's what happened. No, I didn't. Do I still have the Iron Condor? I don't. AMR was a really good position, opened yesterday. That's a new company that I'm trading. But the company's been around for a while. But it's a good sector to trade. It's metallurgical coal. Coal used to make metal. Alright, that threw me off. I'm at 406.6k. I had realized so much gain, but now I don't have that anymore. I just got scammed. Honestly, I just got scammed by market makers. You gotta avoid getting scammed. With options, no matter how good you are, you can always get scammed. Should have maybe closed them one at a time or something. I don't know. It would be cool if there was a way to prevent your counterparty from exercising. That'd be awesome. Okay, Lulu's down. Actually, Lulu is a position that is poorly managed now. If I look at this and that, 124 versus 165, poorly managed. This expires in 9 days though, so it's kind of a diagonal, but it's coming down fast. That's the problem. It's coming down too fast. That it's taking away from any upside here. Yeah. The deltas actually give some benefit to this one, but still, it's not looking that great. This one is losing all the gain that it had this morning. Is that upside? Hold on. Let's look at Lulu. Okay, this is upside and this is downside. Maybe open a naked call. Just short a naked call on Lulu. Lulu has a lot of bearish momentum, but the premium isn't that great here on these naked calls. But maybe just short term to have one to counteract the short term loss on that put. It doesn't have earnings till like way in March, I think. All right, so that's gonna help counteract any losses from Lulu selling off too fast. Yeah, AMC was bad. That was a bad play. So you gotta avoid selling anything in the money with almost any stock, because at a certain point it makes more sense for them to exercise it than it does for them to hold the call option, and they exercised it at a good time. What's going on with Apple? Am I gonna become a loser with Apple here? Apple deltas are positive now. So we'll see what happened. I might just close Apple. I am up on the month on Apple. I can always close it and then just reposition differently with Apple. Apple has earnings coming up, I think. Apple has earnings in February 2nd, yeah. But the dollar keeps going up, so that at least is good. Microsoft keeps dumping. I can take some profits here on Microsoft, $25. Yeah, this 275 call that I sold is up 25 bucks. I thought I had more upside on Apple. Yeah, this one is also up. But then the put side is down. Yeah, put side's down. MicroStrategy is still selling off. That's good for the other position here. Up 270 on the day. I think I'm good. I think I'm good to hold. My theta number came down by a lot. It was at close to 1,000. So maybe I gotta add some theta now. I think the AMC, closing AMC messed up my theta. Closed a few other positions too. But these puts are gonna look better and better. I have a couple of puts here. The more we sell off, the more the deltas are gonna increase. And yeah, there is a chance that I get 5,000 profit if we hit 3,700. But if we hit 3,700 within 2 days, I think the market has bigger issues. So that's highly unlikely. But I do have 2,500 that I can hit if this sells off. And I have 30 days for that. Microsoft got a small bounce here. Maybe we take the profit here. And then we will wait to re-enter. Yeah, 20 bucks. Helps. Anything helps. Yeah, you see it's pumping now. Dollar wants to come down. This might be an area to get rid of my dollar, because I'm only down 170 bucks. But no, I think the dollar is gonna get its day in the sun. Where's ZQ? ZQ is still down, but it's getting closer to being profitable. Where's SPX?
And Paramount, they are also starting to follow this.
All right, SPX looks like it's pumping. Dollar's coming down. Microsoft is going back up. It's good. I'm glad I got rid of AMC. It was messy to close it, and I went from being highly profitable on the day to losing money on the day for some reason. But at least I learned my lesson. I'm just gonna avoid overly complex positions where you can get assigned, exercised, and because that's a good position. Overall, the position is good if I couldn't get assigned. It was a low risk, high reward type of position. But the fact that I was assigned makes it bad. And I might want to revenge trade and do something on AMC. But I'll wait till it sells off more. And then I will maybe sell puts on it or something. You really want SPY puts? It looks tempting now, eh? I don't know why I want to do this again. This is what caused me all the problems. Selling at the money. Yeah, because we can rally and then they can exercise again. And then it's going to end up being a loser. That's what I did last time. But I did it like way out of the money, so then you're more likely to get exercise. It's not worth it. I think these kinds of out of the money iron condors are better for index stocks where you cannot get assigned. So if I look here, I might want to open one because I do currently have an iron condor, but it's expiring on the 20th. But maybe we go to Feb 17th and then go back to 3700, which is the area that I have my other iron condor. And then let's do $100 wide. See how much it gives us in credit and see what the max gain is. So this gives 9,200 of credit. So this means that max loss here is 700. And if we sell off and get closer to 3,700, then I should be able to benefit off of it. Let's go up and see. If we go up to the current price, what are we at? We're at 39.67. It's pretty far. So if we go to 39.67, then yeah, that would be $1,000 profit. So if immediately we sell off to 3,700, that'd be $1,000 profit. But if we do it slowly, that's more profit. But the problem is that if we don't, then the max loss is $700, which is a lot. But this is one way to make a bearish bet, receive credit for it, and then hope that we sell off, right? The max loss is 700 though, that's the issue. But the max profit is 9,200, 9,300 if we sell off slowly. So it might be a way to add some benefits to a sell-off. So we got it. So we got the credit for it. Now if we sell off, we'll be able to close it for a profit. So I opened one earlier this month, but it didn't pan out because we didn't sell off. We rallied instead. So I'm down 300 on it. And I only have 2 days, so there's no way I'm closing this at a profit. But now I have a new one that if we do sell off, somewhere here, if we do sell off, it will be profitable, this one here. So that's going to give me some negative delta, which is good. It's going to also give me some theta because you earn theta here on this iron condor. Actually, currently it's negative theta. But the theta can switch positive at any time. Okay, Microsoft is selling off. Maybe I shouldn't have taken profit there. Dollar keeps going up though. The dollar going up is great for me. It makes up for any losses on puts. I gotta analyze and see which positions I might want to get rid of. Maybe get rid of this Google 105 call. There's no way we're gonna rally to 105 at this point. I've given up on this call. Take some losses there. Nvidia 140 put. This one isn't looking so great. And I also have, okay, this is on the call side. I might want to double this up, get a second one. Got the Popo here in my neighborhood. That's an ambulance. Doubling this up, a little bit risky. Let's look and see what are the bigger losers here. MicroStrategy is looking good. This one was a huge loser yesterday. Microsoft, this one isn't looking so hot right now. Yeah, Microsoft down 200 on it. I was a little bit too bullish Microsoft yesterday. This one I'm up 27 though. That ain't much. Lulu's back up a little bit. That's okay. I needed Lulu to slow down with the sell-off. Apple is holding up, but Apple, the story can change anytime, and we can be back at 128 in no time on Apple. I think IV is going to start pumping, and I can start closing positions before the IV pumps too much. Because if the IV pumps too hard, then a lot of these positions will end up being big losers. And I think because I'm near my all-time high, and I've already profited on a lot of these, I can start just closing them. Just close them. Just realize some losses, but get rid of potentially bad positions so that I can reposition later with a better IV, better VIX, and overall my account's looking good though, so I don't mind closing losers with my account looking good. I just gotta make sure to redeploy my capital to earn theta, but I want to deploy capital where I'm not at risk. I'm not in as much of a risky position. And waiting for the VIX to spike and for IV to go up is good. Those spy puts would have been nice. Yeah, we kept selling off, eh? Look at that. You know what? Buying the puts here, I considered it. Would have been great. But I think markets are puking here, which is good. We've all been waiting for this. But I'm not positioned as good as I was hoping to be because I opened too many short puts yesterday. I've closed a few of them though preemptively, so that's okay. I opened short puts yesterday just to hedge against a rally because every single pundit was calling for a rally. So predictable. They all do like media tours. You know, they all pay for airtime to call for a rally and then they just dump on everyone. So predictable.
Becoming far less.
Let's see here.
Quarter earnings miss as banking fees came into light today. Deep, all right, John?
All right, Carl, staying with the markets, wholesale prices falling sharply for the month of December. That news not enough to keep the NASDAQ in the green today, though. The index looking to break a rare...
This one is already profitable. If we keep selling off, this one will be a nice winner. I like this iron condor. How's my spy puts? Spy puts. Maybe I should have closed it. Yeah, they're losers now. $88 loser. But it's fine, I'll keep it. Because I can gain a lot from a sell-off. This one is okay. Better than Apple puts. Because SPY doesn't sell off as fast as like a single stock like Apple.
No, that's exactly right. I mean, the fact is that you see it again today, hawkish speak despite falling data. They're still on their very much higher for longer narrative, and that will ultimately risk a recession unless they flip-flop at the right time. My sense is that rates, or rather inflation, is going to continue to come
There's a thunderstorm here.
Challenge their hawkish narrative. What we've seen since September and October is a dramatic rollover.
Tesla's down quite a bit.
The dollar, which were obviously headwinds in 2022, but are now turning out to be tailwinds. So despite all the hawkish talk,
Profits and they're up. Wow, that's crazy. More to come. Yeah, take your time. It's not a race. If you can take any profit, that's good. But yeah, that's a big increase. Wow. It's funny. You can tell when the market wants to puke, and this morning was one of those moments where you can kind of tell the way Tesla was moving.
Well, I don't know why everyone is insisting on that. I mean, the fact is, we are tightening the fastest tightening path to the highest debt construct ever, and we're seeing key economic data rolling over. Look at the industrial
Microsoft
production
bouncing a
today.
bit.
Yesterday we had the New York Fed index dropping dramatically, and today also retail sales.
The dollar is up a lot.
The challenge is to
Let's go. I want to see more of a dollar bounce. The dollar's saving me today. If it wasn't for the dollar bouncing so hard, I'd be down quite a bit.
taken hold further. So I think there's a really narrow window, and the Fed ultimately will be challenged.
MicroStrategy's down to 210. What a reversal.
The tailwinds I just mentioned.
Crazy.
We're seeing evident in the market action, specifically in the internals. What we saw this week, well, the S&P today, by the way, the reason we're seeing a pullback now is
How's Bitcoin? Yeah, Bitcoin is selling off hard. Holy smokes. Good thing I sold all my Bitcoin. That means I'm going to be able to re-enter. I'm going to be able to re-enter my Bitcoin positions much better. Yo, Bill Dash, what other news do we have today? We have a few Fed speakers, but that's it. Let me just check. Just a few Fed speakers, but it's hard to catch them live. We just got to watch the tickers and see Fed Harker, Fed Beige Book, and long-term flows, overall capital flows, but that's at close, market close. So basically, Fed speaker and a Fed Beige Book, 11 a.m. So that's in 2 hours and a half. So not much, but we have a lot of action. Action is what we want. We want volatility. Volatility is good. But it looks like Microsoft is bouncing here. Maybe I'll pick up another short here. Wait for Microsoft to bounce more.
4 months in a row last year, into even this month in January, to break the uptrend, and they haven't done
Agreed.
so.
Thanks, man. No problem. So let's see. What are we going to do? Dollar's up. I can always close my dollar position. It's almost a scratch. But I think with the market selling off, the dollar will get a huge bounce. The dollar may end up hitting 135 easily. Easily. We just need another bounce. This is resistance for the past few days. For the past few days, we haven't gotten past 134.40. Microsoft is bouncing. I might consider just a short here, just 25 shares short. Wait for a bigger bounce on it.
Now, we're in the negotiation phase now, so we're going to have to see how this plays out with earnings and the Fed meeting in February.
It's bouncing. Looks like SPX wants to bounce too.
Meantime, one potential reason for these session lows here, some headlines from Cleveland Fed President Hester telling the AP a few moments ago that emphasizing that while inflation is cooling more,
Dollar's coming back down. How's ZQ doing? Is my ZQ position still losing? Okay.
she does not vote in monetary policy this year, D, but in her words, I still see the larger risk coming from tightening too little.
Yep, and as you mentioned, indexes at session lows, the NASDAQ could break that winning streak. After the break, we're live at Walmart headquarters.
Alrighty. So far so good. My account is looking nice. I am near or basically at my all-time highs. I just gotta manage from here. Make sure I don't make things worse. MicroStrategy selling off was good, but it's too bad that I got the 25 shares to hedge. And it's too bad that I got this short put. Where is it? To hedge. Because now the short put is down. But it might work out. It might work out. It might be fine. Bitcoin selling off is good because I do have my Binance account all cash right now. I took profits on Sunday. And if Bitcoin sells off, like a big sell-off, then it's going to give me a chance to enter a new short BITO position, short put position on BITO. and it's going to give me a chance to also buy Bitcoin much cheaper and wait for the next pump. If I can get Bitcoin at 15,000, it would be great on my Binance account, and then just wait for the next pump and take profits. I did a combination of Bitcoin, Ethereum, and Matic. Those are the three that I had recently that I took profit on. I'll do the same thing, like 40% Bitcoin, 40% Ethereum, and 20% whatever altcoin is fashionable. At that point, Matic was popular, so I gotta find out if it's still Matic or if it's some other altcoin, because you don't want to pick the wrong altcoin, because some of them don't do well. So Microsoft, dollars pumping. Wow. Let's pick up another short Microsoft. Just 25 shares. And then 4069, that's good. Take a look. Lulu is at 319. I opened this way too early. Too close to add the money. But it does expire in 9 days, so there's a lot of theta to burn here. Whereas the long leg doesn't have much theta to burn because it's 120 days. Okay, what else do we have? I took profits from all the winners, so I don't have much to realize in terms of gains. At least I closed all the AMC mess. Left me with a really bad realized amount for some weird reason. I don't know how that happens. Where just by assigning me, I end up losing so much money just by exercising the stock. No idea how that happens. Whatever. Just chalk it off as lesson learned. Microsoft is pumping here. Dollar's pumping too at the same time. Dollar is at 34.40, which is resistance. SPX wants to pump here. Microsoft pumping isn't too bad because I have the short legs here. I'm down 89 on here, down 76 here. So pumping a little bit is okay. And some of these expire in 9 days. So there's a lot of theta decay here on this one. But I do need to pick up more theta. My theta number is 600. I have room to add. But if VIX is going to spike, I might want to wait till the VIX spikes before I add. Dollar is pumping. It's a good time to be long dollars, it seems. Today's been a good day for the dollar. Better than the past 2 weeks. Microsoft is trying to pump here. Let's see, what do I have? Microsoft. I have the 275 short call. And I think I also have a call ratio spread. Yeah. So I do have a upside risk. So I don't need to open more of that. ZQ is still down. Tesla, looking better. I was losing money on this earlier. What's up with this music?
Impact, but it hasn't yet. And the reason we've developed almost a
Walmart?
A two-part economy.
I never trade Walmart.
Continue to spend not only on cybersecurity but tech more broadly. He also emphasized with some of that layoff news that we got from Microsoft today that Walmart is actively hiring, especially when it comes to cybersecurity and other tech roles. Of course, though, that is dependent on revenues continuing to increase. That trend, at least.
Dollar is pumping. High of the day.
But as of today, the company doesn't have plans to do any layoffs when it comes to their tech roles. And again, they are actively.
Everything's looking good. I'm gonna go grab myself a snack, and I will BRB.
What their enterprise spending is going to look like over the next 12 months.
Yeah, the story's changing fast. Up next, despite the cautious commentary and layoffs, one firm naming Microsoft as its top pick coming out of a potential recession.
Resort hotels. people after the pandemic.
How do I decide what altcoin is fashionable? I listen to people on Twitter. Sometimes I join Twitter spaces that discuss crypto, and then I just get a good kind of sentiment of what's like cool, what's not cool, which ones are scammy, which ones are shady, and which ones to avoid. So that gives me an idea of which ones are cool, which ones are probably going to do well, and which ones are not. So when the FTX collapse happened, I was joining a lot of Twitter spaces to listen to what people have to say. And a lot of people were bullish on Matic. So I'm like, yeah, I'll get some Matic. And then I closed some of my Solana. Although Solana did pump, but there's a lot of negative sentiment regarding Solana. So I'd rather avoid it. I'd rather get something that people like and respect. And, you know, a coin that doesn't have a history of dumping, you know what I mean? Of rug pulls. And a lot of Solana coins have a history of rug pulls. So that's the main thing with altcoins, is that some of them are just known to be scams. And if you put money in it, you're kind of swimming against the current. You know, somebody's going to rug pull you. Okay, it looks like we want a rally here. Microsoft is pumping. Dollar's coming down. SPX is pumping here. And but I would only do like a small amount on an altcoin. Like, I think a good way to do it is 40% Ethereum, 40% Bitcoin, and 20% altcoins. If you do too much on altcoins, I mean, sure, you get a lot of beta. You'll get a lot of profit if you do it at the right time and the market pumps exactly when you get it. But if the market takes like 4 months to pump, you might just barely break even, or you might still lose money after a pump. Whereas with Bitcoin and Ethereum, you're much more safe to survive a, you know, prolonged bear season or whatever. Okay, I'm gonna BRB.
It is #1 recession pick for the long term as IT spending eventually improves. But what about if you're looking for gains today? He says to look no further than Oracle, SAP, or Workday. Joining us today, Bernstein's Mark Merdler joins us to talk first about Microsoft. Mark, thanks for the time. Reading the blog post, of course, we've been dissecting it all morning long. The layoffs aside, does the color that Nadella is giving us an indication of how the quarter may perform?
There are those that are arguing that he's telegraphing that it will be a weaker quarter, or that the guidance for next quarter will be weak. I'm not sure I necessarily believe that. I think a lot of what they're talking about is they're talking about shifts within the business, that they see this is an opportunity or a moment in time in which they need to shift around their resources, and that there are areas in the business that they're going to divest, where divest in this instance is not selling off a business, but move out of parts of the business, underinvest in parts of the business, or put parts of the business into some form of life support, because those businesses aren't really growing, and to put the resources instead to where the core opportunity long-term will be for the business. And so I think this is as much a signal of a very directed switch around within the business as this is some sort of big cut to hit margin or other numbers.
Right. Does it make you directionally less bullish on hardware, for example, and more focused on software?
Oh, I think that hardware is, I mean, they basically said it here, that hardware, they're going to shift around. Again, we don't know what that hardware means. They make a lot of different things. They make earphones, they make mice, they make, not just the Surface laptops. There's a number of things they make. And so we could see some of those products end of lifing and not continuing. But no, I think the big future in general is in software and cloud. because what happens is that the shift to software and cloud, they absorb the spending that traditionally went to hardware and other areas.
Right. Finally, well, talk to me about the long-term pick here versus the short-term picks on Oracle SAP. How do you divide these things by timeline?
I wish I knew. I'd be massively investing personally, which I couldn't do as part of Bernstein, if I could exactly call when that moment is. The problem here is the following. Many IT organizations have not been given full year budgets for calendar year 23. They've been given stub budgets, first quarter, first half, because the CFOs just don't know how bad or how long the situation is going to be. And so we could see quarters in which they look great and people think, we're coming out of the recession. And then the next quarter is worse in terms of IT spending. So it's tough to know. If you believe Satya Nadella, he thinks it's going to take 2 years till you see the acceleration in growth in IT spending. I think it's less than that. But I think it's, it could be a year before you've got that point in which things have got as bad as they could be and it's time to shift your investing. Near term, as you mentioned, I think Oracle and SAP and Workday, the downside risks are relatively low, especially in the case of Oracle, and the street isn't overly optimistic. They're, in fact, probably, I think, a little bit conservative in terms of what their expectations are, which sets Oracle up well. And then, longer term, as we're coming out of this, Microsoft's just a machine. The amount of IP, the amount of capabilities, the depth and breadth of offerings here, and the ability for them to take advantage when competing against competitors who are likely going to be wounded during a period of slowing economic times or full-blown recession.
That's interesting. Yeah, looking for share donors. We didn't really get to the optionality around Activision. We'll save that for next time.
All right, dollar is holding up. Microsoft is stabilized here. I had a chance here to take some profit. And what else is going on? SPX rejected the bounce here. Dollar's coming back down. My account's looking good. I don't have a lot of positions I can take profit on. Although this First Solar that I opened yesterday is looking really good. Sometimes, you just open position at the right time and you can right away make $100. A little bit of luck involved there. So let's take a look here. What else do we have? A lot of red positions, but theta decay will help. Some of these are bullish, so if we sell off, or bearish, if we sell off, I'll make money. BITO. What is this BITO? This is a BITO ratio, short strangle. And I'm surprised it's not profitable since we sold off. But over time, if we stay below $13, it's going to be profitable. Really surprised that's not profitable. It was at negative 25 delta and we sold off. Looks like dollar wants to sell off here, but we'll see what happens. SPX is coming up. This Fibonacci line might be resistance here. Super bullish candles here on BITO. Crazy. Bitcoin is rallying again. What's happening here? MicroStrategy is pumping again. So bipolar. Lulu's back to 320. I think it's fine. I just gotta find entry points for new positions and just keep this balance. I think this balance is good. Maybe open more bearish plays. Yeah, MicroStrategy is pumping again. And I took a loss on my hedge too. So is Microsoft. MicroStrategy is taking me for a roller coaster ride here with this price action. It always does this, I swear. Tesla is stable. AMR is back down a bit. Goldman Sachs is up after losing a lot yesterday. I think overall things should be bearish, but you never know. We're getting a bounce here. Dollar is holding up here, this 40 level, 34.40. Microsoft bounced off the lows here, but not by much, only by 30 cents. So just gotta monitor and then come up with some new plays to open.
Among everything else.
I think it's a classic example of managing your emotions, not getting too high, not getting too low. When prices appear to be breaking out or prices appear to be breaking down. I think fundamentally, when you look at the market today, trying to break out beyond 4,000, you have to ask yourself the question, do I know yet whether there's going to be a significant contraction for earnings? The answer to that is no. Why are we having the type of behavior, therefore, in the market that we're having? When you're studying a lot of the meme stocks, when you're looking at a lot of the non-profitable technology and consumer discretionary names that are recovering so aggressively, even when you're looking at crypto.
Bitcoin up like 20% in a week.
What you don't want to do is you don't want to incite the Federal Reserve, okay, with bad behavior in the market. You want a healthier market where the Federal Reserve can be comfortable sitting back and allowing the effects of their tighter monetary policy and the balance sheet runoff in 2023 to take effect. So I think from a fundamental perspective, that's the challenge that the market had today. And then on a shorter note, from a technical perspective, you know that I study momentum.
Yep.
It was very obvious, as strong a momentum signal as I've had in the S&P futures in at least 9 months. That was at the 4,005 level in the cash index. And what you began to see is the market continued to press higher and higher and higher, but it was losing the valuable components of momentum, like range expansion, like breadth. It was all beginning to narrow, and it's almost as if you have someone on a treadmill that's running, and you can see the heartbeat is beginning to go slower and slower and slower. And it indicates extreme exhaustion. It indicates exactly what we're seeing on the screen.
Okay.
The market's not ready to break out just yet.
Okay, so, you had David Solomon from Goldman out at Davos talking about, what he's hearing from CEOs softening about a soft landing. Bullard, I mentioned Bullard, prospects of a soft landing have improved markedly here. That's what he said today. The problem is he also delivered a bit of a reality check to people like Jim. He said the Fed should keep up the rapid pace of increases. 50 basis points would be appropriate at the next meeting. He wants to get to 5.25 to 5.5 at the end of the year to prevent a return of inflation. Of course, he admits that inflation is going down, but his issue is keeping it down. Mester piling on there, more hikes are needed, risks of tightening too little. What do you make of this? Because it seemed to upset the market a bit.
All right, dollar's going up and markets are coming back down. Interesting.
So I do think the chances of a soft landing are going up. I'm not sure that the market got hit down by Mr. Bullard or Mester. I think really, to me as a market participant, what worried me, what concerned me was retail sales. Pretty lousy. And on top of that, the Empire Manufacturing Survey from yesterday was just awful, plain awful. So I think about what Joe just said about controlling your emotions. I'm not going to get afraid. I'm not going to start panicking. I'm going to acknowledge that these data points are out there. But I think they are ameliorated by the fact that, number one, employment is high, meaning that consumption should continue. So retail sales should not be a continuing problem. Regarding the Empire Manufacturing Survey from yesterday, again, I look at supply chain onshoring. I know we get tired of me saying this, and infrastructure spending, and I see that supporting things throughout the rest of this year. So I acknowledge these data points that are a little bit troubling, but I see brighter skies ahead. And regarding the Fed and Mr. Bullard, all I would hope that they would do is raise 25 basis points on February 1st. That's what the market expects. And then be data dependent.
So Bullard suggested a 0.5% increase at next meeting. Interesting.
Once they've all gotten together and thought this thing through.
So that's probably what brought the market down.
Soft landing hopes are rising, but when the data's weak and Bullard is not talking meat.
Okay. So we got some clarification here. So Bullard is the one who brought the markets down.
You have those higher. You have those risks. There's no question about it. And from risks,
Markets started to dump right after this came out. Jerome Powell just got COVID. Crazy. Yeah, we noticed that right away.
Hungry for risk? At these prices, yes. And what that's reflected in is that I have about 3% cash in my equity portfolio.
Rates need to continue rising.
Look, we can make this very complicated or we can make it simple. The U.S. economy is the most important economy.
So yeah, the Fed speakers are bringing bearishness down on the market, it seems. Dollar's going up. MicroStrategy's back up. Crazy how I got squeezed out of that long. And now it's back up.
Plausible belief. We've mentioned those who are talking about it, and others are as well. We didn't mention their names, but it's starting to pick up a little bit of steam. Marko Kolanovic, JP Morgan, we cite him all the time when he puts out notes about the market. He says it's priced in anyway. We remain cautious on risk assets, he says, reluctant to chase the past week's rally as recession and over-tightening risks remain high. We believe that a lot of good news is already in the price in terms of inflation moderation or the potential for a soft landing, increasing our underweight in equities broadly. So why don't you take all of that and give me your thoughts, please?
Well, all of these market strategists have been very negative. I mean, by and large, it's been uniform. They've been defensive and negative.
Microsoft wants to come down. SPX is coming down.
Acknowledge that the likelihood of a deep recession may be less than they had expected. Those inflation numbers, the PPI numbers, I mean, they are showing some dramatic changes, and the Fed has to accept that these are real numbers and they're prices that are coming down. Look at housing and rents. So I think it's inevitable that there's an acknowledgement that there's a slowdown. We've seen slowdowns in durable goods, retail sales. Anybody who went to a store around Christmas saw that there were fewer people and they had less that they were buying and that the prices were all on sale. The software industry's been in a slowdown. Chips have been slow. You look at advertising, Google, Meta, all slow. So we're in that slowdown. And the question is, I mean, who cares whether you incite the Fed by buying? I mean, if the Fed is really reacting to people buying stocks, that's not their mandate. So stocks have been cheap. Many stocks have been cheap. They're selling for market multiples that have been, 10 to 14. If you look at some of the names like Meta or Charter names we've been buying. So I don't accept that you have to wait until it's clear that we've been through the worst of earnings for the entire market to make some choices and buy some stocks. Some stocks are expensive and other stocks are not. I mean, that's always the case. And, strategists have to, I guess, say either buy or sell. But they'll begin to moderate as it becomes clear that the Fed is going to ease back from...
All right, dollar's going up. SPX is coming down. Microsoft is pretty stable. Where's the 10-year? 10-year is still down. Where's the Fed funds? ZQ? I'm still down on the ZQ position. I can always double this position up because this could be a good play. It might flip in the next few days, maybe.
Suggesting that the economy is great and strong. And then, Kerry, you saying that the slowdown is undeniable. And I'm wondering how two people can look at the exact same thing and have come diametrically opposite views on reality. I mean, the economy is either slowing or it's not. It's the binary issue. One argues it's great, the other says it's slowing.
Who says it's great?
Jim.
Jim doesn't say it's great. He says that it's not in a recession. I mean, Jim, you should speak for yourself. I don't think he's saying it's great.
He didn't use the word great, but he painted a picture. He painted a picture of an economy that's really strong. Okay, that the consumer's strong, manufacturing is strong because of onshoring and all these other issues. I mean, his point is clear.
I think his point is that there are attractive equities, that the market has suffered. We went down 20%. We have been in a bear market. And if you look at sectors like communications down, 40%, discretionary, consumer discretionary, technology, a lot of the market really got destroyed last year. So I think Jim has found opportunities and he's looking to capitalize on attractively valued equities.
All right. So
Jim,
let's go back
what
to
do you
Jim.
think?
Let's go back to Jim because I don't understand how we're confused, which we appear to be here. Your point on the economy is what?
It's simple.
Give it to me.
We are strong right now. Your point, you and I have done this enough times that I can do this, okay? Your point is, yeah, but that's right now. What's to come?
No, Kerry made the point that it's undeniable that the economy is slowing.
Okay, I don't see that. And I can give some credence to what she's saying by looking at, for instance, yesterday's Empire Manufacturing Survey, okay?
I mean, a lot of the data is weak. Let's just.
A lot of the data is strong,
unless you're at the dinner table every night with Scott Kirby.
Wait, no, he just nailed it.
145% fee for shorting BBBY. That is insane.
A lot to do with housing, frankly, okay? And we've got to acknowledge that housing went down because mortgage rates doubled. Well, mortgage rates have started to back off. And, by the way, there's still demand for housing, all right? That's not going away. People adjust, prices adjust. You were talking about KB Home, I think, last week, and housing will come back. But my point is about the economy overall, not just manufacturing, which I think we've acknowledged over the years is smaller than the services component of the economy. So when I do, and you're correct.
Dollar's at the high of the days. That's good. Let me check the other dollar pairs. Yeah. The dollar's up overall, although the British pound is also up.
Because of the labor market. Now, leave aside, I know everybody wants to shout at me, yeah, but that's going to incite the Fed, it's going to incite the Fed.
Why is the British pound so strong?
The question you asked me is, what is my opinion on the economy? Right now, it is strong. Let me phrase this just ever so slightly.
I might take a small short position on BBBY, see what happens.
We're in a recession, or the recovery will look like this. You have not seen that. Fourth quarter GDP, sorry to do this again, 4.1% as predicted by the Atlanta Fed. Real GDP, 4.1%. We're just not there yet. It may happen, okay? 425 basis points of rate hikes is serious medicine.
Dollars pop in. New high of the day. How many shares is it? It's only 25. Oh, there is no shorts? There's no contract available.
He doesn't see a trough in earnings until
Interesting.
the fourth quarter of this year or the first quarter of next. It's all about, it's all.
So they don't have any shorts available?
Regardless of how things look now, right?
Yeah.
The market's going to anticipate what's coming, and there's still pain ahead in lots of.
So no shares available.
And Scott, I'm glad you got to me because it's all about the lag effects. Jim can be right, wrong today and wrong tomorrow. And, the bottom line is liquidity is still not supportive of markets right now. Money supply growth is 0%. The balance sheet is shrinking by $1 trillion in 23. The Fed funds rate is climbing. And
Dollar is really popping. That is great. I'm gonna almost be green on the dollar. I'm gonna consider closing it. But I think with this much momentum on the dollar, it's gonna pop higher.
That means, as Mike points out, it's all about earnings, and the upside in 23 is going to be driven by earnings. Remember, in an inflationary environment, earnings can elevate because inflation is beneficial to the top line because it allows companies to pass through some of those costs to consumers. So then are you going to be able to maintain the same level of margins in a different environment where the Fed is still tightening and earnings are likely to decelerate, which pushes multiples up? So I don't think a pause is enough. I don't think earnings being flat is going to be enough. And therefore, you have to ask yourself, is this a risk worth taking? And the answer for us is, as we've approached the 200-day moving average every time, and today again, at 39.70, at the lower end of that range, 3,600, of the investments that Jim's talking about, that Kari's talking about, that Joe's talking about. And so this is an environment that you have to be really thoughtful around positioning, really thoughtful around quality, so you don't expose yourself to the risk of everybody being seduced by this soft landing narrative. And I can't tell you, over the last week, everybody's been seduced. Don't buy it.
Jim?
Seduction, not true romance. Look, I mean, the only thing I want to say is that for almost all of last year, I think we were seduced by the prospect of a pending recession and a bear market. And I don't want to sound naive, of course, and I'm looking at Scott here. Of course, there's going to be an effect of.
All right, things are looking good. Caterpillar's back down.
This economy is a lot stronger than most people have given credit for. And again, this always comes down to price versus what the opportunity is. I see at these prices good opportunities. I want to make one note that if you look in the market where things are performing well, it's the cyclicals. It's strangely things like steel stocks that are doing well on a day like today. The market may be telling us something, and it may be telling us that it's not a seduction.
That China's reopening, and that lends some support to some of the. It's
I need more theta.
It's risk on again. It's selective risk on, I think. And what's happened year to date is a seduction.
First Solar is back down. I was doing really well on this position. Actually, no, this is another one I opened. Oh, that's another one. So I opened two of them. Oh, interesting. Let me see. Okay, so this is the newer one, and this is the older one. So I think they're both good. I'm gonna keep both.
That's what I think I'm hearing from him. And look, he does say many things, but one thing is back to a risk.
Boeing is looking good too.
Look, I observe what's working in the market.
No, just tell me that.
Yes.
You do.
Yeah.
AMR.
And the good point that he makes about the 200-day moving average, Scott, is true. It's factually true that we have bounced off the 200-day moving average in a negative way all year for the last year, right? That's going to be true until it isn't true. And I think really what the catalyst is that makes us through the 200-day moving average.
We need to sell off. I have a lot of potential gain here, expiring in 30 days.
The data has gotten better on inflation. Now, if he's just hell bent for leather to get to 5.25 and everybody wants to get there, I can't do anything about that. That will have a deleterious effect. But if they acknowledge that the data is coming in and that inflation is coming down and they've got a strong economy,
the Bullard continues to say that.
Okay, but there are other voting members.
But they're all.
Let's look at what's happening in the other stocks that I follow.
Members who've been pointing to a 25 basis point hike. The market's looking for a 25 basis point hike. I don't see the reason for a 50 basis point hike. Look, they can have their cake. The Fed can have their cake and eat it too. If they just take it 125 basis point hike at a time, they'll get 50 basis points done in 2 months, and then they can sit and see what happens before the
Mara, BBig, they're both down. Riot is down. Silvergate's down, which is okay. I want it down. I should have kept my short hedge.
I do. I think the bear market was a head fake to begin with. But you know that. I mean,
WinG, MicroStrategy. And the funny thing is earnings season's barely started. We just got the banks.
I don't see how the market can advance with any degree of strong momentum and a clear uptrend, not knowing the earnings results of technology companies.
Exactly.
It's an asset-light economy. It's an intangible asset.
Tilray is down.
The economy, and it is
Coinbase is
we
down.
need to understand what the earnings are going to be for these technology companies. I have said all along for the last 60 days.
I think this is a good area for me to just wait because there is a potential of like sideways markets, right? And sideways is okay for me. I just don't want to rally.
I think it's exhausted. I've said that at the top of the show. Right now, I think the move in the S&P and the NASDAQ, based on my fundamental observation, based on the technical observation of momentum, I think it's exhausted.
Take a look at CrowdStrike.
Is if technology
I might want to make some of my money back on CrowdStrike.
I mean, you know, again, you're looking.
When was the earnings?
For the prior quarter, for the earnings that are going to come out. It's,
March 9th.
Does that really matter as much as a Nadella, who's already said the next 2 years are going to
$75 put for 130 bucks. Seems pretty good. I'll make some of my money back from. It could sell off to 75.
We're going to hear a lot over the next 10 days, but we also know a lot. I mean, we know, for example, that Microsoft is going to lay off more people.
70 for 85 bucks.
Technology and the software companies and hardware companies, they really
The risk reward seems okay.
let go of some
Although, how much buying power was that?
They over-inventoried in 2020 and 2021 when they thought that, you know, they were such scarce.
I'll keep that, it's fine. I'll try to make some of my money back that I lost on CrowdStrike. Dollar's going up. I'm finally profitable on my dollar. Finally profitable on my dollar there. So that's looking good. But I could see it go to like 135 plus. When the dollar runs, And then you want to be positioned early when the dollar runs. And I've been positioned for like 2 weeks. I've been in the red for 2 weeks. But I don't think taking profits now is the idea here, because I think if markets sell off, the dollar can go back to 136, and that's going to be a decent amount of profits for me. Let's see, I don't want to open too much because my IVRs, the IVRs are still relatively low. The VIX is low too, but maybe what we want to open is some upside risk, maybe. More upside risk, I think. Microsoft keeps going down. Dollar keeps going up. Let's see here. How's the VIX doing? VIX is up $1. Yeah. VXM was a good buy on Friday. I bought it and then I took profit yesterday. But it was a good buy. The risk reward was good. Should have bought more than just one contract. NVIDIA, TQQ. I can sell more upside on something like NVIDIA, but I already have upside risk on NVIDIA. Gold, I already have upside risk on gold. Maybe sell downside risk on gold? Because if gold goes down, then dollar goes up, right? Then I benefit in that manner. And it looks like gold has lost $2 today already. So maybe position myself to benefit from a sell-off in gold. Or I mean, I already benefit from a sell-off in gold. But position myself to benefit if we rally in gold. Just do like a easy ratio spread here. And the buying power is basically free because of the upside risk that I have. 1.5 spread. How about a $2 spread? How much do I get? I get like nothing, but it is a $2 spread though. $1 spread further out of the money. And I get 37 bucks. I multiply that by 2. And it ain't much, but it's something. Maybe you multiply it by 3. But I don't know if I want to hold that much gold risk. Gold is at the higher range. It's at the higher end of its trading range. So I don't think I want to hold too much gold risk. Just wait till it sells off more before taking on some risk, downside risk in gold. The dollar is looking exhausted here. It's like I'm gonna really regret not taking profit here or not closing. I've been wanting to close this for a long time, but I know I'm gonna regret it. But the thing is that it is a position that's been bothering me. Maybe close half of it. It's going to be locking in some gains for the day. And then it's going to be, maybe I'll be positioned for a better entry point. And I already benefit a lot from a sell-off in the SPX. So maybe I can leave gold out of it. But it is running though. Maybe you just set a stop loss here. Yeah, just monitor it and get ready to close it anytime. Microsoft has been in the same little range here. And then let's go back to SPX. Look at the SPX. On the 1 minute here, SPX is down consistently quite a bit. Puts would have paid off today for almost any entry point. Puts would have paid off. Definitely considered puts, but I already have enough downside that I don't need puts. If anything, I need to close my short puts. That's better than opening new puts if I'm bearish. I've closed quite a few positions. That's why my theta is down to 600. Messed up on AMC, but that's a valuable lesson. Don't mess with in the money options, honestly, unless it's SPX. Dollar keeps going up. I am at my all-time high here, 407.1. It's hard. $407.2, nice. Okay, just gotta focus. I gotta make it to 410. 410 is like a mental milestone that I've been wanting to reach. But the markets haven't been playing along. We're hitting new lows though. New lows of the day. Microsoft now is red too. And things are selling off. Take a look. Yeah, I can take the profit here on the dollar and then wait for maybe new entry point. I don't know, it keeps going up. It hasn't had a red candle since 9 o'clock. Literally 9:04, the last red candle on the dollar. And I'm going to sell it now, this early. Sell half of it. The thing is that I held this risk for so long, and I held the risk of it like making me lose $1,000+ for me to take off the position so quickly in a rally. You have to hold it through the rally and then see where the dust settles later, because this is definitely bullish DXY. DXY got a big pump today. big bump. This 1 hour candle is towering over the rest. So yeah, this is bullish dollar. Where's MicroStrategy? MicroStrategy is 220. Good level for it to be and stay there. CrowdStrike, it looks okay. So yeah, I opened a lot of upside risk positions too recently, which I'm benefiting from right now. And then this SPX might be a good position for Feb. If we can end up at 3,700 for Feb. I opened one for Jan, but it didn't work out. It's a loser. But I have a new one for Feb, so maybe we can land at 3,700 for Feb. And then it being profitable. But I have to be careful not to get too euphoric here. And then you start believing your own hype, and then you lose all your money. That happens all the time. But you know what? Let's see if I can close the dollar. It keeps going down. All right, I closed it. So at least I got rid of this dollar position, and I will maybe wait for better entry, because at this point, I think I've reached an extreme, at least a short-term extreme, and that maybe I'll wait for it to pop and then just short it, as opposed to going long here, because I'm in the middle of the range here. I'm at between the 38 and the 50% retracement. So I think it's safe to take the profit, because now if S&P rallies, I'm going to lose on other positions, but at least my dollar won't make me lose more money. So the dollar, I'll be able to get it cheaper if we rally. So this is fine. Like we got as low as 33.10, 33.20. So that's a big swing up on the dollar. Just took a few days to get it, but that's a 1.2% swing, which is a lot for a currency. Because usually with currencies, you bet big. You know, you easily put like a large chunk of your portfolio in currency, whereas you wouldn't naturally easily do that for stocks. This Coinbase position is profitable, but I can keep it. It's kind of like a hedge against upside. CRM is okay. I want to see how long I can stay above 407, because the next stop is 410, but it might take a while. My theta is low. Unless we get directional movements in my favor, it might take a while to get there. Take a look. Yeah, everything looks good. It's 9:30. It's still early in the day. I swear, when you do day trading, the way I do it, 9 o'clock feels like the end of the day. Because I woke up so early. I woke up at like 4:45 for PPI. Take a look. Pound gets another boost after US data comes in slightly softer than expected, briefly pushing the currency. Yeah, I saw that. The British pound was up by a lot. Retail sales points to further deceleration. 5.3% in December versus 6.2 in November, 7.8 in October. But inflation is decelerating, so this is good, right? Inflation in retail is like wallpaper over an old plaster wall. Rip off the wallpaper and the cracks will be revealed. No idea. Okay, so US December producer prices fall 0.5% month over month. Estimated 0.1% loss. So I think that's big. I think that was what moved the market, because when I saw that, it looked bearish, but at the same time, it's hard to tell. Because it's bearish, it could mean that rates are going to go down, so it's bullish. But if it's too bearish, then it's like super bearish, because it means like a bigger recession or a real recession, right? So it was hard to tell at the moment, and there was a lot of like fog of war. So it's like, what do you do? And I considered getting the SPX put, but I didn't, which is fine. Both plays are good. SPX put would have been nice. Sometimes just the risk reward, you know what I mean? When you're in the moment and you know something big just happened, but you don't know which way it's gonna go, just at that very moment, you have like 30 seconds. You get the put, you get the call, the risk reward is good. It's just those moments don't come too often, and when they do, there's too much fog of war. It's hard to know. It's like, what do you do? Which direction? What strike? How far out? But usually the answer is just take any. Just take any. Just take a small one. Even just like one put at the right time could be massive. But that depends how much you want to tolerate risk, right? Like, I don't like risk. I don't want to lose $200 in a day because of a gamble. So my brain automatically says no to it. Whereas other people do that daily. They lose like $1,000 daily on gambles. And some of them hit, some of them don't. But they're happy just spending $1,000 on 0 DTE premium. It's just a different mentality. But a person who approaches it with that gambling mentality, if they hit and they're on fire, you just blow up your account. You become a millionaire within a few hits. It's crazy. But I don't know how a person can, you know, be patient. You know what I mean? It's like, if I'm in a position and the position is up, my natural reaction is take the profit. Like, my reaction is never to be greedy, in the sense that I want to maximize how much I get. Like, I'm happy getting a small amount. So I wouldn't have it in me. Maybe I would. Maybe like if there is a massive event, I'll just do it. Just buy and hold an option and just see what happens. Although today wasn't that massive, you know what I mean? It's a 60-point move. But it's good enough. Good enough for most people. That's a massive move. Even just one NQ contract through this move is good, like 10, 15,000 maybe. I don't know. I don't do options. I don't do futures like that, so I don't know the exact amount. But I've watched people who sell and buy NQ, and money flows fast. If you pick the wrong direction, you're down 3,000 instantly. And you're like, damn, what do I do? And then you're like, you can feel stuck. You can be like, well, I don't want to take the loss, so I'm just going to hold it. And then the negative 3,000 becomes negative 6,000, and then negative 10,000 easily if you're in the wrong direction. So it's a difficult lifestyle, in my opinion, because you're going to sleep well if you're up 3,000. But what if you're up 5, 6, 7, 8, 9, 10,000? You're not going to sleep as well. I don't know. It's hard. And it doesn't matter how rich you are. Like this one YouTuber that I would watch, he has like, I don't know, a lot of assets. He has like millions and millions of dollars of assets. But it's like, even if you have millions of dollars in assets, but you're down $30,000 because of a dumb day trade, you're not going to feel good. That's a vacation. That's like down payment on a boat or something. The dollar's coming down. Look, I top ticked it. I got the profit at the perfect time here. Like, I don't mind taking big risks, but I'd rather do it strategically than just like go with a gut feeling purchase futures. So yeah, looks like things are rebounding a little bit. Microsoft is up a little bit, and things are stabilizing. Account is looking decent. I can be a little bit more defensive here, but I think I'm defensive enough here. I don't have a lot of risk exposed. I even closed my Apple short strangle, which I didn't need to because it's probably still safe. Yeah, getting close to 130, that's the thing. But I'm still profitable on Apple month to date, so it's fine. A bull put? Wait a second. I had a bull put? That is strange. I don't even know how. I had an Apple bull put. I guess the short strangle became a bull put for some reason. Sorry, this software confuses me sometimes. I just have too many positions open, that's why. I confuse myself. Alright, I can consider closing First Solar. This one looks pretty profitable. I want to look at First Solar's trading range. I might sell some puts in it. Insane amount of positions, I know. I might want to sell some a put ratio spread, although the daily chart shows a lot more potential, but managing it well. Thanks, man. But a lot more potential like downside here. So just looking at the daily chart, I don't think I would want to open a put position here, because we have a potential like 20-ish%, 25-ish% downside on First Solar selling off. So the risk reward doesn't seem great. Microsoft is rallying a little bit, 0.2%, and I am short 25 shares, but I am also short puts. So it balances out. I'm also short calls, so I gotta be careful with Microsoft. Maybe Microsoft is gonna be a very difficult position to play. It's gonna like whipsaw back and forth. Was I short calls? Yeah, 275 call. It is profitable. So maybe just take the profit off of this, reduce my upside risk. Maybe, I don't know. It's hard to tell. It's only 20 bucks. But these things add up. Like I consider that a day trade. You know, I opened it today, I closed it today. It's like buying and selling shares. But easier because you have theta decay. But harder in the sense that it's hard to know when to open it, where to open it, how many days out, what deltas. Because you create a lot of risk for yourself. If your deltas are too high and your expiry is too close, then you generate a lot of like gamma risk and stuff. Dollar wants to go back up. Whereas with a day trade, you don't have that much risk. Your risk is limited to the number of shares, which is still a lot, but like your overall risk control is more simple. So yeah, we're coming back down here. Dollar's going up. Microsoft is popping too. Microsoft got a lot of support here, which is okay, because I have 3 short puts, which I don't want to get breached. MicroStrategy is 221, that's a good level. NQ oil is at bottom low of the day. Crazy. Oil started selling off at some point. How's ZQ doing? ZQ, I'm still down 44 bucks. I don't know why my oil chart is messed up. I never get a good oil price. Okay, this looks better. Yeah, so oil lost a few percent here, eh? Interesting. Microsoft is a little bit higher than its lows. US dollar is going back up. I took profit here on my US dollar position. Maybe I should buy another 25,000 USD. Earnings, Netflix, yeah. Microsoft, US dollar. I should have been a bit more patient. Like I opened too many bullish positions yesterday and the day before because I was afraid of a face-ripping rally. And I knew I should have been patient, but I was patient enough, but I should have been more patient. I didn't go like balls deep in short puts. I just got a few here and there. But it's happened to me before where I start getting squeezed on the long side to the point where I overposition on the long side, right? To make money off of the upward movement, and then things flip immediately and I lose on both sides. I don't know. It's happened before. Gotta be very careful. Like timing the market is not easy. Like even using options, like just because you use options doesn't mean you have alpha. It doesn't automatically mean you have an advantage. The advantage comes from kind of using arbitrage, you know, to try and extract value out of the different Greeks. But timing things is really hard. Like if you know Tesla's gonna start selling off at 170, you can sell a 170 call, right, or whatever, and then you're short, you pick up the premium, and then you're short at the perfect time. But it's never that easy. Okay, US dollar is going back up. Let me look at SPX. I was checking to see if there's any premium I can sell. I'm gonna wait longer to sell premium. I want the prices. You know what? BBBY, I tried to short it, but they don't have shares. AMC, shorting AMC is an option. Lows of the day though. If only I was able to keep my AMC position. What a shame. I took a hit because of that, but not a big hit. Like I am at my all-time high, so I can't complain. There's still a few more days left till option expiry, and once options expire, I'm gonna pick up some gains from these, and it's gonna free up a lot of buying power. So starting next week, or even starting Friday, once I know that these are secure, they're secure winners, I'm gonna use up a bunch of buying power to open up positions for the next cycle, especially if we sell off in the next few days. If we sell off tomorrow and Friday and these expire worthless, then I'll be positioned nicely to take profits and open new positions for the next cycle. This cycle's been good. I think just having the Silvergate expire worthless, the Biddle expire worthless, these were big contributors to my gains in the past month. But I'm gonna have to find some new plays like these where I can get a big amount of premium all at once and just wait for it to expire. But I'll be more likely to find positions like that if we get a broader market sell-off and the VIX goes up and the implied volatility of all these tickers goes up, then I'll be able to open up some big concentrated positions and hope for another good month with those. Microsoft is coming back down. Dollar keeps going higher. SPX is below the 23% retracement. We're approaching the lows of CPI. So lows of CPI will be a little bit lower than this at this 0%. So we're pretty close to the CPI lows. Take a look here. US interest rates have to rise further to ensure that inflationary pressures recede. I agree. Soft landing for insane bulls. Broadening wedge. This looks like a nice chart. Yeah, look, we failed again, and now we're back down. So we're probably heading back down to this area. It seems to be what's most likely to happen, maybe even below 35. Just looking at the pattern here, right? There's this. Like this here looks similar, right, to this. And then we'll go down another leg, maybe. Who knows? It's all voodoo anyways. Twitter offers new annual plan for subscription service.
States and U.S. officials used that opportunity to arrest Legadimov. They accuse him of
Bitcoin's
engaging in
down.
illicit finance and cryptocurrency exchanges with a cryptocurrency fueled darknet site called Hydra, which U.S. law enforcement officials shut down last year. They say this is part of an ongoing effort to demonstrate that the United States can and will shut down criminal use of cryptocurrency. And they say their action today is designed to help restore the crisis in confidence, they say, is going on now in the cryptocurrency market. Scott, back over to you.
Okay, and appreciate that update. That's Eamon Javers outside the Justice Department in Washington, as you see there. Let's get to this screen now that CNBC Pro did. 8 stocks they suggest have reclaimed their long-term bullish trend. The criteria, trading above their 200-day moving average, beating the market this year, up more than 4.5%. That's the criteria there. And analysts see the breakout continuing, expecting greater than 20% gains. Alaska and Delta, Jim, on the list. You own both.
Yeah, I think the airlines are strong here, and they're strong for good reason. The CEOs are telling you demand is good. If you look at the TSA traveler statistics, they're well above 100% of 2019 levels. How long this lasts is the question.
Dollar's coming up
Because
again.
Some people think that we're in a recession. These stocks are still held back by that, but I think there's a lot of potential returns here yet to come.
Okay, Diamondback Energy is in the Joe T, and it's on this list, Joe.
A little bit of an underperformer relative to the overall sector. Ridiculously cheap valuation at 6 times. It's a name that I agree with. It provides tremendous opportunity if you want exposure to energy based on the balance sheet, and really just the relative underperformance to the sector overall. If you believe in mean reversion, that's something in 2023 you could positively impact.
I got scammed on AMC. So weird.
On the list.
All right, we're selling off here.
Yeah, we're neutral on the financial sector.
Let's
but
go.
Let's be honest.
Let's make it to 37 by Friday. That'd be amazing. 3,700 by Friday.
14 times. Wells Fargo's trading at 11.3 times, 1.1 times book. So it's one of the more defensive plays you can have in financials. And by the way, they're executing. They're diversifying their loan book.
There we go. We are approaching this bottom. Bottom from CPI.
Financial jumping over a lower bar.
All right, we also have a list out today from Wolf Research. It's their first ever alpha list. These are their highest conviction list of stocks that they believe will outperform over the next year. On the list, Carrie, lots of owners, everybody owns Visa today, but you take that one because that's there.
Yeah, so Visa is really a play on a couple things. Travel, the increased move toward digital payments, and the ability of the consumer to continue to spend money over the next couple of years. And it's a great leader in technology, and we think it will continue to outperform.
All right. Regions Financial, Joe. In the Joe T?
Yeah. If you're wanting exposure to regional banks, which I think all investors should have in this environment, to take advantage of net interest income, Regions Financial.
All right, looking good. We're selling off.
It's had the performance the last several years, and the capital allocation strategy is very strong. So selectively, I've found this one over the last several years to be the one that screens at the top of the list for all the regional banks you could have.
Joe T's all over this thing. Lennar is in the Joe T.
Bitto is now slightly profitable.
Anthem, that's in the Joe T on this list. Energy Transfer and Walmart.
Yeah.
Disney.
I think Lennar and the performance that Lennar has. DR
That's upside, yeah.
In Joe T as well. And I think Mike spoke about it before. It's so conflicting when you think about
that's downside risk on those, though.
But yet the performance for a lot of these home builders, it shows sometimes that the economy and the stock market don't necessarily always correlate.
Hey, Rob.
There's a lag.
I'm sorry. Rob, Meta. That was your stock summit pick. That's on the
Premium's coming up on this Coinbase one.
Yeah, we agree. Obviously,
And this might end up being a big loser, depending on how much we sell off.
seen a meaningful reset in earnings and
It's fine, though.
expectations for the
It's
company.
37 days out.
Jimmy will arm wrestle me on this one because he thinks there's a lot better ideas that
I took profits on Tesla, which is good. And then I have one Tesla position left. Where is it? This one here, which is almost profitable. That means that my trade from the last few days on Tesla has been pretty good. I took profit on the long side, and now I'm going to take profit on the short side.
But it is in your portfolio. You have as high hopes for Meta as Wolf Research does and Rob Sechin?
Well, it traded as low as 11 times earnings excluding cash. It's up 50% from the bottom. So, you know, while it was a terrible stock, it became a value trade for a lot of people. And I think there have been buyers. They're showing some discipline about costs, and they're, you know, I think taking it seriously that they can't just spend wantonly. They're cutting headcount. And so we think they might be able to beat expectations some of the quarters this year, and there's more upside to the stock. I don't know if it's going back to where it was before, but it definitely is a stock on the move higher.
Okay. Quick break, then final trades are next.
Dollar keeps popping. The markets are coming down too. Dollar's having a nice day. Crazy.
Newsletter on the terminal and online, and I'll meet you in just a moment for hour 2 of Balance of Power on Bloomberg Radio.
All right, looks good. Everything looks pretty good. $407.2, nice, nice. Hopefully I can make it to 410 at least before the end of the month. Okay, are we selling off? Not yet. Microsoft is holding up, which is good. Which is good. I'd rather not profit from the hedge. I want theta to decay first and then close my hedge. But the thing is that we have a VIX expansion, right? So the premium on these have gone up just by virtue of the VIX expansion. So I'm going to be in a bit of a tough situation with Microsoft. I opened these yesterday and maybe I shouldn't have. Maybe just take the L on the short puts. Maybe just close one of them. I have been up so far on Microsoft so far this year. But if I close everything now, I will be down this year on Microsoft. Right? So that's the thing. I'll be just barely down. And then I can reposition better strikes, or maybe just keep the ratio spreads. This ratio spread though is worth $460. Right? This is a big one. Like if we sell off, this can double in value and I'll be losing money. But it's fine. I think it's fine. I think I'll just be patient on these. I don't want to be too quick to close puts, short puts, because the market might just rebound here. There's no guarantee that we're going to keep selling off. And even if we do, I do have other positions that benefit. So it's not the end of the world losing a little bit of Microsoft. And if anything, Microsoft might outperform the overall market, because they're a strong company and they're laying off staff. So it might be fine. I'm up $52 on this Iron Condor. I can always close it. Boeing is up $85. I can close Boeing. I've taken most of the profit out and there's 30 days left. Don't think I'm going to get that much more profit. I can open another one. Just reposition in Boeing and open it maybe closer to at the money. I just want to look at Boeing. I rarely play Boeing, but the past few times I've played, I've done well on it. So let's go Boeing. Go on the daily. Yeah, that's why I sold calls. I'm like, on the daily, it looks like it's overbought, and it still looks like it. So maybe we do another call ratio spread. This time maybe a little bit further out. And 235, 240, maybe. It's a lot of buying power though. That's the issue with these spreads. But it's like, if you're not using your buying power and these are relatively safe positions, then it doesn't hurt that much to open it. And then you just close it when you need the buying power. Let's see if I can get mid-price. If I can't, I might not open it. Okay, I got mid-price. So yeah, I lost 5K of buying power, which is fine. I can close these anytime. And oftentimes, these ratio spreads end up being profitable really fast. So realizing the gains is good for future, because then I can open better positions that are going to generate more theta. Microsoft is selling off. Oh, it bounced. What the heck was that? What was that bounce? That was a 50-cent bounce from one tick. Crazy. How's the ZQ doing? ZQ is losing even more now. That was crazy, I know, right? You saw that. I have a feeling what's going on is the markets are pricing in a bigger recession. Therefore, the markets are selling off. But then at the same time, the markets are pricing in more aggressive rate cuts because this is going up. So it's kind of, the markets are like juggling between the idea of a recession and the idea of a rate cut. and they're trying to figure out how bad the recession is going to be, like how much of a contraction there's going to be in earnings. And then also, when is the Fed going to pivot and lower rates? So it's very difficult. And market participants are basically betting on those two events. It's crazy. That's why I'm short ZQ, but maybe I shouldn't have done that yet. I was going to do it before FOMC because I know Powell is going to be like no rate cuts, higher for longer. And there isn't enough economic pain yet. Like jobs data is not showing any massive layoffs and stuff, right? Unemployment is still very, very low. So I think the Fed, in order to make sure inflation doesn't come back, the Fed has to cause a little bit of pain. That means higher for longer and no rate cuts, no pivots, maybe a pause. They've said they're open to a pause, but they're not open to a pivot or rate cuts. So this ZQ position should be good, but maybe I opened it too early. I might actually get a second contract, depending on if I lose like 300-400 on this. I'll open a second contract and double down on it, which is risky. Like I'll have to make sure I think about it long and hard, because you gotta always be open to the possibility that you're way off and that the markets are right and you're off. And these people that like Goldman Sachs and Morgan Stanley and JPM, they know their shit better than I do. So you gotta be careful betting against them. But they're also biased, right? They have a lot of skin in the game, which I don't. I'm all cash. And you can't say the same about them. They're full of assets and equities and treasuries. So they have skin in the game more than me. Let's go back to SPX. All right, we're down. We're approaching that level line, that 0% retracement from CPI. Are we gonna hit it? Microsoft is down quite a bit. I can always open short calls and such. Positions like that. Did I do one on IWM? No, I didn't. I was going to. What happened to my SPY call ratio spread? I should be profitable on that by now. Yeah, I'm profitable on it finally. I can close it and reopen another one. That's an option. What happened to the Qs? I had one on the Qs too, no? I never closed that, did I? Okay, I'm still losing on that, but I'm up 100 on the day. This SPY one only has 34 cents of premium left in it. Maybe I close it and then open a different position that is gonna be bearish. Maybe a bit more aggressive. Since I don't have the dollar anymore, everything looks red. Low of the day on everything. Things are dumping hard. I gotta consider now whether I close this. I'm already down 100. And there's always a risk of getting squeezed out of this. I'll keep it. I'll keep it. We'll see. I have other positions that are going to benefit from this. And let me maybe just sell a SPY call here. Maybe just sell a SPY call. Or 2 or 3. Let's go to March 3rd. Sell a couple of these, maybe. Just to balance the downside risk that I have. No ratios, or maybe I do a simple ratio. not too simple. Wait a second. Whoops. Hold on. I messed that up. Buy, sell. Okay, that's still $1.50. And because it's an aggressive ratio, I'm a little bit protected from upside risk. And I can open 2 of these. See if I can get mid-price. I probably won't get mid-price. A little bit lower maybe? Market makers don't like these ratio spreads where you have like 2-3 or 3-4. They never give you a good price. Damn it, I'm gonna hit the bid. Okay, there we go, 144. So that's good. So now that means I have some more downside, some more upside risk. That means if we keep selling off, at least I'm gonna benefit a little bit more. Okay, but I gotta watch out now. My delta, my SPX delta is gonna get closer and closer to 0 now, or positive even, where I'm gonna start having a bullish stance. But let's take a look at the risk navigator. Here, my SPX index delta. Come, I don't get the aggregate. That is annoying. Crazy. I'll just do it later. No need to do that now. Alright, so we're selling off. Microsoft is down. Dollar is up. I took profit on the dollar here. Should have kept it maybe. And what else is going on? Lulu, 319. MicroStrategy, 218. Looks okay. Looks fine. I have a good balance, I think. Good balance of downside risk, upside risk. Theta. At least I closed a dollar position, which was influencing my gains by a lot. This first solar position looks good. Maybe I'll take profit and open another one. Although I can still profit more off of this. Expires in 30 days. See if I can get mid-price. If I can, I might just close that. Alright, so I have at least some small winners in Microsoft. Where's the other Microsoft? Did I take profit off one of those Microsoft positions? Yeah, it looks like I closed the short call. Maybe I'm going to open more upside on Microsoft. Hold on, let me take a look here. This is a single ratio spread. Maybe just have one more upside ratio spread on Microsoft. Risky though. Maybe closer to expiry. And just do like this. 250, 255. Yeah, I still get a buck. And it's easier to defend. It's closer to expiry. Sometimes with ratio spread, that makes it better. Break even is 260 plus. It's an extra $100. Yeah. Let's try to get it at mid price. All right, I'm gonna play these guys. They're doing futures, power hour, and news. Tasty trade, and then I'm gonna take a break, and then I'll be back, and then hopefully we keep selling off.
It's interesting because
All right, I'm gonna BRB.
Saying, I didn't see anything on the calendar. Honestly, I know. So from a quantity perspective, I agree with you, but I'm probably going to still stand with my previous statement, and the reason is because over the last 6 months, right, we've had really 3 events that have driven the markets. Right, the Fed minutes, we've had the CPI, and we've had non-farm payrolls. Right, those 3 events. None of those are released today. But we've had a slew of other data that kind of, maybe in aggregate is contributing to this. But it's almost like, if that's true, then it was just something out of left field, because there's no way to have predicted that all these things would kind of be in a negative kind of like, it's kind of like a death by 1,000 paper cuts, that type of thing. Sure. But in this case, it's not really like you expected the second and the third paper cut to come. It just kind of happened all randomly, kind of not randomly, but kind of unpredictably, all in one setting. So I suppose from that perspective, you have the argument there. But I mean, thinking from the other side, so I don't know. How should I put this? There's so many news things that happened today that if the market, whichever way the market was going, right, it's almost like an ex facto result, right? We know what's happening to the downside because the market's going down, but the market could have easily went up, and we could have easily told the story in a different way. So I don't know. It's odd to see this, to be quite honest with you. Like I get the news is negative, but I mean I can count so many times where we've had similar kind of minor news releases, like these, being non-CPI, non-Fed minutes, all that stuff, and the market just trending the opposite direction. For what reason, we don't know. So it is definitely interesting to see. I'd be interested to see how this week plays out, especially that we have the Fed meeting this month is in the 31st, right? So we actually have a week or so to go till that. So I'm curious. What do you think?
I like the death by 1,000 paper cuts analogy here, right? It's almost like a drop of water may not be a big deal, but many drops can fill a bucket. And the sell-off really begins around 10:30 Eastern, 9:30 Central Time. There was no data release at that point in time. You already have a bulk of them in the rearview mirror. Mm-hmm. The news flow has been coming out fairly steadily all morning, and there hasn't been that negative a reaction. Perhaps in some hindsight sort of perspective, when people look at everything in aggregate, as you mentioned, it does erode at the soft landing narrative, which is theoretically good for corporate earnings, right? If we can manage to get inflation down, the labor market stays intact, we don't go into a recession, that's the sweet spot for markets. But you see that industrial production's down, the housing market's still struggling, retail sales are coming off. And when you look at that picture in totality and you think about the revisions lower in GDP expectations, ultimately then it doesn't appear like it's a soft landing anymore, and you're getting some of this bullish premium sucked out of the market here. I also find it interesting that the sell-off really begins when crypto starts to dump. It seemed to be a broad risk asset-based type of move. There was this announcement coming today about the DOJ putting in a fine or arresting the leader of this Russian crypto exchange. I had never heard of this crypto exchange before, Bizzlato. I don't know if I'm pronouncing that right. But this Bizzlato, there we go. But you see that from like 10:30 a.m. Eastern until about 11:30, 11:45, stocks and Bitcoin are tracking very, very closely. And all of a sudden, when this basically nothing of an announcement comes out from the DOJ, Bitcoin is able to rebound. Stocks then continue to stay lower and trade lower on the session. So for me, it's accumulation of things. I don't think you can point to any one issue. Of course, like you said, if the markets were higher here, we could be talking about, U.S. economic data is weakening, and that's raising expectations that the Fed's going to be cutting sooner and not need to raise rates as much, right? So we can always pin the tail on the donkey after the fact, which is why, to me, this just seems like it's fairly random, and I don't want to assign one particular cause to it.
Yeah, you actually mentioned a good point. Like when you actually stated an example of the counterfactual claim, right? I think one of the best ways to discern if a news story is actually relevant to the market or if it's just an outcome that doesn't have any bearing on the current direction is you ask yourself, okay, if the market were trending higher, could I make an argument using the same data I'm seeing right now that's plausible? And if the answer is yes, then that's, I personally think, a good reason to believe that the data is weak or non-correlated, right? Because, for example, if we have, as an example, a CPI report that comes out right now, and it says, okay, CPI is unexpectedly up 5% additionally than was expected, market's rallying. Okay, now you stop and think about that and you say, okay, that's interesting because you would think the market's going to go the other way, but you ask yourself the question, if I said it the other way, okay, CPI was up, market's down, is that plausible? The answer is yes. Now you ask yourself, okay, then what possibly could be causing it to go in the opposite direction? Because usually, whenever we see news stories that affect the market, almost certainly it's an indirect cause. Like this is an example. So I think it's really important to ask yourself the same question. Hey, if the market was going the other way, could I justify the news? Right? And if the answer is yes, like I said, maybe the evidence is weak. But if the answer is no, like let's say, going back to the CPI example, let's say the CPI is up and the market's crashing. Okay, could I justify the market being up and the CPI going up? And the answer, I may have said it backwards the first time. But if the CPI is up and the market's up, is that justifiable? Probably not. Then it's probably a good answer for the market going down, right? But so you have to ask yourself those questions sometimes.
I agree completely. That's a very fair point. Anton, we're going to dive a little bit deeper into what's happening with equity markets here because they are dropping, although it's coming in a situation where IVRs have been remaining low. I think one of the points that we've been raising on the show over the past several days has been, look, when you look over the past year, relatively speaking, volatility right now is at an extremely low point in time. And one of the playbooks that worked in 2022 has been the notion that if VIX is above 30, you look to buy the dip in stocks. If VIX is below 20, you look to sell the rip in stocks. And sure enough, VIX had fallen below 20 here over the past few days. IVR ranks dropped very, very low. If you had a bullish directional bias, it wasn't really a great environment to be selling puts because if you do get a directional move lower coupled with that inflation in vol, you're getting hit on both ends and you could be in trouble very, very quickly. So on a day like today, when you're seeing volatility tick up and the stock market move lower, that's why we use that IVR rank, the IV rank, excuse me, to kind of conceptualize what is the best way to express this view. So if you had bought stock futures outright, you're probably not feeling great today, but you'd probably feel a little bit better than had you just got into the market and sold some downside puts. It wouldn't really have been fun to sit in. In any event, when we take a look at the S&P 500 1-hour chart, we're at 3960. We're basically back to the lows that we saw, swing lows that we saw at the end of last week. Whether or not the market holds up here, of course, is another story. But from a technical perspective, I know you're a big believer in technical analysis, Anton. I'm going to tickle you with this. We are back to a point where we're running into this trend line. We go back, say, to the trend line from the January, from the March, from the August 2022 swing highs. You could see here that we failed in December on two separate occasions. It appears that we're failing here again now, and we're moving back below that 200-day moving average, which, again, multiple times over the past several months has been a level of resistance. So this could be an important technical turning point in the market. If we start to see that IV continues to tick up, relatively speaking, then you're probably looking at a situation where you have a near-term top forming. Not my base case for how I thought things would play out this week, but we have to look at the facts on the ground as we see them. We have to adjust our views accordingly. I don't think this is really a positive development right now if you're just taking a look at this market from a purely objective price action standpoint.
That's actually pretty funny. I like that. I mean, I'll give it to the technicians. I mean, that trend line can't be drawn better. You know what I'm saying? That's pretty interesting. No, but in all seriousness, I mean, I think going back to the IVR question, we saw the last couple of weeks. If you pull up the VIX futures, quite a very interesting turn of events. I think going into this week. Okay, and what happened is if we actually pull up the daily chart of the VIX, if you click, there we go. Okay, so pulling up the chart, right? and let's say we go, okay, there it is. So daily. Okay, so we go 2 weeks ago, right, which would be basically the beginning of the year, right? So if we maybe zoom in on that earlier of this year, okay, we go like around January 1st or January, 3rd, something like that. Okay, so notice last year we were talking about how the VIX futures tapered off into the beginning of the year, and then expected then the volatility curve became back into contango and was higher in February, March, and all that stuff, right? So it kind of dipped for the holidays and then continued higher for the rest of the year. Earlier this week, we dropped pretty significantly in the VIX futures, and I say that because it dropped below 20. Now, 20 is a key number in the VIX because it represents the long-term average of S&P volatility. We hadn't seen a drop below 20 since March of last year. Now, I'm talking about from cash VIX, so the VIX futures may have been a little bit differently. But the cash VIX, and you can actually make very similar case for the VIX futures, because if you look at that, even a few days ago, I think it actually still was the lowest since March by a hair, because I know there was a little dip in August. But still, regardless, the lowest point basically since March. Now, if you stop and think that for a second, what was happening last March, right? If you look at the S&P 500 back in March of 2022, okay, we were significantly higher, okay? Now we're lower. Well, I guess I shouldn't say significantly higher, but we were higher, okay? We're lower now. Volatility is at the same level. That's a very bullish sign in my perspective, or at least it was earlier this week. So that's another reason I was a little bit surprised to see this, because IV ranks were coming down, implied volatility was coming down. It almost seemed like, okay, we were actually maybe getting out of the woods a little bit, and then we have this day that kind of seemingly threw me for a loop, if I'm being honest. So, I mean, like I said, that's the nature of the market. As soon as you're become very certain of one thing, you wake up and the market's doing the exact opposite to it, and that's the nature of being a trader. But it's still interesting nonetheless. I don't know where I was going with that, but I was trying to tie it back to IV ranks, since that was on the slide for you.
No, it's a very important observation, Anton, and I think that's one of the reasons why this market reaction here today is a little bit of, I say, a surprise. I mean, IV ranks are low. Optimally speaking, you don't want to sell puts when IV ranks are low. And given the historical nature of how the market's behaved when the VIX has, gotten below 20 at points in time over the past year, it's not the exact ideal time to be looking long deltas. But when I think about this price action in totality today, it's obviously not just the S&P 500, right? It's the NASDAQ as well. It's the Dow Jones as well. Everything here is shaping up to be a pretty significant reversal. In fact, on a pure charting basis, we moved above yesterday's high in the NASDAQ. We're now below yesterday's low. If we were to close down below here, that's a bearish outside engulfing bar. As we had noted in early January, when we got the bullish one of these on January 6th, that was a signal for a near-term reversal higher. This would be another sign that you're potentially looking at, a little bit of a top here. And so if you're trading the NASDAQ right now, I'm looking at this options chain, I see that volatility, relatively speaking, is pretty low still. This could be an opportunity to potentially sell some calls. I don't know if I'm going in there with a calendar put spread, for example, but I think that you have to be a little bit more amenable to the fact that if you do see inflated vol here over the next few days, that probably means more downside in the market. And the technical picture is beginning to shape up in a manner that suggests more downside is perhaps likely, if not favored here through the end of the week.
Yeah, I also want to address the fact that, volatility coming lower doesn't necessarily mean we want to stay out of the markets, right? I think Tasty, we've done a good job of explaining why volatility is important to look at. I think sometimes we overdo it from the context of, and I'm saying this from a research. I mean, we do the research, so I'm looking at it in my own research and kind of making little changes along the way as I go in terms of how we present it, because we want to get a specific message across based on the research, but the numbers can sometimes lead people to interpret things that aren't necessarily true, and that's our job to make sure we steer people not just to the right numbers, because the numbers are the numbers, but the right interpretation of the numbers as well. And one of the biggest I think one of the biggest misconceptions of low volatility is that you don't want to sell premium. And I think that's not exactly true, right? When volatility comes down, like IV rank goes below 30, what we say specifically is not to not sell premium, it's to stay smaller than you would otherwise. right? And the reason for that is specifically because you could have those explosions in volatility that could really hurt you. So you don't want to be super exposed. So that if that happens, you have, well, first, you don't take as big of a loss, and number two, you can still continue trading and you have capital to use. And this is a perfect example because the NASDAQ, as well as the S&P, the volatility has gone down. But looking at the raw IV, NASDAQ volatility, it's about 25. That's not untradeable. You still have some stuff to trade here. You can pick a direction. You can be undefined, defined risk, whatever. But the point is, there's still premium to trade. Most environments are low volatility environments. So you have to know not necessarily to not trade them. You have to know how big to trade them, right? And I would say, if you're trading the NASDAQ or the S&P and you're coming off of this volatility environment where VIX is 25, 30, NASDAQ was close to 40, you want to stay about 50% less exposed than you were before. Maybe 40, 50% less. So if you have a $100,000 account and you had, about $50,000 tied up in buying power, maybe you want to have only $30,000 tied up in buying power right now, right? Just because the volatility is lower.
All right, I'm back. So it looks like we got a bit of a reversal.
That's an excellent point, Anton.
The SPX is up by 6 points. Microsoft is up a little bit too. Looks like my account took a small hit, $100 or so, not a big deal. And let's take a look and see what's going on here. What are some losers? Lulu's fine. This one was opened way too early. Damn it. That takes away from my Lulu gains by a lot. But at least I opened upside on Lulu. Yeah, so that's going to help.
And assumes that if they're losing money, it's because they themselves are wrong. And so you need to adjust your perspective along the way. What do you see here, though, when we go away from the NASDAQ right now?
What else is going on?
What are you seeing in terms of this volatility structure, or at least the implied vols over the next few months? These are pretty low. I recall us having a conversation earlier this month when we were looking at the IVs across the daily and the weekly strikes going on into February and March, and they were sitting at like 22, 23%. Now we're in the high teens, 18, 19. We don't get back up into the 20s until that March 31st strike. Are you just going to stick to what you just said, where maybe it's worth trading smaller, or is there a different perspective perhaps that you have on why the market has seen volatility just effectively evaporate here in the span of a week or two?
Yeah, I mean, honestly, I think the last inflation.
Looks like the other position closed, did it?
I mean, and I'm saying this.
No, it didn't. Which one is this?
I'm not by no means saying that that's
Microsoft. This is a new one I'm trying to open.
We have the information now. I think
And this for solar. This never closed, and now I'm not getting as much for it. So I might just cancel this.
Due to the energy sector coming down, but it was the first instance of deflation we had since
TLT's popping. So flight to safety, maybe?
Not necessarily because
flight to bonds.
Or rather, I think it's underestimated because one of the biggest catalysts for the market to go down was inflation, and rising interest rates. Well, the thing is
I'm taking a small hit here, 4069. Not even sure what's causing this hit, but it's fine. Short-term pain, long-term gain.
In the other direction, or a big fall in volatility in this case, right? So that's I think that's what we're seeing. The reason, of course, it could be wrong. Of course, we will never know if I'm wrong or right. So I'm basically giving you a free point. I'm like,
okay, I got the Microsoft upside.
I have no idea. I have no way to justify. I have no idea to prove it. But it does seem
I need to collect more theta. I have a lot of Vega risk already, though. Gotta watch out.
Volatility is lower now than it was.
A lot of Vega because of this SPY.
The biggest change from then was the inflation report. Now, coming into strategy-wise, I still think this is a volatility environment that you can still sell premium in. If you remember, 2017, 2019, volatility was in 15, 14, 13. We're at 18. That's much better than in fact, 18. VIX is above 18 about.
This bear put is up, and that expires in 2 days. I might just keep it. It's going to be a small hedge against Microsoft and others.
Still at averages, but because it's skewed to the upside, the majority of volatility currencies happen to the downside, or happen lower than they are right now. So I think it's business as usual, personally, but smaller. You have to stay smaller. That's a key.
Sure. Excellent points there. We're just about halfway through today's show, Anton. We're going to keep moving forward here.
This one's losing now.
Because we just saw a really good 20-year auction hit the tape a little while ago. Really, what's not to like about this? When we take a look at the bid cover ratio, it's basically near all-time highs. When we look at the indirects awarded,
Lowest PPI inflation is another sign that lower US PPI inflation. Inflation drivers have shifted from goods to services. December headline PPI fell by 0.5%. Core rose just 0.1%.
When we look at what's going on in bonds right now, particularly when we head on over to ZB,
Services will provide stickier and less sensitive to Fed policy.
Off the day's lows. We're starting to see a move higher within the context of what's been a recent uptrend. Yesterday wasn't a great day, of course, for yields. Yields ticked higher, bonds traded lower. But wherever you look, you're starting to see signs of potentially a market that's beginning to stabilize here. If equities are about to go through a bit of a rough...
This is my new SPY, yeah. That's my new ratio spread.
Basis here. Maybe there's a little bit more downside on the S&P than the NASDAQ. Do you expect this to be like...
This one probably takes a lot of buying power.
Weaker bonds meant weaker stocks because
14,000, crazy.
Into the treasury yield curve, or is this a situation where bonds can stay bid because there's now this safe haven demand for treasuries that really hasn't been there in, say, the past, we'll call it 15 months?
Yeah, it's a really good question. It's funny, I was thinking about that earlier today. I would probably have to go with the latter. For the first time in almost a year, basically, I would say that I think we're starting to return to this place where bonds will be viewed as a safe haven, a negative correlation to the stock market, positive correlation with implied volatility in the stock market, as opposed to being correlated with the stock market as it was the last few months, especially, or over the last year, really. I think it's important to remember that once inflation becomes...
Let me look at Silvergate.
...starts to go away, right? Because remember, inflation is one of these nasty things that kind of gets you double whammied on
the IV is pretty high in Silvergate, 10%.
Because it's a fixed income asset. We don't like inflation in stocks because it causes fear.
There is put skew.
It basically causes volatility with corporate earnings. If we're being honest, that's really the bad thing about inflation. Inflation, contrary to popular belief, it's not actually about prices going up. That's not the issue at all. The issue is the unexpected nature.
I can always do 100 of these for Feb. It's gonna be an extra like $1,200 between now and Feb. And by the end of Jan, I can probably close it for like 800 profit. But the commissions are crazy when you open 100 lots. Commissions are nuts. If I wait a few more days, I might get a better price on this.
So that's the key thing to remember. I think we're not looking at an inflation.
Let's see if I can sell any.
Bonds can resume their inverse correlation with stocks.
That's 120 profit for 840 of buying power. I'll wait till Friday, because I want the other one to expire worthless, and then I might take some more on for next month.
Sure, we're starting to see that yields. I mean, yields are lower across the board. The prices aren't necessarily reflecting them as much when we look at the continuous contracts, but just across the board today, 1-year yield down 3.9 basis points, 2 years down 12.4, 7 years down 18.2, 10s are down 16.5.
The VIX is really high.
So yields are coming back in. Effectively, when we go back and take a look at this on a daily chart here, and let's go switch it over to our daily chart.
Square's down 3%.
You can see here that we are basically trading now at the highs of the year. So
let's look at this Microsoft story here.
Microsoft, he called it. We're going to be a cloud-first company, and that's what spurred the growth throughout his entire tenure. This is what he sees as the next wave of growth.
All right, Steve, stay with us. Because we do want to.
Am I losing here? No, I'm still up.
It's been 1 year since the tech giant
I could have taken profit here.
$1 billion acquisition of Activision Blizzard, but with the FTC suing to block the deal just last month, getting a deal done in the 18-month time frame set forth by Activision CEO Bobby Kotick seems pretty optimistic. Joining us now is William Kovacic, the former FTC commissioner. William, great to have you with us. Lena Khan made it clear when she first took over the post that
Lulu's 317. My Lulu position is really bad now.
Was this one step too far, challenging a vertical merger
seems like a very ambitious sort of thing to take on.
It is very ambitious. This is the most
I can always roll the other position out because I do have the 300 put, long put, right?
Could be called regulatory swarming. In the global environment that CEO Nadella referred to, you're not just dealing with the regulator in your own jurisdiction, you're dealing with others. And the other major authorities that are coming at them at the moment are the European Union and the Competition and Markets Authority. So the fact
But you know what? They balanced themselves out fully. 197, 179. It's almost like fully balanced. This one has more negative, has more theta, positive theta than this one has a negative. So I think it's fine. It's a little bit too aggressive. I shouldn't have done that. But it's fine. I also have some upside that I'm going to profit off of. I think when the smoke settles, Lulu will be a win.
Games like Call of Duty is going to be available on PlayStation and Nintendo, and not just on the Xbox. So they are making concessions to sort of address some of the concerns, the antitrust concerns.
I would say if the FTC was the only institution they were dealing with, they could have confidence that they'd prevail, that they'd be able to go ahead and close the deal on the timetable that they have. The FTC hasn't gone into federal court. They're using their own administrative process. And I think they could have some confidence that they could design the package of concessions, maybe with some adjustments, and get a successful outcome. They have strong political support from labor unions, which are delighted that Microsoft has committed itself to allowing collective bargaining within the Activision community. Labor unions in Europe also supporting them. So they have some strong political support that is lined up behind them that pushes in the direction of taking a deal.
Yeah, and in fact, at that point, the Communication Workers of America, the labor union that's been behind a lot of these unionization efforts we've seen across technology, they put out a one-page ad in the Washington Post, I believe it was last week, with Microsoft saying, let this deal happen. We think this is great. Because Microsoft preemptively, over about a year, or a little after, or less than a year ago after they announced this deal, they came out and said, we're open to unionization. We understand this is a concern of the FTC. We're going to let it happen. In fact, they put their money where their mouth is, and they let ZeniMax employees, which is another video game studio they own, they let
Yo, take notes from me. How you doing? Market's been really good, actually. These past few days, I've been doing really well. I'm just about at my all-time highs. And I'm trying to hit 412K, but I do have a few more weeks to achieve that before the end of the month. So things are going really well. Things could have been better with some of the plays, like AMC play was a bit weird today. I realized some losses today, a lot of wins too, so it balances out. You're doing rather well, nice. You're a person who trades every few months, I see. I trade daily and I trade a lot, but it's because I sell options. And I take a lot of risk when I sell options on ON stock. I never heard of it. What is that? Semiconductor? Really? Who plays this? I've never seen this in my life. What's their story? Are they out of Taiwan? They don't even trade aftermarket. There's no volume aftermarket. American made, yeah. Are you long or short? Maybe I'm gonna inverse you. I'm gonna sell some calls against it. On the weekly, it's up, so maybe you got it here. Oh yeah, that's a nice gain. It's up on the weekly, so if you got it at the bottom, then you're good. But I never heard of this company. Let's look at their fundamentals. Dollar wants to go back down. I'm so glad I got out of my dollar position. I've been talking about that for a week now. They have good revenues. 8 billion of revenues. 2 billion of net income after tax. Before tax. That's a decent profit margin. They have 2.5 billion of cash. Seems like a good company. They're one of the suggested stocks lately, late last year for you. Oh yeah, cool. From Kramer. Sometimes Kramer gets it right, you never know. So PE 17, forecast, okay, seem good. They're gonna move with the semiconductors though. They're gonna move with SMH, right? They're gonna have the same trading range as SMH. They should actually. On the daily. Actually, not quite, but close. SMH is actually doing better than ON. SMH is up 17%, or maybe it's just the perspective. Yeah, it's the perspective, about the same. So yeah, they're trading in the same range. That's why. Yeah, that's why the other one looked better. So it's basically a good bet on semiconductors. It follows the trend of the semiconductors. But I'm already short semiconductors. But I never heard of this company. They got more potential from a merger. Ah, I see. So that's good for a long play. Mergers are scary when you sell a short premium. Ah, you can have more shares. Makes sense. Yeah, SMH is very expensive. So if I go to March 3rd, and yeah, mergers are scary when you're short premium, but I can go short premium here, just a small position. The premium seems decent, $1, and we'll have to break out of this range here to pass the strike. If I can get this filled, I'll fill it. I'll take it. So I'm gonna short premium here. It had a pretty bearish candle today, kind of. Dollar's coming down though. Take a look at Microsoft. Microsoft is at the same level I shorted it at. And SPX is, I think it bounced, eh? Yeah, it's going back to the 23% retracement. So bounced right near the 0%. This was the CPI lows. So right near the CPI lows, we got a bounce. So we'll see if we get a rejection. So on CPI day, we didn't stay here for long. We literally only stayed here for like a few minutes. And then we went straight to this range. And then we spent most of the day in the upper range of this Fibonacci. But today, I think the opposite will happen. Is we're not going to see this area again. And we'll spend the rest of the day in the bottom area of the Fibonacci range. And then it's going to set us up for potentially selling off more tomorrow. Maybe. Let me see if I can close this. I'll take off a little bit. See if it's liquid enough to close it. Okay, I got it. $1.03. APA is another stock. It's oil. It's a hidden little potential gem. Eager to see bloom. Oh yeah? Never heard of it. Let me check it out. I like to learn new tickers because when you do the strategy that I do, you want to do what Tasty Trade tells you, which is to trade small and trade often. So multiple small positions is usually better than a single large one. So that's why I like to learn about new tickers that have options. I like that commercial. Dollar's selling off though. Good thing I sold my dollar. Let me go. The dollar, sometimes you gotta look at it in a 5-minute chart. 1-minute chart doesn't do it justice. You get a much better perspective. Dollar looks like it's falling off a cliff. Microsoft is rallying. Oil stocks all have good fundamentals because all the shitty oil companies already went out of business a long time ago. So most oil stocks have low PE, high dividends. Yeah. That's not the highest dividend. But yeah, they have good revenues. The income though, they had a few losses. Net income. Wonder why. I don't think I have any oil positions right now. Oftentimes, Oh, there we go. Now we're selling off. Oftentimes I would sell XOP. And ON itself is a lower price stock. Oil has rallied a little bit too much in my opinion, and that's why I've been shorting it the past few months here and there. Although ON hasn't had as big of a rally, it would seem. Yeah. Maybe a good play. But I'll keep it in mind. I mean, APA. What am I doing? Yeah, APA. Let me look at APA. So on the weekly, oil has had a good run. And yeah, you can see it here too on APA. It went from 30 to 50. So 67% gain in APA. Which is a lot. So yeah, oil companies have all had this little boom over the past few months or past year. You like to do 6 to 8 mid-sized stocks, usually with 10K. Nice. Are people who go digging and surveying for bigger corps. Ah, that's a valid business model. Transport has been your best cash return in the last 2 years. GATX. Nice. So it looks like you're a buy and hold trader. Yeah, the risk reward and premium collected pretty low. So I'm not going to trade APA, but let me check XOP. I haven't had an XOP position since December, and it's down a little bit. I was opening positions when XOP was up here, right? And I think because we've come down to this range, I think I'm going to sell downside on XOP. It might sell off more because of a recession, but then again, we have China reopening that helps against recessionary fears, right? So, and we get decent premium opening these. This one is pretty decent here. Although it's only 39 cents, so not that decent. Maybe do a 122, 120. And then pick up a little bit more premium. Pick up a $1.28. And then only one contract. I wouldn't want to do too many of these because I still think that we could have oil sell off sharply from here. It's possible. Although most people are bullish on oil. But I don't need a big position for oil. I just want a small one. Just pick up some theta from oil. There, we got mid-price, so that's good. So yeah, I still have decent buying power in case I want to open something up. I'm still hoping for a sell-off. Looks like my account took a small hit since I peaked earlier today. But I'm still pretty much at my all-time high, so I can't complain. And I just got to work on increasing that amount. I close a lot of my winners, so I'm left with these guys. 2 big winners and a lot of like tiny ones. But most of these positions have been opened in the past few days. So it takes a bit of time for the theta to build up. And at least I don't have any outsized losers. I think they're all fine. Even the Lulu's fine because it was part of a spread. And I've already collected a few profits from it. I've collected 797 of profit from it. So I just have to manage Lulu. I think if I do it right, it should be fine. It should be a good play. And then, yeah, the SPX plays are going to be very important. So I have a few bearish plays on SPX. Hey, Fubar, how you doing, man? I'm hoping for it to sell off, SPX. But we got a little bit of a bounce recently today. So we crossed this Fibonacci and we're going up. So maybe the bulls are going to win this. But the dollar isn't going down that fast. That's the thing. The dollar's still elevated. ZQ is losing me money. That's why I'm taking a hit. I realize now why my size is going smaller. because ZQ is taking a hit. But I think ZQ, it's going to be my new buy and hold. It's going to be my new currency play. And I'm just going to wait for it to retrace back in this range. But the PPI result was actually so bearish. No, not the PPI. The retail sales. But the PPI was low enough that the markets have priced in some cuts in the future. But if we can get back to this range, it's going to be decent profit. But I'm also afraid that we really make new highs, right? Because back in October, the markets were not pricing in so many rate hikes, right? So the ZQ was priced higher because of that. But since we had, I think it was Jackson Hole, or Jackson Hole was in November, no, it was Powell. He had a speech in September around here, and we had a super bearish day where the markets tanked, and then the markets bottomed in mid-October here, or late October. And then the ZQ has been range bound since, but it's been mostly within this area since. So I'm just hoping for it to come back down here. I don't think there's any way it goes back up here. If this goes up by $1, so if it goes from 95.6 to 96.6, I lose $4,000. So that's how heavy this product is in terms of like nominal cash size. It's a very big position, but it moves very slowly, and it's difficult for it to move. Theta under 1K breakdown and come back in the game. I know, right? I have my theta at 700. I close a lot of positions. I got screwed up by AMC. AMC was a bad play, but it wasn't that bad. I'm near my all-time high, so I can't complain. But I could have played AMC better. Next time I'll know for AMC. But SPX got a huge bounce here. It looks huge, but it's literally like 12 points. After we sold off how many points, right? So we sold off from the top. We sold off, whoops. You can do anything with cloud computing stuff. Oh yeah? I agree, actually. I made myself a Microsoft 365 account, Office 365 account. I like the idea of cloud computing. 39.39. So yeah. So we lost here 70 points, 70 plus points. And then we just retraced 10 points, right? 11, 12 points. Now stock might be of interest if you invest in that area. Think so? But it's been a while. Like cloud computing has been part of tech for a long time. It's not like it's a new technology, right? All right, there we go. All right, just gotta be patient here a little bit. Don't need to make any more plays right now. So let's just watch the markets. I gotta check and see if there's any other Fed speakers, because the Fed speakers can move the ZQ. Tomorrow we have Netflix earnings, which should be good. Crypto giant Genesis is planning to file for bankruptcy as soon as this week. Oh wow. I was getting confused with Genesis and the other one, Gemini. Take a look at crypto, Silvergate. Silvergate deals with these companies. Silvergate's down 6.5%. Silvergate's going to be a good opportunity for Feb, I think, and March. Because as long as it stays depressed and IV is high, I can do a little bit of arbitrage selling puts at a really low level where I don't think there's going to be, bankruptcy. But it's like buying bonds of companies that are near bankruptcy, but you think they're not, and you make money off of the spread or whatever. But Silvergate actually has a business model that is unique. It has a competitor. I forgot the name of the other bank. It does have Signature Bank is the other crypto bank. But it's risky because a lot of the depositors have taken the money out, and a bank without any depositors is not a great bank, right? And I was listening to the conference call. The bank actually has a lot of cash, and usually a bank doesn't have a lot of cash because a bank uses the cash to generate more cash. Like instead they carry treasuries and stuff. But they had to take a loss because they had to sell treasuries to meet the depositors' demand who were withdrawing cash so fast that they had no cash on hand. So they took an $800 million loss because they had to sell their treasuries before maturity. And right now they're holding actual liquid cash above the depositors, the liabilities from the depositors' cash. So that's not good for a bank. Usually a bank, they want to make money using the cash, right? So, but they said it's because the industry is going through turmoil, and they need to have cash on hand for now while things stabilize within the industry. Because if there's another shock and they don't have cash to meet the demand, and they have to sell securities at a loss again, then they'll be in an even worse off position, and then they might be, potentially headed for bankruptcy. So it's definitely risky if you play with a company like Silvergate. They're one of the companies that creates those condensed employee training software style of stuff, and once a company hires to create all of that, they usually stick with it. Yeah, it's true. Yeah, the kind of software like HR software, payroll software, those are super valuable. And I remember the early days of cloud computing. I was a skeptic. I used to be like, why would you want to store your information online where it's not secure? We're coming down here. Looks like we're coming down. I was like, why would you want to do that? And then I was thinking of ways. I was like, well, what if you had a device at home and it's like a storage device, but it's connected through everything through Wi-Fi. And then when you go home, you can sync all your devices using that. But it's way more complicated when everything can just be connected to the internet, right? Every person to have a device at home. It's better for privacy, maybe. But then you can't access it if you're outside of home. Or maybe through internet you can, I don't know. It would be like a cloud service system, but it's centralized to your house. As opposed to Amazon Web Services or whatever, Apple Cloud. But it would be a lot of work and it would be expensive. And then it's like impossible to sync like iPhone stuff with Android stuff or whatever. It becomes complicated. It's keeping a backup of important files while also being able to monitor who's accessed it. If someone tried to steal info or data, you'll know who to look at. Makes sense, yeah. Alright. So, looks like we've bounced off of this Fibonacci and we're coming back down. So yeah, this is what I predicted. I predicted that today we're gonna be in the lower range of this Fibonacci. And if you compare it to a few days ago, we've been in the upper range of these Fibonacci's. Ever since CPI, we've been in the upper ranges of this these Fibonacci's. Yeah. Okay, now I get it. This was CPI. CPI was on the 12th. Yeah, so there we go. So we had CPI, and then we spent most of the time up here. And now we're back down. All right, Microsoft is coming down. Dollar is still elevated. This is where I sold my dollar. I can always consider getting more of it. My account's getting a bit of a boost here. It must be ZQ. No, it's not. Something else giving me a boost. Probably SPX coming down. Because I do have exposure to benefit from a downside. This Iron Condor is still up. This Iron Condor would really benefit from a sell-off. AMR was a good play from yesterday, and I might want to open another one. It just seems like a good uncorrelated play to counteract my my other plays. Maybe even sell upside risk on AMR. Although coal might get a big boost from the China reopening, so it might be risky to sell upside risk on it. And check out Iron Mountain, super deep rooms and mountains. Oh yeah, for safekeeping art. Interesting. So they're like basically like a custodian of physical valuable products. I have some gold coins at home. Upside risk 190. The premium's not bad when you consider it how far out this is. And $67. No, not a big fan. No, I'll just leave it. I'll just wait on this. I have one position, that's enough. Is that a stock you trade, Fubar? Is that something I search for here? What's the ticker? What am I gonna do now? Just wait? Just observe, see what's going on? Maybe open more downside risk to benefit from this. But my intuition is to open upside risk because I feel like markets are going lower, but the markets haven't been cooperating these past few days. My intuition is to sell more upside risk, get more negative deltas. And so far, all of my negative delta plays have been okay. Like none of them have really burned me that bad. This one came close to it, the QQQ. This one I was down a few hundred. The dollar was bad, but I finally closed it. The dollar was like costing me $500 yesterday of unrealized gains. So, yeah. So upside risk plays haven't hurt me that much. But everything's already sold off quite a bit, so selling upside here, it's not as nice. But the IVRs have gone up a little bit. I think meme stocks are not going to get a big boost in the next few weeks. I think meme stocks are going to be the first ones to go down. So just maybe a tiny position here. Tiny one. It's risky with this company, so you don't want to go big. Just sell upside risk on meme stocks. And then maybe even counteract that with a long put. But that's a bit too risky. I would rather just have this. I can get a long put with that and then benefit from a sell-off as well. but I don't like to go too directional. Just having the one short call ratio spread is good enough. They can always rally hard. That's the thing with the GME. You can really get caught off guard with GME. But usually you get a warning, like you wake up and then everyone is like, GME's going crazy, man. GME's going to the moon. Everyone is excited. You can feel it in the air. And then you can just close it or buy 25, 50 shares. And I don't think anyone is excited today about GME. Problem is I might not get a good fill here. Come on, that's 3 cents already. Give me that fill, 4 cents. So wondering how you had multiple position on the option strategies, but I think the plus sign on the right shows it. Yeah, look, but the thing is that I know already what these contain, so I don't really need it. But these are all spreads. I'll show you the spreads. So these are all spreads, and most of them are ratio spreads. But the main idea is some of them are bullish and some of them are bearish, right? So these are all the spreads. I have more. I have even more spreads. But the screen would be too difficult to read if I had all the spreads open. I just know what the spreads are because I do this every day and I follow my positions closely. But the main idea is some of them are bullish, some of them are bearish. So some of them benefit when the price goes up, some of them benefit when the price goes down. So the main idea is for me to just keep track of my overall deltas, and then I can also manage risk using this window here. Just move the sign column. I see. Yeah, I mean, it might make a small difference, would it? Maybe. I'll do it for the aesthetics. There, this is fine. That's a good way to do it. Now you can see which ones are spreads and which ones aren't. So these are spreads, these are not. So that's one way. It helps visually, I guess. Yeah, that's a good way of doing it. Thanks, man. I always thought it was weird that it was here, but I also didn't like it in between any of the numbers because it was distracting. So here's perfect. But yeah, I think it's fine. I just need more theta decay. The thing is, because I look at this constantly, I keep wanting to take money out or change positions, but a lot of it is just waiting. You just gotta wait when you're earning theta. Maybe I need to add one or two more positions to use my buying power. But what I'm afraid of is a big VIX expansion. And I had a VXM contract, which I bought last week. It was a really good price, but I took the profit early. But last week, when this was at $20.40, it was such a good deal because of the potential volatility. So the risk reward was definitely on the side of buying it as opposed to selling it. But I only bought one. It's fine. This is my overall strategy, is to just try and stick it small with everything. And if on average, the positions you're opening, even if you have the tiniest edge in the world, if you open many of them, you're more likely to benefit from that edge. But that VXM, it was just so obvious. It's like, we have Fed speakers, we have data coming out, we have FOMC, all between now and February. And it was going for $20.40, like 52-week lows. It was ridiculously cheap. But at this point now, I probably wouldn't buy it because it's up $1. The entry point was last week on that. ZQ, how's ZQ doing? ZQ is not doing the greatest, but I wouldn't sell another one. Gotta be patient with this one. MicroStrategy, this was a bad position. never gonna make much money out of this. I'll just keep it because it's not costing me anything. There's basically no risk to it. And I do have 2 losing MicroStrategy positions. That's bad. This one and this one. But they're okay. They're gonna earn theta, and over time they're gonna balance out to winners, hopefully. Coinbase. This one is a bit risky, but it's fine. This is probably one of my bigger risks right now in terms of like gamma risk. Yeah, negative 3.2 gamma. Although this one shows as negative 47 gamma. Weird. All right. So everything looks good. Oh, it's already 11 o'clock, eh? Let's see what's going. Maybe listen to a little bit of Dylan Radigan. These guys are smart. See what they're talking about. I'm gonna grab some water and BRB. Microsoft is really rallying crazy. BRB.
Combined with a human desire, a human complex, to want someone else to be able to have the answer, to admonish themselves of responsibility.
That's very different, but sure.
No, I recognize that it's very different, but I also think to have this discussion and ignore that is beneath us and beneath you as a man because of the complexity of your ability to think. So I think if you're not going to integrate that aspect, which I would argue is the most influential force, it makes this conversation less interesting because you have to have decided that you're not only going to say Jamie Dimon is not LeBron James, and I can take anybody with this toolkit and make them at least 50-50 to do better or worse than anybody else.
Sure.
But that's okay. Great. That's a math paper at University of Chicago.
Yeah.
And I congratulate you. But that's not what you did. You took that math paper, wherever it was done, on the back of a napkin or and said, I'm going to make a business out of this. And I'm not afraid of the fact that the native content environment is one, and the complexity of the environment is one that's set up to encourage people to give up control and to stay low information and give up control. The whole system is designed for granny, grandpa, whoever the retail investor is, to remain relatively low information and give up control.
Does GME have earnings? Is that too risky of a position? Let's see.
Your whole point is this is
GME.
a disaster. Where are the customer yachts going back forever?
It doesn't. March 16th.
And you have a plan to show people how they
So maybe we'll take this position. No earnings. Just need to get filled at some point. What's going on here? Damn it. It's just not filling.
Especially as you get bigger. At the beginning, you're always going to have wild men who are like, I got it.
Last one.
Like the first
Right,
piece of growth is easy because you have an endemic population of maniacs who are like, I'm the man.
Sure,
that's your base. But now you're at a point where you're like, okay, I'm 10 years in, I'm growing. Like, I'm going to be more and more bumping against the endemic.
Zero for 7 years. And I think that, and by the way, by the time 16, 17, 18 rolled around, people started to say, well, shouldn't rates be a little higher so that if we have a recession, the Fed can cut rates and become accommodative? Well, if rates are a 0 or a quarter or a half, you can't do that.
Yeah.
So I think that's an important reason why rates should be positive. And if you want to fight inflation and kill off inflationary psychology, which is very important, you need a positive real Fed funds rate. That is, the Fed funds rate has to exceed the rate of inflation.
Oh shit, Microsoft has earnings. That is so risky. That is next week, isn't it?
If not a parallel, at least maybe.
That is super risky.
Not really, because Mark Twain said history does not repeat, but it rhymes. We haven't had much experience with inflation. I lived through the last one, which was in the 70s, a most unpleasant decade.
Right.
But then I think the situation was different. The sources of the inflation were different, and of course it reached the mid-teens.
Right.
I think we're not going there this time. I think that the original reasons for the current bout of inflation, too much money chasing too few goods, money from pandemic relief, money people put in the bank in 20 because they couldn't spend it, and then a supply mechanism that was sputtering, too much money chasing too few goods. That will correct.
We're coming down here.
Okay. The extra money will get spent, supply will catch up.
Dollars going up.
The forces behind inflation will abate.
Okay, so that puts us in a situation where the risk profile.
I'm back to 407.
You started your career at a time when risk was a much different thing.
Hold on, I lost the feed.
Relative to what we saw over the last 15 years or so here. So what does that mean for the next generation of investors? What are they facing when it comes to how they have to assess that risk?
Well, anybody who joined after 2009 pretty much only saw good times, except for a couple of bad months in 2020 in connection with the pandemic shutdown. But, for my first 30 years in high-yield bonds...
Let's check out Apple. I haven't played Apple since closing it.
4% a year. In the last
Maybe we
decades,
play something on Apple.
I think 4 is more normal.
Because it's not a bad stock to play. You just got to be careful not to be too close to in the money. Because...
harsher environment.
Well, let's unpack that. I mean, start off first with the rally that we've been seeing lately in high yield.
Because the stock, when it sells off hard.
Well, I think the current prices are roughly sustainable. When you say, is the rally sustainable, they're not going to keep going up. That is to say, yields are not going to keep coming down, in my opinion. I think that rates are roughly where they can stay.
Maybe just sell one of these. It seems like a good risk reward. It's far enough where we're not likely to reach it.
People who think that the recession won't be too bad.
And then I'm not going to sell downside because I already have downside risk on Microsoft. So that's a good one to have.
Accommodative, soonish.
Are you optimistic?
Not on that subject. I mean,
Okay, they're talking about Apple.
And the supply chain situation has improved. But we do anticipate that over the next couple of years, Apple will address its overdependence on China. The other good news, though, is that they had a projection of a 10 percentage point negative impact from a strong dollar in the December quarter. You're starting to see the dollar get back some gains against the pound, against the euro, so that might work in its favor. But the big headwind, again, is a challenging macroeconomic environment. The good news is consumers will spend a great portion of their discretionary income on Apple's products, especially the iPhone.
Have either of you, I'll start with you, Steve, seen really compelling evidence that Apple is ready to reduce its dependence on China?
A little bit, in small but significant ways. So, for example, they started producing iPhones in India, a little bit earlier than it used to. Small. It's not going to supplant China. It's not going to take away their dependence on China. Absolutely not. Other places.
And obviously, they don't want to tick off China by saying, we're moving our production here.
Right.
I mean, it would be self-defeating.
And also, their silence spoke volumes about the protests that we saw. They said they were monitoring it, but we heard nothing from Apple about, the ramifications of those protests and frankly, horrifying footage that we saw out of there. So that's one issue. The other issue, so there are little pockets of places looking. Vietnam, Malaysia, those are all hot spots right now where they may turn to start producing more products. A lot of that right now is happening, but it's mostly the accessories, the AirPods, the watches, some Macs, and things like that.
We had a segment yesterday on value-driven leadership, and Tim Cook was mentioned as one of the people who leads with values.
Yes.
That was not a case where he led with values, it would seem to me. Tom, let me ask you that same question. Do you see real serious, at scale, and attempts by Apple to not rid itself of its dependence on China, but reduce its dependence on China?
Yeah, so definitely this is going to take multiple years. I think that the initial indications are more reliance on India and then to a greater extent, Asia and things of that nature. So I think that right now it's more of a need than anything that's put in place. But I do expect that this is Tim Cook's, forte, pun intended.
Yeah.
And I do think that he's going to address this over time. And over the course of the next couple of years, they'll be a lot less dependent on China than they are today, which really is the biggest risk to the stock.
All right. Tom, thank you very much. Steve, great as always to see you. Thank you both very much.
You.
Up next, more on the market's move lower as we look at the Dow Industrials approaching session lows. That's pretty doggone close, if not.
I have a lot of upside risk on Lulu. I just realized. I have way too much upside risk on Lulu.
Well, the cleanest shirt in a dirty laundry.
Let me take a look here.
On the mortgage market, demand climbing as rates drop, but is this newfound housing confidence here to stay? Plus, mutually.
So how much is my value at risk here with Lulu? So VAR 3,500. Okay, not bad. I thought it was more than that. And pretty much my highest VAR is Lulu, but I am monitoring it. Microsoft is the second highest, and then First Solar. I don't know why First Solar carries so much risk that I don't see. Maybe I should just take my profit on it. And I guess AMR too. Crazy. It's good to keep track of this. Yields are not going to come down. That's what Mark says. Let me check and see here.
Efficient markets tend to cause free lunches to go away.
ZQ? Okay.
But it was great to get there early.
All right. Well, you certainly did, and built a great career off it. Howard, always wonderful to talk to you. That's Howard Marks, of course, the co-chairman of Oaktree Capital Management from New York. We'll be back in a moment. This is Bloomberg.
All right, Microsoft is going higher. Interesting. This one's only down $66 now. I can close one of them maybe and then reduce my downside risk on Microsoft. Pre-earnings might be an option. And I'm only down $15 on my hedge. Just reduce the downside risk on Microsoft. Microsoft is a big one. It's definitely a big one to carry that much risk on the downside. So I'm gonna take one of them out and keep the other one. I think that's one way to do it. And then maybe close my hedge or keep that as a day trade. So this is fine. Just gonna manage that downside risk a little bit since we're selling off faster than I expected. Because judging from the past 2 days of price action, I thought we're gonna be staying up here for a while. And the fact that we've already made it down here so swiftly is a little bit scary. Short-term profits, let's see here. Because the layoffs, yeah, don't know how 10,000 affects their short-term cash flow. I don't think it makes a big difference. That's the thing. To me, it's like a bull trap, because in the past like 4 months, every time a company has had layoffs, there's been a big rally. So then all the chatter right now on Twitter is that as soon as there's a layoff, buy calls. That's what everyone says. So to me, it's a bull trap. They just set it up so that people are going to buy tons of calls right before earnings and then just dump it so fast that you can't even take money out of those calls. That's what I'm thinking. That's why I'm scared for the downside. They've done it way too often, like the rally after the layoffs, that this just smells fishy. I think Microsoft will do the opposite. Especially considering the timing, you know, all the other companies have earnings. And then let's say Netflix has horrible earnings tomorrow. The market's going to sell off. And then these short puts that I have are going to be worth so much more, right? Because of IV and just overall market fear. So just taking one of them off is good. Keeping the other ones all right. That's enough risk. But having two of them is very risky. Because it's pretty close to at the money. If it's further out of the money, further out in time, it's not as bad. But it seems like we're going up, so maybe I should have kept it. But it's only a $30 loss. It's not the end of the world. And I still have the other one, right? So, but SPX wants to go back up here, back up to this 23% retracement. Microsoft wants to go up. Yeah, so maybe it is gonna explode because of the rally, because of the layoffs. Tesla is bearish. Yeah, Tesla would have been a good short at any point. But it is coming back up though. TLT's had a good run. I'm considering selling upsides on it. It had a big weekly candle here. What's wrong with these candles? So ugly. Oh, there we go. Okay. So yeah, that's a few weeks ago. We hit 110. So today, in the next few days, we can definitely pass 110. It's possible. TBT, you can always sell puts in TBT. How did it go to 55? That I don't understand. Probably just after hour stuff. Maybe just go 30 something days out. Layoffs is a way to increase the short-term profit. It's harder to lay off building and rent. So fast way to make some profit is lay off, but long term, it is, yeah, bad signal. That's true. That is correct. Okay, just a tiny position, short TLT. It's a lot of buying power. That's the issue. For a couple of dollars. At least the spread isn't as bad as some other positions. Maybe what I do for TLT is I do a bit of a lopsided triangle. What's the IVR? 26. So maybe I go pretty far out, but I do a lopsided, like a 113, 104. So that's 28 versus 25 delta. Like a 112, 104 strangle. It's $260. It's 4,200 of buying power. That looks better than that ratio spread. Because if we go down, I can make money since it's 33 versus 24 delta. Actually, I can bring this down to 22.9 delta. So this is going to give me net short or long delta, short delta, yeah. Or is it long? Long delta? Wait. Minus 22 plus 33. It looks like long delta, but it should be short. I'm just reading it wrong. It's fine. I'm not an expert yet. So let's go negative 248. And this could be a small winner for the next few weeks. So it might be good to have this position on. One more. There we go. It's always after three ticks, and then they take it. All right, so near 700 theta. So I need a little bit more, maybe not though. Just gotta be patient a bit. Don't overdo it, because then what happens is when you overdo it, you're forced to do corrections after, before they become bigger mistakes. Like this range here, I don't mind correcting at all. Anything that I don't like here, I'll correct. But once it gets to this range, it's a little bit harder to correct. We're already at a big loss. So everything looks fine though. Just overall, I feel like it's balanced, and I want markets to go down. I have these positions that's going to benefit immensely. If it's a sharp sell-off, I'll benefit even more. So maybe IWM sell a similar type of triangle in IWM, where it's closer to the call side, further in the put side. It's going to be more buying power efficient than selling a call ratio spread, and I'm going to get more premium. So maybe this is what I need to do with IWM, because IWM has had a serious run. So maybe being aggressive on the call side and doing like a 27 delta call, and then being defensive on the put side and doing like a 12 delta put or a 15 delta put, so that this is defensive, where I would benefit from a sell-off. Even an 11 delta put, maybe I'll bring this up to 22 versus 11 delta, and I get $258 up front. I think this is good. It's $6,000 of buying power, which is a lot, but it's manageable. And if we do sell off, I benefit anyways. Let's go. Try to get mid-price on that. Yeah, I'm happy. I need to do more strangles. Strangles, I did a few good ones on Apple, and I'm gonna track by strategy too, and just see how much better they are. And the good thing about trading often is you get more data points for when you want to analyze how your positions are doing. And then as long as you're open to the idea that your position is just bad and you shouldn't do it anymore, then you can use the data point to your advantage to stop doing certain positions that just don't pay out.
East Asia, the commodity space is going to lift commodities in Latin America. So when you put everything into balance, I think this rally has further room to run.
And of course, I wonder, though, with the reopening of China, because it's happened so much faster than people anticipated. We thought there was going to be stages, but it's pretty much ripping the Band-Aid off.
Yeah, everything looks
good. How messy will this reopening get? And by that, I mean, how much will we see a surprise in inflation?
I need a sell-off for this, but I still have a lot of days, 30 days.
An unexpected, at an unexpected pace.
I think you're going to see quite a bit of pressure in inflation.
CarMax is selling off.
Also globally. Once again, the commodity space as a transmission channel to the rest of the world. Not going to be easy for the United States, for Europe. When you look at central banks trying to control inflation, this is going to make their life a little bit harder. But I think overall, the reopening of the Chinese economy is good news for global economic activity, particularly emerging markets economic activity.
It certainly provides a foundation, but of course, I'm sure, as you know, Alejo, it still comes down to some of the individual countries and how they manage things themselves. I do want to talk about some of those countries and some of their, I guess, specific
Max,
problems.
maybe.
Let's start with Brazil, because that's been the big focus with the election, the new regime coming in here. Is there an expectation that whatever policies we do get out of the new Lula government, are they going to end up being market-friendly in a way that you assess?
Look, we've got 18 days of Lula da Silva in office. So far, the evidence in terms of economic policy making is rather mixed, right? We're looking at
Maybe.
particularly
If I could
how
get
his
filled,
administration
I'm
is
mid,
going to
or
handle
close to
fiscal
mid.
accounts, how they're going to handle the management of state-owned enterprises, and we've heard once again mixed signals over here. Now, the good news is Brazil has quite a bit of tailwinds from the global environment.
I don't know
China
much
reopening
about
once again,
CarMax,
commodity
but I
prices
know they've
relatively
rallied
elevated.
hard.
So, if they manage to avoid big mistakes, I think the future is rather
In the
bright
past few
for
weeks.
Brazilian assets.
Yeah, we saw how Brazil certainly benefited from Chinese growth in the late 2000s, from 2008 onwards for a couple of years there. Lula's administration wants to win back Brazil's investment-grade credit rating. How feasible do you think
This
that
is
is?
bad.
And
I
what
gotta
kind of
give up a
timeframe
lot
would
of
be
the spread.
realistic?
Look, history shows
Cancel.
us that losing investment grade happens a lot faster than your ability to regain investment grade. It is desirable to try to regain such a status, but it will take time. I think, quite honestly, unless very deep structural changes are adopted for the Brazilian economy, this is unlikely to happen during the duration of at least the current term of Lula da Silva.
Brazilian economy. Let me check out EWZ.
Do you find
Whatever the heck's going on with them. That's so funny.
Argentina, you know, maybe this is a time.
This guy's funny, I think.
I don't know. I feel like it's been a basket case now for like 25 years.
Yeah, you're not wrong. We see deep structural challenges in the Argentine economy.
What's Argentina's
I guess the
code?
good news
They have a
something
code,
to
right?
highlight has to do with the possibility of political
Maybe
regime change. We've got a year full
strangle
of
on
elections. We've got
EWZ.
primaries in August. We've got general elections in October, a potential presidential runoff in November. It is sufficient for Argentina to do for changes in a less bad direction.
Like a 32.5.
For there to be a support.
They have such a bad track record.
Very bad track record. A perennial
26.
defaulter.
Yeah, that's an understatement.
Lionel Messi provided the one bright spot for
Delta.
Argentina this past year. I want to end with Peru, which
For
of course is seeing a lot of
$84?
political turmoil. Is this
It seems
just
pretty,
an uninvestable
cheap.
country in the near term?
But it is a
Not at all.
country
It is
ETF.
quite investable. The fundamentals of the Peruvian economy
Maybe
are
go a bit
solid.
more
When you
aggressive,
look at,
29.3
debt to GDP levels, very healthy.
and
Currency composition of that debt to
25.5.
GDP stock, quite good. International
12.5.
reserves stored at the central bank, quite significant, supportive. So overall, I think you've got a lot of political volatility in Peru.
That's probably better.
But the fundamentals, I think, more than make up for this challenge.
Are you investing in Peru then?
Yes, we're investors in Peru.
All right. Alejo Cherwenko, thank you so much for joining us. Alejo is CIO of EM Americas at
All right,
UBS.
I have a
Global Wealth
EWZ
Management
short
joining us
strangle
here
now.
today. Now, still
First time
ahead on
trading it in a
Bloomberg
long
Markets
time. Because you don't get a lot of premium, but at least with the strangle, it looks like the premium's okay.
Way down in Macau.
So it should be fine. Opened a few extra positions. I have 75,000 of buying power left if I want more. But I should be fine. Everything looks good. I just gotta be patient. Sometimes when everything's going okay, it's the hard part, because you just gotta be patient. But then you end up doing like day trades and stuff or whatever. Microsoft, is Microsoft coming back down? It is, yeah. Okay, so good thing that I kept the short, the 25 shares short, and good thing I got rid of the short 222.5 puts, because we are potentially approaching the strike if things keep going down. Check SPX. Yeah, we're coming back down. Coming back down. I opened a new Boeing position. I took profits off of another one. So we'll see how this goes. gold, I opened this a while ago and I still haven't profited from it. It's actually a pretty risky position when I think about it, but it's pretty far from being in the money, and gold moves very slowly, so it's fine. Amazon, I opened this, I think yesterday. It's doing okay, just needs a few more days. This one, I keep reading it as Ontario, but this company here, I sold a call ratio spread. Apple 150 call on its own, solo, naked call. And then Nvidia 140 put, which seems to be doing okay. I can always close this if I want to reduce my downside risk. Crowd 70 put. This one I added it. I don't even know. I don't even like this company. It's a revenge because I lost money off of it. So I want to make some of it back before the end of the year. Coinbase. This one might end up being a big loser, but we'll see. MicroStrategy's down a bit. Bitcoin isn't doing too bad, all things considered. It's back to Friday's level, which was still very elevated. So Bitcoin hasn't retraced much. It still looks, look at the 4-hour chart, it still looks very bullish. It's a 22% increase in these 4-hour chart. But Bitcoin, we're going to get some opportunities with Bitcoin if it sells off a lot to sell puts in BITO. And I like that strategy. BITO is slightly profitable here, this short strangle. See what they're talking about.
Cut to sell over at Redburn. Analysts saying, well, the sweet spot for major oil companies won't last. Also saying the Exxon shares are at risk of underperforming this year. Shares down 2% on the day. Next up, let's take a look at IBM, also getting downgraded. This is the equal weight over at Morgan Stanley, with the analysts saying that the shares will struggle this year to sustain, as the company struggles to sustain some of those goals for revenue growth. IBM shares down 2.5%. And finally, interesting call out of Morgan Stanley here on the retail sector, a tale of two halves.
Did I sell anything XOP? I did, right?
Actually getting an upgrade today to equal weight from underweight. Skechers getting a downgrade. The analyst actually saying he sees more upside for Gap and some of those names here, given some of the potential opportunities for consumer spending. Gap shares up about 3% on the day, and those, Scarlett, are some of our top calls.
And Romain, we're going to stay with retail because, of course, data this morning
IBM
showed
is
that
pretty
consumers
elevated,
pull back on holiday shopping as inflation continues to impact their spending power. November and December saw the biggest declines in sales drops for 2022. So, of course, we had to bring in the expert, Telsey Advisory Group founder and CEO Dana Telsey. She's here with us in studio to give us her take on what this means. And, of course, we should mention Dana recently attended the ICR Consumer Conference where she met with CEOs of Macy's, Abercrombie & Fitch, Urban Outfitters, and more. So I would like you, Dana, to kind of align the data that we got from the government with what you've been hearing from these industry leaders. Are you getting the same message from them?
I think everyone is cautious about 2023. The first half of the year is definitely expected to be a bit more challenging. The holiday season, for the most part, it may not have had the boost to sales that was expected. And
I like
frankly,
this one.
Given the
This one looks
comparisons you had,
good for
you'll never
IBM.
get what 2021 was like.
Although
but
it's not that
companies
much.
moved inventory.
$45.
And it was just as important to move that inventory, even with promotions
That
that
ain't
were
much.
essentially in line with what was expected.
But
So
IBM
for the
moves
most part,
slowly.
earnings are coming in for the fourth quarter as expected.
A lot of buying
the
power.
go forward is
Maybe
definitely
we
in
do
question,
another
and I
one
think
of those
companies
strangle
are being
things.
cautious about their ordering. They're concerned about the state of consumer spending, given the
We're
wallet share that's
closer
moving,
to
whether it's
at
because
the
of
money on the
inflation
call
or
side,
higher rates. And
but then
that's
we're
why product
further in the
innovation
put
will
side.
be more important than ever. And I
So
think
28
that for
versus
the upcoming
16
year,
deltas.
you have to expect the unexpected because that requires agility, and that's what these companies are focused on doing.
So how much visibility does the average
28
CEO
versus
have,
14
and
deltas.
what kind of experience can they
And
rely
maybe we
on
bring
to
this one up a
navigate this
bit.
treacherous environment?
IBM doesn't
we're
move
seeing companies
fast,
place
so
orders
it's
for
not
up to the
as
next 6
bad
months.
as it
And a
looks,
lot of them are
risky
placing
as it looks.
merchandise orders that are down
I
anywhere
can
from
get
10 to 15%.
$300,
You're taking a look now
$338
at
for
supply
5,000
chain
of
where
buying
goods are
power.
coming in certainly faster and your ocean freight rates
We
are
will
coming
maybe
down.
take this
The
on.
question mark is, does promotions are required in order to move the goods because consumers won't pay full price? There's a difference between the high end and the low end.
Problem is, if
The
we
high
sell
end is
off a lot,
continuing to
I gotta
spend,
close the
but even at a
strangles
more
before the
moderate
deltas go
rate.
against me.
Well, at the low end, you're seeing a trade down. Companies, for example, are now seeing
Or
where their
adjusted.
average income levels were $38,000. They're seeing consumers
Alright,
that have
so I have
income
another
levels
strangle.
of $50,000 and $60,000.
So I'm gonna be
trading
very
down.
careful
So I
here
think
because
we're
we
gonna
can
hear
get a
more
big
about that
VIX
trade
expansion
down
and a
at
big
this time
sell-off.
when inflation is certainly
And
a
even though
concern.
these triangles
sort of grapple with
are short delta, meaning that I profit if we sell off, but if we sell off too hard, then it's gonna end up losing money. So I just gotta watch out. I have 3 of them. I don't usually play this many strangles, but I like the risk reward on them. So I think it's worth doing these
The offset
and then
with lower
monitoring
ocean
them.
freight rates, limited air freight.
It's
does that
definitely
help to
more
offset
buying
some of the
power
headwinds that you
efficient
have out there?
than the call ratio and put ratio spreads. So that's the reasoning. The ratio spreads are definitely safer in a lot of ways, but we'll see what happens with these new strangles over the next few days. I'm gonna monitor them closely and see how they're doing. Yeah. Like I had one I opened yesterday here, so negative 33 delta. And let me look at the new ones, see if we can find them here. IWM, negative 9 delta. EWZ, negative 17 delta. And then TLT, negative 10 delta. And then IBM, negative 4.9 delta. Okay, just make sure, monitor them. If we have a big rally, these short strangles are gonna start squeezing me maybe. So I gotta be careful about that. And I might have to roll up the puts on them if that happens. Microsoft is coming down. Yeah, so let's see what's going on. So far, so good. Alright, I got 70,000 of buying power. I have some risk on, but nothing too crazy. And on the downside, for the most part, I would make good money if we sell off. Just upside risk. I think I'm more confident opening upside risk now after market rejected 4,000 so strongly. Like, I have a feeling that the markets for the rest of the year want to stay away from the 4,000 area, because 4,000 is way too close to people breaking even. Like people who have been averaging down last year, they're pretty much breaking even on their long portfolios unless they had too many shitcoins. But if they didn't have too many shitcoins, they're probably breaking even now. And I think markets want to reach a bottom, and this is not a bottom. This is like just a hiccup, right? Like less than 20% down from the peak, that's pretty much a hiccup. And I think we need to spend a good portion of the year far from 4,000, and then for there to be a reason to rally, you know, some kind of change in the outlook, in inflation and in interest rates or whatnot. There needs to be some kind of reason for the sentiment to change. But with considering how fast the Fed's been hiking rates, how elevated they're going to be with the amount of debt running through the system, I don't know. It seems the risk reward is definitely on the short side. And that's why so many people are short. And that's why it's so crazy to watch all the pundits talk about how bullish it's becoming, right? It's crazy. CNBC is just another reality. It's another world. They always have a few people there that talk sense, but the overall sentiment, everything becomes super hyper bullish and hyped up.
Two stories here. I have a hold because short term it definitely has some issues it's going to be facing. We just had a year of inflation and price increases, and unfortunately you're likely going to see that continue having an effect on Kraft really and their competitors. I think you're going to have to continue to see promotions there. Longer term, though, I do think they've put themselves in a good position for longer term growth. Their leverage ratios have significantly come down, meaning they can put a lot more money into their business. And specifically what I like is they're actually focusing on things like emerging markets, which is going to be something not just for next year, but I think for the next several years. And seeing them invest money and focus on that, I think is actually going to be a great beneficiary for the long run. So short term, I have some hesitations. Long run, I like it. I have a hold for that reason.
All right, Courtney, thank you very much. Always great to see you.
Thanks for having me, as always.
Oh, you bet, of course.
Still to come, other key stories we're watching. Power Lunch will be back in 2.
That is an outcome of the pandemic. And during the pandemic, people stayed at home. What every country's government didn't figure out is the 90% who kept being employed would end up having way more money after the pandemic.
US dollar is really pumping.
Cost structure
that is bearish on the markets.
They didn't go to movies. They didn't leave.
This is good though. This is what I wanted.
Didn't travel.
ZQ though, ZQ's not playing along with me.
And that $2.5 trillion.
I might even just double down on this, perhaps. It just feels too risky.
And that's been keeping the economy performing better than people expected. They've spent about half of it. Whether they spend the rest of it, whether they save it, but that's an extra stimulus, if you will, that's kept the U.S. economy moving ahead pretty well. The Fed, of course, is trying to do something with inflation, and they have to, assuming they really want to get it all the way down to 2%. So they've been very aggressive, moving, and the question is, how much effect does that have? We're starting to see the economy slow down a little, and particularly in interest-sensitive areas. One would think it would have had more impact, but it hasn't yet. And the reason...
All right, we're coming down. Dollar keeps going up. We're near the highs of the day. Microsoft wants to go down too.
Areas like housing, where new house construction is down 19%. Usually in a recession, it goes down.
I might close my short shares here on Microsoft.
So
I don't think I need this position.
Away from the bottom.
I probably don't need it.
It's affected Wall Street and markets because when you raise interest rates very high from a percentage of where you started, it'll have adverse incomes. And there are other parts of the economy that frankly are still extremely strong, that raising interest rates hasn't affected yet. Stuff like travel. Airlines just can't even cope with the volumes. Resort hotels. People after the pandemic were so grateful that nothing worse happened to them, that they just want to celebrate and live life.
All right, the view from the ground in Davos. Back here in the U.S. as we get ready to reset for the final hour of trading, stocks right around the lows of the day. The big
lows of the day.
Of course, in the debt markets, Treasury yields down across the board, 13%, 13 basis points on the short end of the curve. You're looking at about 16 on a 20-year right now. Economic data giving a lot of people pause, reflection. This is Bloomberg.
So yeah, something about the treasury yields being bearish. Let me see if I can find more information about that. Take a look at Twitter. I missed that. Hood down 80%, IBKR up 33%. After ER on a day like today. IBKR, nice, yeah. I use IBKR, I like it. They have a good system. Crypto Giant, okay, I read that before. Read about economic conditions in reserve bank districts. Beige book. Okay. We look at this one chart. Is it updated? This is the percentage of stocks above 20-day moving average. And this here is a very big resistance line for this chart. If you look at the weekly chart, you can see that we are always reversing here in this area. So we hit this area late last week, and I've been monitoring it to see if we make a full reversal down, right? This would be a massive sell-off. For the percentage of stocks above 20-day moving average to go from 85.7 to 5%, right? That'd be a huge reversal. So I'm just monitoring this to see how it changes over time. This is the treasury yield. I don't know if this is even worth monitoring. The inversion, yield curve inversion. Whoops, wrong one. I guess I'll figure it out later. So yeah, let me just see. Okay, whatever. So dollar looks like it's going back down a bit. Dollar peaked at 93, 34.93. Microsoft is going back up. It keeps bouncing off of 236.80. Microsoft keeps doing that. Take a look. If I have a naked upside call on Microsoft, I might remove it because IV is going to expand. There is going to be earnings in Microsoft. Closed it. Yeah, I took the profits on that. It's true. So I don't want too much upside risk on Microsoft. That's upside risk. That is upside risk. So I have two of them. 30 days. I'll consider before earnings to close some of these. I do have a week before earnings, so it's fine. We have an hour left now. Let's take a look at the charts. Looks like we're selling off during power hour. So this is the power hour sell-off here.
More than that, as well as on the Dow Jones Industrial Average. NASDAQ still slightly outperforming. We got yields down. You see that 10-year treasury
Microsoft's coming down.
New lows below 3.4% on some weaker economic data. Russell 2000 in line with the S&P at the moment. Check out the S&P sector heat map at this hour. Pretty much everything, well, absolutely everything is red right now. Although, interestingly, consumer discretionary is not really the locus of the weakness. It's actually outperforming slightly, even though weaker retail sales was one of the reasons we are down today. But communication services and basic materials been a strong group, giving some back today. Coming up on the show, signs of optimism from Davos. Sarah Eisen brings us interviews with a pair of CEOs.
Wow, XLP was down over 2%. Crazy. Microsoft really wants to sell off here. Okay, I can maybe switch the dollar out since I don't actually have a dollar trade for once. I can switch it out to something else on the screen so that I can watch something else, and then I can enter the dollar in the future once it reaches an extreme again. Tesla is coming down. SPY. Nvidia. Netflix is at 324. I close all my Netflix positions right before earnings. I might open one after, or maybe open one just before it. Lulu. It's true that I have 2 naked Coinbase puts. Might be wise to close those. But I do have upside risk on Coinbase. That is going to be okay now. Yeah. So there's still $146 to gain out of that. But I might open another one actually. Because Coinbase is going to struggle to pass 60-65. But the amount of buying power required to get another one of these. Take a look. Yeah, so 570, it's not bad. I think because I have so many puts that it makes it cheap for me to double this one up. Yeah, Coinbase will struggle to pass this 60, 65, 70 level. But does it have earnings though? I gotta watch out. It's earnings season. 23rd. No earnings. Just double that up. Add some extra security to the upside. Alright, we got it. So we doubled that position up. So at least if Bitcoin sells off, it won't be as bad as otherwise if I didn't have that position now. So 746 theta, but negative 930 of Vega. I think because it's close to expiry and I have a few positions that have a lot of gamma risk too because of it's close to expiry. Like this one has negative 111 gamma. Bido. That is outsized gamma risk. All right, 407.1K. Nice. I am pretty much at my all-time highs. That's good. I gotta maintain this. It's hard. Being at your all-time highs always slows you down because then you rely on theta once you reach them. Unless you take directional bets, and then if you do that often, you're not going to stay there long. But I do have a few directional bets though. So I'm hoping for the price to go down, SPX to go down, then I will profit. I'm going to reach my profit targets if we have a sell-off in the markets, even a slow one. I don't want it to be too fast because I want premium decay as it's selling off so that once we reach my price targets, I can like extract maximum profit out of it. But I do want the trend to be down. I don't like the uptrend. The past few days have been horrible. Just gotta be patient and then make sure you don't have too much duration risk. Like if you need things to sell off right away, then it's probably better to just roll it out in time so that you don't have to be pressed for time. If anything, you need to benefit from that time as a premium seller and not be stressed by it. Alright, Microsoft is coming down. I'm keeping the short. I just feel like the short is good risk reward for now, at least until today's close. Gonna maybe get $5 out of it. I don't care. Just gonna keep it till close and then just remove it. And then see what happens tonight during the futures session. And then tomorrow should be eventful. Thursdays are always eventful. Take a look at the calendar, see what we have for that day. So today, anything overseas today? So let's see. Okay, we got the bond auctions in. Oh shit, the prices went down by a lot, eh? Okay, that's the Canadian one. Crazy. American one, 3.67 on the 20-year. 4.61% on the 18-17 week. That's crazy. Okay, we have a Harker speech too, but that already started, so I don't know what happened to that. And then Logan's speech at 2 p.m. And then we have some Japanese stuff tonight. So it's all Japanese stuff. And then Thursday, so building permits, manufacturing index. So this might be big actually, because the last time we were pretty negative. So we'll see. And then jobless claims. This is a really big one. So tomorrow might be a bigger day than today actually. We might get a huge swing up or down tomorrow. So you gotta position yourself for this. I gotta position myself to be able to withstand a whiplash. And I think I'm fine. I'll be up early for it since I know that it's gonna be potentially a market mover. And then at least I don't have US dollars. That's a big factor. I can easily lose $500 in the wrong directional trade with the US dollars. Philly Fed, business conditions, a lot of stuff tomorrow. Tomorrow's huge. Collins speech at 6. Yeah, so tomorrow's big. And then I think Friday we also have something. Harker speech, Walter speech. No, nothing big on Friday. We don't have the job one. Forgot what it's called. NFP, non-farm payrolls. It's going to be the Friday after, I think. It's going to be the Friday before FOMC. So that's going to be another big day, like a really big day.
Compete with equities, or is this sort of they're going to live together?
Right,
sort of
I'm going to
in the
BRB.
same household?
Well, I mean, it's always a bit of a house divided with fixed income and equities. I think that right now, what people are looking at is the ability to generate fairly strong returns in corporate credit portfolios without feeling like they're really taking that outsized risk in equities. I think there's still a big perception that perhaps equity earnings expectations need to come down a bit, given all the moving pieces in the economy. But that re-racket of expectations may not have an impact of a similar magnitude on corporate credit fundamentals. So if you can get 8% in high yield, if you can get 5% in investment grade, that feels pretty good, especially if there's the potential for some incremental upside just from what the Treasury market is doing as well.
When you look at what we're going to get this earnings season, what kind of themes will you be picking up on to give you some sense of which sectors offer better prospects than others?
So I think what we're looking at is the labor component. That's been a major headwind for a lot of companies across many different sectors. Clearly, that's cooling off on the tech side of things. It'll be interesting to see what happens on the retail side of things, healthcare, transportation. There's just been so many headwinds in terms of getting workers, having them stay, not having to pay up and up and up. Also, just in general, ability to kind of manage costs. What do supply chains ultimately look like now that we are on this kind of backside of the pandemic? Are we, back to China? Are we re-onshoring? What exactly is the plan for logistics more broadly? And then what's the outlook for kind of consumer demand? There's a lot of shifting pieces there, away from goods into services. How sticky is that services demand? How long is it going to last? All those have major implications for both the micro and the macro.
And then we go back to this idea of the health of the credit market overall, the idea that I think, I don't know, it just seemed like a few months ago everyone was calling, basically for the worst case scenario. And it seems we might have averted that from just the basic economic fundamentals. There's still some concern here about living in a higher rate world, which at least if you believe the Fed, we're going to be here for a while at 4 or 5% or whatever it ends up being here. So what does that mean for the companies that were already kind of at distressed levels? Are we going to see more bankruptcies, more defaults?
We are expecting more defaults, and that's just math. We're coming off of a very low default number. It's hard to stay at that level, especially when there's been so much policy tightening. But we're not expecting a 2008 type default scenario, more a return to kind of historic norms, somewhere in the 3% area. And a lot of that is very well previewed as of now. Investors have been very cautious about extending liquidity to companies that don't have a good long-term plan. And we've seen major repricing and revaluation kind of indicating that perhaps a default is going to come.
We're getting a crazy bounce here. What's going on?
Gradually and then suddenly, what might that look like?
So we are expecting it to be more gradual and kind of a rolling wave of defaults really over the next 24 to 36 months, especially as the Fed may have to stay in restrictive territory for longer than what the market is currently pricing in, because it's just going to take time for a lot of these companies to actually run into the liquidity headwinds and challenges that result in an actual bankruptcy event.
All right, Winnie, always great to get insights out of you. Winnie Cesar there, she's the global head of strategy over at Credit Sites. Coming up here, we are going to continue to count you down to the closing bell, a focus here on credit, fixed income, as well as equities. Mira Pan.
All right, we keep bouncing back up to this area, eh? Interesting. So we're still below this Fibonacci though, which is bearish. And overall, this is good. Honestly, I want things to move slowly and slowly downwards, right? Downwards and slowly. That's ideal for me because then I benefit from both ends. I don't want a sudden knee-jerk reaction back up. That I don't want, because I opened a few strangles that are short delta, and I would rather things to move slowly in either direction. I'm fine. But I need more time decay. I have too many new positions, and I have not benefited from time decay yet. That's why they're all looking red. But I think after OPEX and after the end of the week, the beginning of the third week of January, is it? Fourth week, damn. That's almost the end of the month. So we're gonna get a lot of premium decay here. That's what I'm guessing, this area. OPEX is usually pretty volatile, so the premiums are elevated. There's earnings here. And then we're going to get some decay around here. And it should be good. I'm not going to hit my 2% target. I don't think so. But that's a very lofty target to have. I'd rather have it challenging because 1% is relatively easy. I can just open, a few SPY triangles and then manage it and then get 1%. It's not that it's super easy. It's that it's not that challenging. 2% is way more challenging. And 1% isn't enough for me. I gotta pay my bills too. And then maybe if I can save up enough, I'll pay myself a little trip too and go for a little vacation. But I'm gonna need better trades. Okay, let's see. Harker, appropriate to hike rates a few more times.
Points is appropriate. Going forward, says the days of 75 basis point hikes are done. He expects to hold the policy rate there at some point during the year while the Fed continues to shrink its balance sheet. The goal, he said, of the Federal Reserve is to slow the economy modestly, bringing demand back in line with supply. He's seeing unmistakable signs of a slowdown in interest rates.
ZQ's a big loser, right? Crazy.
The economy, he says, remains relatively
kind of a mistake opening it, but I just got to be patient. It's going to be a good play.
A lot like other Fed officials, he is not forecasting a recession.
I can hold this for a long time. This expires in Jan 2024. I don't need to roll this. I can hold this for a full year.
He says although inflation is biting, he sees Americans continuing to spend. starting to see inflation come down and supply chains healing, a fact that was noted in the base book we just talked about. Sees inflation at 3.5% this year, going to get down to 2%, but it's going to take to 2025 to get to the Fed's goal. The labor market remains in excellent shape, Harker says, and he's concerned about commercial real estate, specifically office space. One note in here, Mike, he says that it's an underrated advantage of the Fed that they're fighting inflation with the labor market in such a healthy state. So that's the way the Fed looks at things right here.
All right, it's hard to deny. Pretty consistent message there, it seems, from what we've been hearing. Thank you, Steve. The consumer in focus today as November and December retail sales both missed estimates. Sarah Eisen sat down at the World Economic Forum in Davos today with PepsiCo CEO Ramon Laguarta, and she started by asking him for his read on the global consumer.
It's interesting.
All right, we're coming down. Look at Microsoft just selling off.
That's one micro debate. That's what I'm seeing here in Davos. So,
crazy bearishness. I want to listen to Tim Knight here.
This descent, it'll get a lot.
Take a look at Tim.
Without some
He's good at charts.
Steady drumbeat of bad news, but hey, I'll take it. You know, so we've unwound.
Microsoft is selling off. I want to get ready to cover the short.
Friday, which is a nasty update. So huzzah. Also out there in Cubeland, we're down, and the cool thing is, this surprised me how long it's been, unless something very dramatic happens, which I doubt, this will be our first bearish engulfing pattern in almost 4 months.
Wow, that's a long time.
I know, but it's literally been since September, mid-September, that we had a bearish engulfing pattern on the cubes. So, again, huzzah. Glad to see it.
Huzzah.
Glad to see it finally. You know, after the PPI came out this morning, everything shot higher for reasons that aren't relevant or germane, or known by me at least. The market just went to a dive about half an hour into the trading day, which was very welcome. XLU down hard, over 2%.
We're going down to the lows of the day.
Looks deliciously bearish still, and I've said almost on a daily basis, this is my favorite, in fact the only, of the Dow world that I like on the short side. And today's
really,
definitely
XLU.
Right thing.
Let's take a look.
Good drop on the XLU.
I never play these sectors, but maybe I can do strangles on them since they don't move too much.
Came out and the stock rocketed higher. Now it's down almost 5%.
Which
so
one?
It shows you how long that lasted.
United Airlines.
But down we go, and it's getting close to closing this gap.
What if we do a very lopsided triangle?
Resistance now support, but it is heartening to see that those gains have been erased and replaced with my favorite color, red. So we'll see what transpires afterward. You know, even though earnings are heating up, it's still kind of a boring week. Tomorrow is Netflix, which is kind of the highlight.
Something like this.
It's just a waterfall next week.
Just show the XLU with a strangle. 7 delta versus 19 delta versus 39 delta. See if we can get mid price.
Moment of spare.
I never play these sectors, but a strangle on XLU just seems very safe.
Probably this morning, banks being what they are, from PNC Financial Services, PNC, down about 5.5%.
Right. So we got an XLU strangle.
Long term looking.
So I've opened like 4 or 5 strangles today. I gotta be very careful about managing them.
And I don't have a position in this for a couple of reasons. One, the options aren't great, and two, prior instances of tops haven't really produced much except
FNC Financial,
which was, you know, kind of an extraordinary event.
Microsoft is selling off.
Seem to really do too much of anything, so I'm not bothering with this one. But it is nice to see another down there. Last night, the big event late in the evening.
So many new positions.
And their central bank. Of course,
a lot of them expire in March too.
The Japanese central bank makes our Fed
so I'm expanding my expiry dates
because they've gone absolutely haywire. I think their debt is like 250% of GDP. I read that they're literally going to run out of bonds to buy because the government itself is the principal purchaser of their own financial instruments. It's very meta, and they won't be able to buy enough to keep artificially suppressing rates. So anyway, they came out with a big nothing burger but everyone got very excited. Equities just went rocketing higher after that, and the yen got pummeled. You can see here that a lot of drama, but a lot of smoke, but not
The
much
Lulu
fire.
positions are pretty
The
balanced.
USD
142,
is up
163.
about 0.5%. It was up a lot more last night.
But this has more
So we'll see
delta
how it
than
all
this
shakes
one.
out, but later on, I'll show you the dollar index because that's pretty important to the bearish argument. I think the dollar kind of has to get stronger for that to really pay off.
This one isn't looking so
DFA
much so good right
down
now.
just a
I
little.
can always close this
It
and
got
reduce
quite
this
close
risk on
to
movement.
this dashed line,
Just
which
reduce
represents
downside risk on
strong
movement.
resistance, and it didn't turn.
See if I can
it
close
turned
that near
tail,
mid.
and it's red right
Get
now,
rid of
and
that
as you can see, the
position.
ascent has been very swift. And you know how these things go. Easy come, easy go. If things go down real fast and furious, they can go up the same way, and vice versa.
I'm giving away any profit I
So
had.
the ascent that we've seen from
Yeah,
months
that's
now,
fine. I didn't want that downside risk. I still made money off of it.
and it would not take much to just melt that sucker right down. But we got some work to do until then, as you saw.
Okay,
with the spider,
are we
as
bouncing?
do
What's going
beast to
on?
bust through. EWZ,
Lows of the day still.
which is Brazil. Nice little
How
gap
is
close there. Almost picture perfect. Look at that. What's
how is the
gap?
currency doing?
Right there at 30.26.
Dollars near the
Today's
highs of the
high,
day. How's ZQ doing?
21, I think. So, a nickel between friends. You let that
ZQ's
go.
doing
So
horribly.
That's looking intriguing. And then the Eurozone EZU down.
That's
Obviously
probably
down
my
just a little,
bigger
more than
mistake of the day.
0.25%.
That and the Lulu
But
put, but it's fine.
It did a very good job sealing up
Just
that gap,
overall,
stopping
my plays
that
have been
resistance
good.
and starting to reverse.
We're not
So,
all gonna
as I
win
said,
every
today's
single
the
play,
first
but
day,
just close
it
this,
feels
get
like a
rid of
very
this.
long time
It's fine.
when just
I don't need
everything's
that
red,
position. It's only a few
albeit
dollars.
modestly.
But I don't need that.
FXI, China is down a little more substantially, a little more than half a percentage point. And as I mentioned, I've got a bunch of March, I think they're March 16.
FXI might be a good one.
On this, March 17, excuse me. March 17 puts on FXI.
FXI might be a good risk reversal play. Let me see here.
Alibaba.
The drop to a T on your chart's nice. The downside pays so much more these days. I know, right? Good job, man. You profited off of that?
A lot of good things going in.
It was a good call
Now,
to do it yesterday and this morning.
is very,
I considered getting a
closely
put this
correlated
morning.
to equities. I don't know who's dragging who around.
I think with
but,
China, maybe a
they
risk
are basically
reversal
1.0
play would be
positive
fun.
correlation.
Like
And
sell the
Bitcoin, Ethereum,
36
Dogecoin,
and then buy this
junk like
27.
FTX token. All these
And then
things
just
have
hope
been
for a
going up
sell-off
and
in
up and
China.
up for the past couple of weeks.
Maybe this will pay
And,
off. And if
finally,
it doesn't,
we're seeing a little weakness
I
here
won't
today.
make
Here's
I won't
Bitcoin
take a big loss on it. I'll just
down
close it
over
early.
1%. And you
Let's see
can
if we
see
can
here
get filled.
that,
Just having risk reversal.
by way of this dashed line,
Because China's
we
been too
had
strong.
back in October.
Or maybe instead
zip
open it on
higher
Baba.
into
Or
just
maybe
about,
not.
November
See
5th
what
it
happens
peaked.
here.
And then, of course,
It's not
the
opening.
FTX
Crazy.
hit.
It keeps moving.
It took just a couple of days for the
Okay, whatever.
almost the entire.
We'll have one silly risk reversal play.
And we double bottomed here.
Yesterday was such a fake and people didn't see it. It was getting trapped. I know. It was just, it's hard, The closer you get to 4,000, the harder it is as a bear to maintain your bearishness. But I'm not a big bear. I'm a small bear.
And we matched the level we saw early in November.
Like I don't go
Now
all
we're starting
in.
to see a
I
little
don't
bit of
bet
slippage there.
on puts. Rarely. I have a few
mentioned
puts, but
yesterday of this
mostly
crypto-related
short.
item that I felt was getting close to the end.
But I will benefit from a sell-off
Marathon
though.
Digital
Like I have a
Holdings,
lot
it's
of
now
gain
hard,
potential
16%.
from a few positions if we sell off.
Not a bad call, although I didn't do anything about it because it's, nominally quite low.
If we
priced,
close
but,
Friday at
I'm pretty sure I
3,700,
mentioned
that
this
would
one
be so
very
nice.
specifically yesterday with this dashed line and its turning tail. Now, also Coinbase has had a much needed relief rally. Like so, it
CRM.
bottomed out down
This
here
is an upside position,
in just
upside
about
risk.
$30, almost doubled.
Let me look at CRM's
in
chart.
just a few days' time, and now is starting to slip
Coinbase.
again. So I would suppose that 2023 will bring new lifetime lows to the likes of Coinbase, but we'll see. We'll see. What else is cooking? Commodities. Here's USO, finally down 2%. Nice to see it.
Truth.
We've got a trend line here, which we tagged
USO.
today.
Okay, I have an XOP position.
It really doesn't matter until we can bust below the 61.81 on USO.
I like listening to this guy and watching his charts because oftentimes he shows me things that I've never seen, and I'm like, wow, that does look bearish.
It'll go up every now and then, like, oh, the bottom's in, and then it'll just
He's the
plunge
king of
again.
bears,
So,
I swear. He
yet
has all the
another,
bearish charts.
low
Waiting for Coinbase
on
to have a
UNG,
relapse case on the
down hard
FTC.
about
You think so?
8%.
You think it's going to sell off? I have some downside risk, but I do see the potential selling off
wanted to show you
in
GC,
Coinbase.
but I forgot to include it. But here it is
But
today. Here's gold. And
I'm
take note of
holding
that red
a
trend
few
line.
risk. Yeah,
Gold has been
down
very, very strong
45,
for
down
many
13.
weeks now.
Nothing
It's
big,
around a
down
little over
31.
1900. But
Small
my
positions,
view
relatively.
continues to be that this rally is going to get at least largely.
I think it's going to
raised,
hover around
and
35,
that all
40 for a
assets will
while,
kind of move
but not 50.
simultaneously.
It's going to be lower
Oil,
than 50.
gold,
Like 45 for
equities,
sure, I think.
crypto. Just
Like buying a put
bands
for
and
$45, like 6 months out, you'll probably hit it.
silver is also
Probably.
down about 1.8%.
Coinbase will have
And
an issue
Trendline's
with
been doing
Feds.
a
You think so?
crack job of keeping prices hemmed in.
The potential is
Recent
always
strength in silver
there,
didn't
but
even
it's hard for me
manage
to see
tag
it
that
because
line.
they're
Didn't have
American.
enough,
They're
oomph for that.
controlled by the
Well,
SEC and
Tesla
whatnot.
remains important.
And they follow the American regulation better than
They announce
Binance.
earnings next
But it's
Wednesday
possible. I
after
mean,
the
you can never
close of
discount
December
that.
service, which I think is the 25th.
Tesla?
I have no position.
I have positions in
I
Tesla.
think the highest this could possibly go is, as I've said, around 160. I don't know if it's going to make that. There are plenty of folks out there who believe this thing's going to get absolutely wiped out. You know, like it's even, I wouldn't say this, but like single digit type valuations.
He's like, even I wouldn't say this.
It looks pretty grim. It looks pretty grim. And I love Tesla. I bought my first Tesla in 2012. It's got 165,000 miles on it. We're going to get another one. I wrote a crazy bullish post about Tesla in 2013 and went up thousands of percent after that. You know, I'm not a perma bear. Sometimes I write bullish stuff too. My family definitely has a vested interest in Tesla doing well, but it may not happen. As the resident chartist here, I'm not so sure. This looks very, very vulnerable. Yeah, I'm running out of time. How about that? That only happens on any day that ends with a Y. Here's some of my better short positions going on now. American Express, 5.9. I just plucked these out of my portfolio. These are some of the better performers. JD.com.
We're selling off here. You like this guy? Yeah, he's good. He's been doing charting for so long.
But,
He actually designed the charting software for Tastyworks. And he has a good kind of way of showing his charts. So I watch his show every day.
I continue to state that
Sometimes I watch it twice
junky stocks that have
just to look at his charts and look at his bearish thesis. Because he helps you. If you're too bullish on stuff, sometimes you don't see these charts. You don't see the way he sees it, right? And it's good, even if you're bullish, to just watch somebody show you why the chart's going to fall off a cliff and then explain to you how it works historically and whatnot.
Electromechanic vehicles, Solo being the symbol, and of course WeWork. So just kind of driving home that general point.
SPX is coming down.
Alcoa is the biggie.
We're at the lows, close to the lows.
Position on that. And I'll just close by saying, keep an eye on that dollar index.
Yeah,
I think
dollar
if we get a
index.
good strong rally in this, it'll be good for the equity bears if anybody is still surviving out there besides me. So, okay, my friends, that is it for now.
I took a small hit on my account, but it's fine.
I will see you
I think I'm in a good position. I'm at my all-time highs. And a few weeks ago, I was at 402. Now I'm at 407. And I just need a small jump to make it to 410. 410 would be a nice round number. And then at the end of the month, I gotta take some cash out to pay my bills. It's gonna bring me back down a bit. That's the annoying part, when you're gonna take cash out every month.
years. Interesting. Winnebago and Thor and a couple of the other companies.
We're coming down here.
Right now.
39.39.
Exactly
What am I losing money on though? Why is my
there was a pretty big
account?
in these
Why
shares.
did my account go down by 100
Moderna,
here?
one of the bright spots here on the day.
Take
and
a
then keep
look
an eye on
here.
Chegg. This is, of course, the online education company.
Spy,
Down 16% right now. Interesting downgrade
ZQ is
over
a
at
bit of
Edom,
a
saying it has a
headache.
lot of concerns about the company's growth story and about the potential
Wait a second, what is this?
competition from ChatGPT. The idea that
this
big
one.
AI
This one is
initiative
bad.
might actually then sort of push people off of a platform like Chegg and maybe on to
That's a
something
big
like
position to
ChatGPT.
have.
Of course, a business that Microsoft has taken a keen
It's
interest
fine.
in. We heard from Satya
And
Nadella
then
a
what
little
else?
bit earlier here about that investment in OpenAI, and we, of course, we also heard from him
QQQ
over at
is
Davos
looking
talking about the
better.
ability and the need for Microsoft sort of downsize a little bit, to
MicroStrategy
sort of tighten the belt a little bit. And he actually
looking
said AI could
better.
actually help sort of, I guess, push that forward. The idea that they could become more
Coinbase.
productive and
Losing
maybe
on
that means they
Coinbase.
can do with less. You see that reflected already here in the latest data that we've been getting
Coinbase,
here.
losing
When
on
it comes to
Coinbase. It's
layoffs
fine.
here,
It's,
you can see
it
the big
balances
spike up
out.
that we had in November, coming down a little bit in
Caterpillar
December.
put.
A big
I
question
might
now,
lose on
Scarlett,
this
as to
actually.
whether some of the announcements we gotten out of Microsoft, Amazon, and a few
This
other
one's
tech
looking
companies,
way better.
whether that
I
then
was
has a
losing money
material
on
feed
this
through
yesterday.
into the actual official jobs data.
All right, and of
SMH.
course, you mentioned Satya Nadella and some of his comments. Let's listen to what he said when we
Maybe
caught up
we
with
sell
him at
more
Davos before the company
upside
actually announced its job cuts.
risk on stuff.
During
This
the
short
pandemic,
strangle's
there was
looking way
rapid
better.
acceleration. I think we are going to go through a phase today where there is going to be some amount of normalization of that
That's the
demand.
Microsoft guy?
Quite frankly, we in the tech industry will also have to get efficient, right? It's not about
Industry?
everyone else doing more with less.
Tech
We will have to do more with
industry.
less. So we will have to show
Funny.
our own productivity gains.
Working
with
at
our own
Silicon
sort of
Valley and having a hard time saying industry.
All right, so for more on Microsoft and big tech and
There we
how
go.
they're perhaps right-sizing is Anurag Rana. He is senior technology analyst for Bloomberg Intelligence. And Anurag, we know when we talk about the banks, they hired a lot of people during the pandemic and didn't really let anyone go. So now they're
Upstart.
shedding some of the weight from
This
during
one's
the
looking
pandemic.
good
Is that
actually.
the
This
same
is
thing
my
that's happening with
this
big
is
tech
the new
companies?
Aaron Condor.
Yeah, pretty much the
This
same
one's up
thing,
$100
in
bucks.
a boom that you hire more, and then when things slow down, you
So I'm
need to
keeping
lay off
this
some
because
people.
this is going to be a
So
nice
look at
amount of
Microsoft's
gain
number
if
over
we
the last 5
get to
years, the revenue has
3,700.
doubled, and the headcount has gone up 1.8 times. So that's the little productivity benefit that he's talking about. But apparently, it seems
The
they
bear
want
put's
that
also looking
productivity jump
good.
to
This
be
one's
a
up
little bit higher.
150.
But I'm fairly
This has a
confident
max
over the next
gain of
2 to 3 years,
2,500.
They will hire a lot more people than they are getting rid of this time, because there is a linear relationship between sales
I
growth
think these
and
positions
employee
make up
growth.
for the
You just
losses
cannot
I'll
do it
incur
one
in
without the
Microsoft.
other. And even if we
Microsoft
are
does have
looking at tech
earnings.
spending slowing down right now,
So maybe
I feel
close
confident given
the
what we saw
225
with,
put on
Southwest,
Microsoft
the
for
FFA,
$56 loss.
that tech spending has to
Or
pick
just
up.
keep it.
Whenever we see the Fed slowing down with their hikes, tech spending will come back.
I'm back to
What do you make of his
47.1,
comments,
so that's good.
Specifically about
That
productivity,
is
I think
good.
I thought he had an interesting comment. He basically said that every employer thinks their employees aren't working hard enough. and
Silver
every
Gate
employee
is
thinks that they're
down,
being
but it's going to
worked to
expire
the bone too
worthless.
much here.
This is
And
going
he
to be
talked about this
basically
idea
an
how maybe
extra
technology can sort of,
$300,
I guess, address that gap in
$400
some way.
So if you look at it over
expiry
the last
by
3
Monday.
years, it has been a real
Friday
boom for
expiry.
every technology worker out there, because they have been hired in such tough times when nobody out there can find.
I feel like opening more, but I think the best thing I can do right now is
what you're
just
saying
let
is just a little bit of
time
rationalization
do its
across
thing and
all
wait till
companies, whether
tomorrow.
it's AWS,
We
whether
got a lot
it's
of data
Salesforce,
tomorrow.
whether it's
We got a lot of potential volatility tomorrow. So we're going to have to wait here and see. Tesla, SPX. Oh, why am I looking at SPX here? UNG's down a lot. IV's still pretty high in UNG. 65 IVR. EWZ is, yeah, 29.50. Whitehaven, yeah, people are bullish on this. Square. NVIDIA. Lulu 317. Yeah, kind of in a tricky position with some of my plays here. Like the Lulu play is just bizarre. This one especially is bizarre. I just need a few days for the theta to decay on this, and then it balances out to okay. But if we sell off to sub 310 before the theta decays, then the pricing is like locked in, and then it's really hard to maneuver out of that profitably. At least I have some like upside risk that's gonna help. Yeah, here. There's one here, one there. You took a nap? Another low? Yeah, man. Good time for a nap. We were just like bouncing around, but now we made it down. Yesterday I was so tired after market closed. I went on my couch, I lied down, and I literally just took a 2-hour nap. Instantly. I'm gonna probably do the same thing today. 1 o'clock to 3 o'clock here my time is the best time to just relax, because futures are closed, markets are closed, and it's the best time to take a nap. But even until like 4 or 5 o'clock, 5 o'clock China opens, and then things get a little bit heated. Around 5 o'clock, 5, 6 o'clock. I think 5 is Japan, and then 6, 6:30, 7 is China or something. But Japan usually has an effect on the futures. I like to watch. Yeah, we're down to a new low. Look at this. We're below CPI lows. We're ending the day below CPI lows. This could actually lead to a flush. This could lead to people just closing their positions in panic because of how low we've gotten. Actually, this looks very bearish. The way it's dropping now, it looks very bearish. But it could just bounce, right? It could bounce at any time. But this is good. I am not going to close any of my short puts because I have enough long puts to counteract any loss. So I think it's fine for me. Very well balanced. I am at my all-time highs. And I do have ways of benefiting. ZQ is a bit of a headache, but I'll just play it slow. I'm gonna hold it for a while and then see where the markets take it. I just need it at 6.2. It's at 6.6, so it's not far. I need it at like 5.8, 5.5 would be great. I just need the Fed Powell to tell people that he's serious about holding the rates high, and this should go back down. How's my SPX position? This one here could be a big winner, and actually theta became positive because I'm getting closer and closer to the strike price, and the theta started as negative and now it became positive. So yeah, this one's good. The bear put that I opened a while ago is good, but this expires in 2 days. I should just close this. No, actually no, this I should keep open because I'm so close. The other bear put expires in a long time, so this one is safe. Expires in 30 days. Back to 407.1, that's good. Let's look at the charts. Charts are dumping, wow. This is good. I should have faded the rally harder. I did fade it in a lot of ways, but in a lot of other ways, I went with the rally. I opened a few put positions just to like reduce the pain in case we kept rallying. But I reacted quickly. I closed a lot of them, but then I opened a new one that's pretty bad on Lulu. These balance each other out, I swear. I feel like, you know, maybe just roll it out. Roll it out to the following week at 300. Nah. I think I just hold, and then if I have to, I'll close them together because they should change in value at the same rate. I would basically lock in my gains more or less to where I have it now. Unless I can get enough theta decay, then it's fine. But I do have the upside one, so that helps a lot with Lulu. I just wonder when the smoke settles if I would have made money on Lulu. And I'm gonna find out once I get all the data in. I'll know for sure. But currently I'm up on my Lulu trades, so. Tesla's at 128. SPX is coming down. Yeah, look at that. We're coming down. 32, 32. Lows of the day. It's hard to know what's the next level because we haven't been there in a while. Looks like the next big level is around here. 38.30. Or we have a bit of a resistance support area here at 3900. But then after 3900, it looks like we're going straight to 3830. And yeah, that was October. That was the big lows in October. We have another Fibonacci line here at negative 61% using the CPI days data. Where's the US dollar? I feel like I should have kept my US dollar. No, it's about, I mean, it's higher. I sold it here, but that wouldn't have been the end of the world, missing out on a 0.25% or a 15th of a percent. Yeah, 0.15%. So, yeah, I'm just gonna hold, wait and see. Don't think there's anything I need to open. I do stand to benefit from a sell-off on all my strangles. Most of my strangles are short delta strangles, so I'll be able to close them for a profit if we sell off. Yeah, these are all short deltas. So many of my positions are short delta, it's crazy. I'm pretty bearish. Overall, almost all of my positions have a downside bias. Most of them. Alright, so I'm going to end the day nicely here at my all-time highs with the markets down. I can always consider closing some of my positions that are time sensitive. Like I can close this Iron Condor for $100. But if I keep it, this could be a big winner actually. And then we slowly go down, this could be a decent winner. So probably best to keep it and hope we don't rally. Or if we do, it's temporary. But tomorrow's a big day. Tomorrow we have PPI. No, jobless claims. Yeah, jobless claims and another economic indicator. So we got two big things tomorrow. Microsoft is pumping here. Do we take a US dollar short here? Just in case we rally, we have a USD short. Pretty much at a high level here in the USD. It seems almost like it's likely to come down from here, but at the same time, I don't want to be positioned too early in a USD short because we can easily go up another dollar from here. Yeah, we'll wait for that. But it might be a safer bet than like long Microsoft, just short USD. I do have 28K of USD. This is actually a USD that I earned selling premium since around October. I haven't converted any USD since October. I had more before. I converted it. But I chose a time to convert it when we were like super elevated. If ever we get back to like 140, I'm just going to convert everything to USD and short the currency on top of that. All right, Microsoft's coming back down. Yeah, it's a very anemic bounce. It's a dead cat bounce. Looks like we're pretty good here. Today is a good day. Ending the day at the all-time highs. I can't complain. I just hope I'm positioned well for tomorrow's data. I'm gonna be up early tomorrow, just like today, for the data. We've got 13 more minutes here until market closes. So if there's anything that's too risky, you need to adjust it now, because tomorrow morning we have data and things can get out of hand fast. So this Coinbase risk, I don't like so much. These two short 35 calls, puts. Maybe I should just short 25 shares of Coinbase just to earn premium if we sell off. This is 20 delta. Just short 25 shares, because I have a feeling with Coinbase, there is a very high likelihood that it doesn't stay up here. Or maybe what I can do is just buy a really near dated option, like next week. Buy the 50 put. It's a lot of premium though. That's $300 of premium that if it doesn't hit, that I just waste. Actually, the premium is so expensive in this stock. Maybe a spread. 24 cents for a 50-cent spread. That's still expensive. But hey, it's 50 bucks. No? I think Coinbase is okay. I'm gonna have that downside risk, but I have upside risk. I have a good balanced portfolio, I think. But shorting 25 shares just seems good. Seems like Coinbase is a bit too elevated, and we're gonna short at the lows. The greediest type of play. I basically shorted at the low of the day, or a penny above that. So that's 25 shares of coin short just to counteract my deltas, and it should be fine because I have a lot of downside risk on Coinbase, and 25 shares are not gonna make or break anything, but it's good to have. So if we sell off, I can at least take like 50 bucks from there to balance it out, so it's fine. But 11 minutes, let's see what happens at the 10-minute rig. $407.2, closing at the very high highs. Yeah, so far so good. It's not crazy good. It's only 0.77% for the month, but it's okay. I think it's fine. It could have been better. There's a few plays that were questionable, but the month is not over, and I still have a lot of premium that's left on the table to collect. So it should be a good month. Just need to make sure that I'm positioned well, that I don't panic out when I don't need to, and to panic out when I do need to, out of positions. This one is a bit of a tough one now, but it is far out of the money, but it carries a lot of risk, I realize. Downside risk. It is 44 days out though, very far out. But quite a bit of downside risk, especially if the earnings is bad. Almost feel like closing this since I already carry so much risk with that one. But this one's only 9 days out. I'm more likely to be able to close this early. $25 of theta per day. 9 minutes left. Let's take a look at the charts and see what's happening. Oh, wrong chart. All right, we got a tiny bounce here at 39.30. Let's see about that position that closes. This closes in 2 days, but I'll keep it just because, just to have something in case we sell off. In case we sell off and then some of my positions become hard to defend, at least this will be a nice like $500 to help me out. So yeah, pretty close to at the money, and there's still 2 days. There's entire day tomorrow and Friday. Definitely the kind of position that's good to have opened early and to be able to benefit from it if lucky. US dollar is pretty elevated. Equities in second day of sell-off.
Old, new, old, normal. When we think about last year, that was very much an anomaly in which the 60-40 portfolio had its worst performance since 2008, and we hadn't had a year since 1974 when both stocks and bonds were down.
JP Morgan.
When we think about going forward, diversification doesn't work every time, but it does work over time. And if you look at 1975, if you look at 2009, still challenging economic years, but years in which you saw a 28% and an 18% return on that 60-40. So we still feel confident that diversification can make a real comeback in this new environment.
Okay, so it's not dead yet, despite the many calls for its obituary last year. I want to ask about diversification when it comes to geographically, because there's been a lot of money pouring into Europe, into the emerging markets of late, especially in the last 3 months, as Europe and China, for instance, is seen as having better prospects. How far into that run, that rotation, how are we at the moment?
We still are likely in the early days. I think there are a lot of green shoots ahead of us in terms of international investing. One of them being the dollar. The dollar has come down off of its October highs. It's still high overall, but if we do eventually get that Fed pause, we're likely to see the dollar retreat a little bit further, and that will be positive for international stocks overall.
When does this expire?
About
2
international
days?
valuations,
Yeah.
about 2 standard deviations cheap relative to U.S. stocks, so that valuation argument is there. Some of the sector composition in areas like Europe, the UK, you have more cyclical sectors, more defensive. You have a good income opportunities. And
Yeah,
if you
everything
think about
looks
China,
good.
still
Nice
a
and
lot of
balanced.
opportunity for
Nice and
growth,
balanced.
and we are just about to experience a really heavy recovery. The reopening trade that we had in late 2020 and 2021 in the US is about to take place in both the Chinese markets and the Chinese economy. So a lot of green shoots in many
I
areas
opened the
outside of
bearish
the US.
FXI play though, so hopefully not. Hopefully she's wrong.
Strategist at JP Morgan Asset Management. Back to that conversation in just 1 second. We want to jump over to the board. Katie Greifeld standing by with our stock of the hour. Katie.
I want to talk about Moderna because we got some good phase 3 results for its RSV vaccine yesterday. Among less severe cases of RSV, the efficacy rate was about 84% ahead of its rivals. You can see shareholders welcoming that news, though gains have faded. Moderna shares were up closer to 9% earlier in the session, still going to close above 3%.
Moderna is so scary to short.
Bonds. I'm looking at TLT versus
One of the
SPY
scariest.
here. So long-dated treasuries versus the S&P 500. If this holds, January will be the 3rd straight month of outperformance for TLT over SPY, and that you haven't seen a stretch like that since about 2020. And Mira, in this new old normal that you describe, is that the asset class that you want to be in, bonds over stocks?
Certainly bonds are making a comeback when we think about the opportunity for income, when we think about the opportunity for downside protection, particularly if we do go into a recessionary environment. That's one in which yields can come down quite a bit further, despite the fact that they've come down quite a bit over the last couple of days. And it is an environment in which bonds are cheap again, so you're actually able to find a number of different opportunities.
Doing a bit
I wouldn't
better on
necessarily say
ZQ.
we're headed towards a new paradigm where we overweight bonds to stocks, because in the long run, we still
Microsoft's
grow
coming
our
down.
portfolios. We do not want to have shortfall risk over the long run, but
I have a bit
certainly
too much
the
Microsoft
attractiveness
risk,
of bonds
but it's fine. It's
going into
pretty
the rest
far out
of
of the money.
2023 has surged.
And just
But,
the competition though, too, as well. I
it's a
mean,
bit
think
risky.
about just the yield that a lot of people
If I look at the weekly chart, it was at 225 recently. It was at 219.
Which you would, at least on historical levels, get in the equity.
That's pretty scary
Sure,
to
and
have.
equity markets are likely to continue to have some degree of volatility this year, so we want to be able to protect. So it's not just that income, it's the income plus protection.
Bear SPY tomorrow. I am definitely bear SPY tomorrow, 100%. But I'm a little bit worried about my Microsoft positioning. I went a little bit too aggressive on this put ratio spread. So 3 contracts is a bit much. Maybe just prune one of them off. Maybe that's what I do. Just hold on. But Microsoft is cutting off employees, right? So maybe that's a reason. Just hold it for an extra day. And then if I panic, I panic. But I don't need to panic now. Maybe sell 25 shares.
Because I still think you have to be selective. There are sectors that need exploration, like the
Sell 25 shares maybe. But I should have just kept. I had a short. I closed it too early, and now we're selling off hard. I closed it like up here. Damn it! I should have kept it. But SPX selling off is also good for me, so I have to like balance out the fact that it's good and bad at the same time.
In a possible recessionary environment, even though consensus right now is mild recession, the outcomes are so wide. We don't know the lagged effect of higher interest rates, etc. So I'm looking. I have been adding to names like Walmart, because Walmart is a classic defensive play. I mean, it has done well in throughout many recessions and weak economies, and the company is even stronger today. They have a superb management. They are the largest company.
It's selling off so hard. It's pretty much squeezing me to the downside. I don't want to have this much risk on one stock. Maybe what I do is just take off the short put and then keep the ratio spread since it's more defensive. I don't want to get squeezed. This is only $66 loss. But if I wait and Microsoft goes down another $5, this will be like $200 loss. Especially with earnings coming up. I think I just close this and I just keep everything else. At least this one is going to reduce some of the gamma. I have 1 minute actually. I just realized I have like literally 1 minute. Okay, we got it filled. That's fine. I don't have to worry about that anymore. Less worry on Microsoft, and then I can just cheer the bears on and then hope we sell off hard. But 407.3, that's a new record. We're closing at my all-time high. That's good. And then hopefully we get a few more good days this week. And then we take the SPY to Beartown. That's what I want. Beartown, USA. But everything looks good. Looks pretty balanced. I can always close some of my other winners, but it's fine. They're small winners. This one's up 120 now. This one's pretty good. All right, time's up. All right, today was a nice day. I closed at 407.3, new record. Feels good. But tomorrow's going to be another busy day. So thank you to everyone who spent time watching and trading. And then hopefully we get another good day tomorrow. Hopefully it gets really bearish tomorrow. All right, peace guys. Have a good one.